And, I think, again, I know the statistics don't show it, but I think the job market has weakened a lot. One of the big drivers of inflation for the past 8 months has been auto insurance, up 23%. I'm not sure monetary policy really gets auto insurance rates down. It just has to play out. And, housing is starting to really come out the other side so we can get lower inflation.
Is it still get a soft landing, or is it getting harder?
I think the economy's actually stabilizing, and then if we get lower interest rates, it actually really stabilizes the economy.
We teased Bitcoin because I have no idea. I don't know what it's trading on. I don't know what you think it's trading on now. The ETFs, obviously, that was something. Usually it likes the Fed, so you just said some positive things about that maybe for more printing. But I said, and I was just throwing out a number. We're at 50. I said, what you said it might be strong for the remainder of the year.
Yeah.
I said 75. What did you say to me?
I think it's, could be as high as 150,000 this year.
So double what I thought was.
Yeah.
150,000, so we're tripling at this point.
Yeah, because you've got demand improving with the ETF, and you have the supply shrinking with the halvening. And if monetary policy eases, which we expect, that's supportive of risk assets. And Bitcoin's holding up. I mean, that's another reason why I don't think a drawdown's going to start that soon. I mean, Bitcoin's been rallying the last couple weeks.
Wow. So take that to the bank.
Those are big numbers. I don't know anymore.
And are you in, let me just go back. Are you in the camp of this is like a $500,000 valued
Over the next
over 5 years? Are you?
Yeah, it is sound money, and I think it's proving to be useful. And
Proving to be useful how?
Well,
and it's very useful if you're an investor right now.
Yes, it's been a great store value. It's been a good risk asset. It's also incredibly secure. There hasn't been a single fraudulent entry on the blockchain since inception. I don't think any bank can say that's true of their P&L and accounting. 6% of banking transactions are suspicious, 0% on the Bitcoin.
What did Gensler say the other day? That he trusts the Oracle database more than the blockchain
Well, the thing that
distributed ledger. Does that? But that was bizarre, wasn't it?
Well, I mean, the blockchain is just one big piece of software, but I would trust the proof of work concept that you now, instead of having 5 people manage an Oracle database, you have a consensus mechanism, and that's
Right,
what's
exactly.
But Tom, here's the flip side of that, and you've heard from the Jamie Dimons of the world, maybe even Elizabeth Warrens and others who say, despite what you said about sort of how good the blockchain is to be able to find where things are, it is the medium of choice for ransomware. I mean, just you go through the list of sort of terrible illegal behavior. People in that world seem to love Bitcoin. What does that say about this?
Well, pirates were the first people that liked gold, so we knew gold was a good store of value. But I think equally important, the dollar is used in more illicit activities.
99.
I know we talked about that. Obviously,
99.9.
And Joe's made that point before, but you don't. So you ascribe nothing to the idea that Bitcoin is a beloved currency for those who are trying to do nefarious things.
Well, here's a way to think of it. Criminals don't trust anybody, but they trust Bitcoin. And so if you want to say what is a trusted asset, it's really what would be the least trustworthy code.
This is like saying you follow the technology that starts with PORN, right?
No, I think
because that's.
I think it's like
right. I remember like videotapes and this.
It's like blaming the object for itself for the nefarious behavior when it's the humans that are using that. I mean, can you imagine the world of pain management without strong pain medicine? Look what happens when you abuse the pain medicine. But can you imagine it with it's and I've even used you take a car or a truck.
No, of course, but some
and you
have
use
more
that.
utility. No, but this is the difference, and I will take Gary Gensler's side on this particular description of the situation.
Yeah.
A car has immense value to society, economic value to society. There's a utility case.
But why does it resonate with you?
You could argue that a strong Tylenol actually has a
but in the history of the world,
utility.
in the history of the world,
right?
if 99% of the nefarious activities were using dollars, why don't you have the same negative viewpoint towards a dollar?
Because it has a
Bitcoin?
great utility, in the same way the car has a great utility.
Well, you don't know, because you don't appreciate the utility of Bitcoin doesn't mean that other people don't appreciate it.
The only people right now that appreciate
No, that's not true. That's not true. I don't appreciate it because I'm using it for ransomware. I appreciate it because it's a store of value. I don't
consider it
appreciate
a store of value, or
It's a store of value, not
investment that
speculative.
goes up. If it was
No.
a store of value, it would stay one price.
No. Like gold was $300 not too long ago. It's now $2,000. It doesn't stay at the same price. It goes up as you print more money.
It's more of a speculative investment.
No, I don't think that's. I don't think that's like Michael
Look, I'm not
Saylor
saying
or another.
it's turned out to be a great investment for those who are investing in it. I'm not saying it's a bad investment. I'm just saying long term, if we're all sitting around this table,
Tom,
10 or
you're
20
here.
years from now,
Explain how it's sound money. It's sound money.
I understand.
I don't.
It's not that I
you
don't
sure?
understand conceptually what's going on.
Why do you
here.
say that it has no use then, other than nefarious uses?
No. I think the use case is as a speculative tool, as a way potentially even to hedge against other things if you think that it's correlated or non-correlated to other things. That is the use case. That's the utility. As an investment, that is.
Our contributions to the world are significant. And you don't know where you're going unless you can look back and see where you come from. And so celebrating Black History Month allows everybody to understand, celebrate, and recognize the rich contributions that African Americans have made in the United States, but that Black people in general have made to the world.
Washboardjim.
Welcome back to Squawk Box. Citigroup CEO Jane Fraser got a pay bump last year. Company lifting her pay by 6% to $26 million in 2023. That includes $1.5 million in salary and $24.5 million in stock-based and cash incentive awards. Fraser has initiated an overhaul of Citigroup, including cutting 20,000 jobs in a bid to boost returns. I'm imagining some of those 20,000 people that are let go are looking at that payday thinking some of that should be theirs, right? It's what happens.
That's not.
I'm just saying that's the sort of psyche.
That's average. I don't know what we're paying Juan Soto. Juan, yeah. I remember the great Mario, sir, but I don't know what we're paying a good left-hander these days. It's a lot more than $26 million. I don't know what ScarJo's making in their next superhero movie, but it's probably more than $26 million.
I'm glad
I think she's doing
Jane Fraser in that category.
Yeah.
Yeah.
Well, I think she's doing something more important than those things, isn't she? She's got all those employees that are beholden to her and all the customers, and right? It's a lot of responsibility. Think if you screw up and you're working at United or Boeing.
Coming up, a new report says that Russia could launch a space-based nuke as soon as this year. We're going to talk to a security expert straight ahead. And as we head to a break, a look at yesterday's S&P 500 winners and losers.
Good morning and welcome back to Squawk Box, live from the NASDAQ market site in Times Square. Let's check the futures down another set. It looks kind of like yesterday's close on the Dow. Most of the morning we were down triple digits. It actually was positive at one point yesterday, the Dow, but it finally closed a little bit lower and similar to the action we've seen since that CPI number and PPI number, which we just heard from Tom Lee, might actually be seasonal, and he expects the positive momentum on inflation to continue at some point this year. The U.S. has told allies that Russia could deploy a nuclear weapon or a mock warhead into space as early as this year, and that's according to a Bloomberg report that said Russia's been developing a space-based capability to knock out satellites, and they would use a nuclear weapon. Such a warhead in orbit would violate the 1967 Outer Space Treaty, which Russia did actually sign at the time. I don't know. I don't even think I'd want to fly on a Russian airliner, so I'm not sure how great I feel about deploying the technology to deploy nuclear weapons in space. Does that make you feel good? You're
not
still
great.
worried about, the oceans and stuff. It's not this nuclear stuff that
There's a lot of reasonable
a lot of things to worry about. A lot of things to worry about. Insurance rates in Florida, where they keep putting, everybody has to live on the ocean. You wonder why.
That would be an issue. News alert out of Washington this morning. The Biden administration saying it will invest more than $20 billion over the next 5 years to improve cybersecurity of U.S. ports. Now, among the areas of focus, the equipment that moves cargo containers off of vessels. 80% of those cranes estimated to be made in China and use Chinese software. So experts are now raising concerns that the equipment could be used in Chinese surveillance. Jones right now to talk China, Russia, and the latest on shipping disruptions in the Red Sea. Helen Farkas, Executive Director at the McCain Institute. She served as Deputy Assistant Secretary of Defense for Russia, Ukraine, and Eurasia in the Obama administration. Thank you for joining us. You want to go straight to space, Evelyn? Let's talk about it, because I think there's a lot of questions about what the Russians are doing in space. Is there some kind of nuclear warhead that they're trying to put in space, and what are they even thinking, and what should we be thinking?
Yeah, I mean, Andrew, like Joe, I wouldn't get on an Aeroflot airplane either. But when it comes to space, Vladimir Putin puts his best engineers to the task. And unfortunately, what we're hearing does cause me a lot of concern. I worked the Russia portfolio in the Pentagon at the time. We were already quite alarmed by what Russia and China were doing in space, putting nuclear weapons into space. I mean, they could really blind us, not just in the military context, but obviously in everyday civilian life as well. So it's incredibly destabilizing because we have no way to counter this sort of attack, and we don't know what the likely, pun intended, fallout would be.
And what is the thought that it has to be a nuclear bomb in space? This is to knock out satellites for the most part. And why would it be nuclear? Why wouldn't it be something else?
Well, I think the idea would be with a nuclear explosion, you could get a detonation that would stun, in effect, a larger amount of satellites than you could take out with a conventional weapon. So it would be kind of indiscriminate, like a carpet bomb in effect. And that's probably a technology that they became interested in as they saw the proliferation of smaller satellites that we in the U.S. have developed and deployed, most notably for the Russians, for use in Ukraine. So they're trying to, have a counter military effect to these small satellites.
And dare I ask, there is nothing we can do on the other side of this? Meaning
Well, I
in
think
terms
we
of
have to
our
stop
own
that.
version, what would our version of deterrence be? I mean, typically, we build a nuclear bomb, somebody else builds a nuclear bomb to sort of, and that the fact that both of us have them does something to prevent them from going off.
Yeah, I mean, Andrew, the first thing you try to do is prevent the Russians from doing this. So I think the administration has gone public because this clearly would be alarming to the Chinese, to the Indians who are also in space, to any commercial company that has space assets. And so they're trying to put diplomatic pressure on the Russians to stop, because it seems that they have not yet deployed this capability, and maybe it's not even fully tested. So that's the first step. If that doesn't work, of course, we know from history that what we try to do then is counter with a similar technology. But I don't think it's in the interest of humanity, or really the United States, to develop an expensive, truly dangerous weapon that would just take the arms race and the dangerous nuclear standoff we have with Russia, China, and others to space.
This is going to sound almost callous because it's a business question. There are a lot of businesses that have satellites in space. Who would be the most at risk? If you were a business person or an investor thinking about this?
Well, of course, any satellite company working with the United States. So if you are a host to a U.S. government, whether covert, so undercover, or open U.S. government, satellite, I think that would be the first target for the Russians. But again, these commercial satellites, you want me to say Elon Musk, don't you?
I don't want you to say anything. I was just I mean, I thought you might say Starlink, but I also thought there were probably some defense companies and others
Yeah.
that have been putting things into space.
Yeah, I mean, I don't want to name names, but clearly any company that's hosting or deploying satellites for the U.S. government is at risk, and Starlink,
Right.
frankly, is at risk because we know the Russians are deeply upset at the capability it gives the Ukrainians.
And I know we're over time, so I just have to ask this really quickly. They're going to play us out, and I know your politics as well. But let me just ask, in terms of a response, a reaction. We're seeing what the reaction is from the White House. We've also seen somewhat what might be a reaction if former President Trump were the president. How do you think that were to change the dynamic, if it would?
I can't underscore how dangerous it would be to have President Trump back in the White House. And leaving my politics aside, I run the McCain Institute. We have on our board Mark Esper. He was Secretary of Defense under President Trump. He has warned the nation that this man is not worthy of, he's incapable of looking out for the U.S. interest. In fact, it's the contrary. He would actually put the United States in a really dangerous position because he either doesn't understand the threat posed by Russia or he doesn't care.
Evelyn, it is a longer conversation, and we should probably have it. Come on back, but in the meantime, we will see you very, very soon. Squawk Box is coming right back, though, after this.
Join Jim.
A new report from the Senate Finance Committee is blasting a special type of insurance for the ultra-wealthy, saying it operates more like a tax dodge. Eamon Jevers joins us with that story. Hey, Eamon.
Good morning, Joe. The Senate Finance Committee is releasing the results of its investigation into private placement life insurance policies, which the committee, under Democratic leadership, concludes are being used as a way for the very rich to avoid taxes, more so than as insurance against future disaster. The committee says it reached out to 7 firms which offer the policies and found that the companies offered about 3,000 policies at the end of 2022 that had a face value of approximately $40 billion. And the committee says the so-called PPLI policies are promoted to the rich as a way to eliminate income, gift, and estate taxes, and operated effectively as a tax-free hedge fund. And what's more, they said, the IRS has little way to see how much is being shielded from taxes because policyholders are not required to disclose their interest in a policy to the IRS, so they don't show up on a return. The system is possible because the tax code generally offers favorable tax rules to life insurance products to help Americans in their times of need. Death benefits from a life insurance policy are excluded from taxation, and life insurance premiums can be invested on a tax-free basis. But the committee argues that the PPLI insurance plans look more like investment funds in practice. They offer investment choices, including hedge funds, private equity funds, real estate, and other options. Now, Joe, the committee says PPLI policies can even be used to purchase a business. All of that is perfectly legal under the current system, but Committee Chairman Ron Wyden says it's a tax dodge, and he's working on legislation to curb the use of these plans and strengthen reporting requirements around them. Back over to you.
Just trying to figure out, you know, second to die insurance, things like that. I mean, it's been around for a long time. Universal life is private placement different than things like that. I mean, everybody, you know, if you have kids, you want to figure out a way. If you're lucky enough to have a lot to leave your kids, you'd like to figure out a way to have them cover the estate taxes, and that's what a lot of these things are for.
Yeah,
Is that different?
The big difference here.
Yeah.
Yeah, the big difference here is just these large amounts of money you have to get into these programs. You're talking about people investing multiple millions of dollars in a single life insurance policy. These are very expensive and really for the ultra high net worth individuals. And what Wyden and the committee staff are saying here is that what they're doing is just an end run around existing taxes. It's really only available to the super rich, but not totally available to everyday Americans.
But totally legal.
Totally legal,
and,
yep.
And Wyden's in a position to write some legislation to change things, so get cracking.
He says he's going to.
Ron.
We'll see if he can get the votes for it.
Yeah, right. Then actually doing something in the Senate. So, I mean, that's not going to happen. Eamon, thanks. Squawk Box will be right back.
or download the app.
Really proud. Welcome back to Squawk Box. American Airlines is raising checked bag fees for the first time since 2018. Here's what it's going to cost you guys. For domestic flights, the first bag is now $35 when booked in advance, or $40 at the airport check-in, but that's not the only change. The airline also limiting some travel agency bookings from earning miles. Joining us right now, Oscar Munoz, former United Airlines CEO and chairman, and a CNBC contributor. Good morning to you. You know, Oscar, you know where this is all going. Everybody looks at these additional prices and the prices going up on bags and this, and then they say, you know, I'm being charged for every little thing. Is this a good thing? Is this a bad thing? Does this mean that ticket prices are going to stay lower, or it just means that everything is going up?
Well, ticket prices will stay what the market demands, right? It's a very competitive world, but with the broader aspect of that, I think, you know, the headline is probably a little bit more misleading than you might think. Yes, the baggage fees are increasing, but it's really this move around distribution costs that airlines pay to these management companies, these TMCs. And I think what you really see underneath this is this drive to try to get people to book directly with American rather than these third parties where distribution costs, commissions, fees are being paid. So you definitely see a broader cost play and a slight revenue increase. It feels a little consultancy to me, and I think the headline is a bad one because, you know, there's people out reading USA Today that are going to say, oh my God, look what American's doing. And it gives the industry kind of a bad reputation, just like where you went with regards to that. Prices overall will stay what the market demands. This is a bit of a lull period, so it is a tough time for anyone to raise prices.
You called it a lull period. Is it a lull period for business travelers, which is where the real margin is for most airlines these days, or is it a lull period in the back of the bus, if you will? What are you seeing?
The dynamic there has changed a lot since COVID, right? So business travel has not fully returned. People are opting for, you know, these virtual ways of communicating much more. The lull is mostly in what we call the leisure market. While there's some, you know, travel for spring break and such that are upcoming, there's just a little quiet period after the end of the year. So it's seasonal in that regard. Business travel continues to increase slightly, but again, a lot less than it used to be. So, you know, the industry is facing this revenue issue, and they're trying to figure out, you know, better and better ways to attract customers to travel and travel more frequently.
In terms of costs at airlines have gone up quite materially. Where do you see profits, and which airlines, if you were to stack rank them at this point as an investment case, well, how would you do it?
Yeah, the investment case is difficult, right? Over the long run, we've seen the markets, you know, having run a company and do, you know, probably we had a nice 50+% run in our price when we were there, but it's so volatile with so many external factors. But with regards to profitability, I think we've talked about over time this concept of cost convergence, where the low-cost carriers that had indeed low cost are being pressured by these contracts with labor. Certainly fuel has had a big issue with that. So you're seeing this cost convergence, and you're seeing really a couple of airlines sort of come out of it in a more stable way, and those would be obviously biased United, but Delta as well, and you see those two. And then with regards to this, you haven't seen them comment. I think you know, America's move is a bold one, but I think a lot of people are going to wait and see whether or not people are going to follow in that regard. But yeah, no, this industry it's not for the faint-hearted. There's always issues surrounding it, right. And profitability continues to be a journey.
Okay, last piece for you. We had Sarah Nelson on the broadcast last week, and she made the argument that her attendants were being paid too little, and that the union has done remarkable things on behalf of these flight attendants. I made a point that, interestingly, at least when you look at all of the rankings of all of the airlines, the one that seems to come out on top, not just in terms of profits, but in terms of customer numbers, satisfaction, and the like, happy employees, is Delta, which is not unionized. And why do you think that is?
Did she answer that question? Because that's a tough one.
She had her own answer, but what would be yours?
No, listen, the cards have been dealt the way they have, And so for those of us that have unions, it is imperative that we negotiate in good faith. A fair day's work for a fair day's pay has always been my model, and it's also been the union's model. And I just have to define what a fair day and a fair amount of work is. And so for the ones that have unions, it's imperative that we work through this to get the adequate amount of compensation for the work that they do. With regards to the difference between Delta and the non-unionized nature, it's been a topic that's been discussed greatly, and more power to them for being able to do that. But again, it's an academic question in the regard, because there's just no going back for the ones that have unions, and so we have to work with them.
Oscar Munoz, nice to see you, sir. We're coming right back with 2 big hours ahead.
Jim.
Futures slipping this morning after a down day yesterday. The Fed will be a focus for investors today, along with earnings from NVIDIA, which are due out after the bell, the last of the Magnificent Seven to report. And a lot riding on the numbers. A preview is straight ahead. Plus, a trove of art, fashion, and objects from Sir Elton John set to be auctioned off by Christie's. We've got a preview of what's being offered and what the Rocket Man's collection could fetch. All this as the second hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box here on CNBC, live from the NASDAQ market site in Times Square. I'm Joe Kernan along with Andrew Ross Sorkin. Becky is off today. Futures kind of look very similar to what we saw at the close yesterday. We lost 50 or 60 points on the Dow. We're down 50, NASDAQ down 78. We've been in a little bit of a consolidation period since we had those hot inflation numbers last week. Treasuries, you saw the yield back up sharply last week, but stabilizing now. We're at 4.26% now on the 10-year.
Okay, let's talk about the minutes for the last FOMC meeting because they're going to be released today. That's happening at 2 p.m. Eastern Time. Our senior economics reporter, Steve Leisman, joining us right now, though, with a preview. Steve,
hey, Andrew.
What do you think we're going to be seeing here?
Well, we're looking for clues at just how patient the Fed is willing to be in cutting rates. There's a debate out there about whether it's taken the wrong signal from that January bump up in inflation. In fact, Ian Shepherd from Pantheon, he writes, "We think the Fed is making the mistake here of wanting near certainty before acting, but the inherent long lags in monetary policy makes that risky." Since that hotter than expected January inflation number, or numbers, and the Powell pushback at the last Fed meeting, the expected number of quarter-point rate cuts, you can see in this chart, it's fallen from nearly 7 to about 4 now. Futures are pricing in fewer and also later rate cuts. The probability of a May cut has declined from what was a near certainty to just around 37% now, and you need to get to July to get to that certainty. But a number of economists increasingly see that January inflation spike is related to one-off items, particularly price hikes that happened at the beginning of the year but aren't picked up by seasonal adjustments. So there's a call out there for Fed Chair Powell to be a little less data dependent and maybe use a little more common sense here. Markets will also scrutinize the minutes for any hint about ending quantitative tightening. That's the reduction in the Fed's balance sheet. It's come down by $1.4 trillion from the peak, but it's now still over $3.4 trillion above the pre-pandemic level. Expectations in the CNBC Fed survey, that's for the one from January, see the Fed ending QT in November. So on both rates and the balance sheet, markets are going to have to wait until the summer or even the fall for the Fed to back off its restrictive policy. And that guy comes after one bad month of numbers. Andrew?
Well, you want to give us, you don't want to tell us what your question's going to be for the man of the hour, do you?
Well, it's the minutes today, so we don't get a press conference. But if I had a question, I would wonder how he's taken the January number. Why it looks like all of the Fed folks have said, you know what, one bad month and we're ready to abandon ship here. I think there's a good argument here that the Fed should look through this number. Now, it has time to do so, which means there could be a back-end trade here. I think Tom Lee was kind of suggesting it, that maybe the Fed comes back around to not early cuts, but maybe earlier cuts than is currently priced in. Maybe something could still be in play here, and you can kind of see that in the numbers, Andrew. So really you got to look to that February inflation number to see if it backs out or backs off the spike in January. And the Fed, I think it was Mohammed yesterday, was talking about being less data dependent, to which I would add using more common sense.
Steve Leisman in Washington this morning. That's why I thought maybe he'd get a question in. But you're right, today's not that day. Thank you.
Well, let's talk macroeconomic terms. Joining us now, Peter Krause, Chairman and CEO of Aperture Investors. I guess this year you're fundamentally feeling okay about the markets, which is different than probably at the beginning of last year.
Yeah, I was. I think we changed our view. I changed my view. I think the economy weathered significant increases in interest rates. Jobs, kept on getting printed. We continued to have growth both in corporate earnings and in individual compensation, and people kept on spending. And one of the things that I think I missed a bit is the level of interest rates on mortgages in the economy. I think 62% of homeowners have mortgage rates that are somewhere in the 3.4% fixed for 30 years. So you think about that, that leaves you with a very interesting transmission mechanism, or lack thereof, for the Fed. If you're increasing interest rates, when mortgages had variable rates, rates went up immediately. Now rates are fixed, and they're fixed at a very low level. So consumers actually have more discretionary income. and they're working and they have jobs, and things are actually pretty reasonable. Yes, inflation went up very quickly and caused a big change between their discretionary income and the cost of things, so they don't feel as good. But look, that also creates increases in labor rates, and that's why the Fed is having a harder time bringing rates down, because wages are not coming down. And they're unlikely to come down until there's a recession, and I don't see a recession in the next, 12 months.
So it's going to be a longer process for the Fed to get back to 2%.
Yeah.
But not, I think implicit in some of the stuff I'm reading in your comments is that having normalized interest rates isn't necessarily a bad thing.
No, that's the whole point. I mean, we lived for many, many years with a 5 to 6% 10-year, and the stock market went up 10% a year, and there's nothing wrong with that.
And it's nice when you can, when money costs something, and then you set prices and know what things are worth instead of this weird.
We haven't had a particularly rational capital allocation process for probably 10 years. I mean, after the global financial crisis, the Fed and the central banks around the world really drove liquidity to unusually high levels, interest rates very low, and they did that to actually forestall a depression. And we could have had one, and we didn't. But the result of that was significantly different capital allocation than what we would normally have. And now we're trying to get back to a rational capital allocation. There are going to be capital structures out there, both in real estate and in companies, where there's going to be some kind of restructuring. But that doesn't mean that the world's going to fall apart. But we do have to get back to rational interest rate levels and rational capital allocation, which we haven't had.
Along with your being a little bit more friendly towards the markets, you like small caps. Not everyone does.
Yep.
Right?
I do like
Most
small
people
caps.
are sort of running from
They are running from small caps. I do like them. I think we've had an unusually high increase in interest rates. That has had a negative effect on the smaller companies in the United States and frankly around the world, in Europe as well. And when those interest rates moderate, small caps are going to fly, and they're significantly undervalued, and people should look at their portfolios and make sure they've got some allocation to it, because they're very under allocated.
You're moving your business somewhat more towards the big institutions and private investing. What's
We
behind
are.
that?
We have evolved a bit.
Willie Sutton. That's where the money is.
Yep.
Yeah. Well, no, that was never at a question. No, I thought for a while that it was possible to actually reach the retail markets with this very low base fee and charge for performance, but it was challenging. Distributors found it challenging, and so, frankly, we just decided that we built it for institutions to begin with. We were trying to give the broader marketplace an opportunity to buy those kinds of products, but institutions still have significant interest, but you had to have a track record of 3 years or longer to sell to institutions, and now we do.
Get Andrew as a client now if you're going for the bigger.
Yeah, well, Andrew's right on my list. He's right on top.
He's now probably selling Bitcoin indexes as well. So
We're not doing that.
not touching it.
No, we're not touching Bitcoin.
When your customers say, or your clients say, hey, should we have any exposure to this stuff? What do you tell them? And don't look at me when you answer this question. Look at him.
Yeah, well, on Bitcoin specifically, I look at Bitcoin a little like gold. I don't really understand it. I don't understand where the value is. There's a scarcity question. People invest in it because they think the scarcity will continue and it will grow. I just am unconvinced by that. If I don't really understand it, I just don't invest.
But you believe gold scarcity will
No, I don't actually invest in that either.
But you understand why it had value for 5,000 years, or no?
Yeah, I agree, but you can't determine the manner in which that value goes up or down.
From stock to flow, there's a way you can do it depending on how much gold is produced every year and how much is.
I think that there's not a lot of correlation between the supply of gold coming out of the ground and what happens to the price.
An ounce of gold is worth what a good suit would cost. And it also has a relationship to oil. So it'd be worth about a third of what your suit would cost.
But when I got married, what I paid for gold on a per ounce basis was as much as I could buy a car for.
Right.
That's not the case today.
Now it's what you're.
It's a lot cheaper.
It's what those fancy glasses cost. I think
the fancy glasses
an ounce of gold.
and the gold are about the same. But before, I mean, I could buy a whole car.
Okay, Peter, thank you. Well, this is me. NVIDIA set to report after the bell, the last one of the Magnificent Seven to report this quarter. Stock coming off its worst day since October ahead of earnings. We're going to preview the numbers, tell you what Wall Street is expecting. We're coming right back. NVIDIA shares up about 40% so far this year. It's February. I got that right?
We are in the month of February.
And ahead of its quarterly results after the bell today, it's a leap year, you know. We get an extra day. The expectations are sky high for one of the world's most valuable public companies. Stock fell nearly 4.5% yesterday, its worst day in several months, shedding $78 billion in market cap, the largest daily loss in its history. Joining us now with what to expect is Joseph Moore, Morgan Stanley semiconductor analyst. And we made the point earlier, Joe, that the results we're expecting today are the kind of results that would explain the movement in the stock over the last couple of years. I mean, it's phenomenal.
Yeah, I think that's right. You know, we're wrestling with very high expectations. We early in the year started to react to some of the supply chain data points showing very strong end demand. And then I think more recently, the stock responded pretty well to a lot of the hyperscale commentary pointing to the magnitude of investments in AI and things like that. So it should be a very good quarter. And as you said, you know, it has been selling off a little bit into it as there's anxiety about those expectations. But certainly results are expected to be very strong.
We were actually, I guess it was off camera, talking about how to value anything, and it's, you know, especially in the stock market, it's difficult. I don't envy anyone trying to value NVIDIA, regardless of what they say today. How much of the price you're seeing right there are expectations for how AI progresses over the next 2 or 3 years? A lot of the $700 has to do with that, doesn't it?
It does, although I would say, you know, we've seen actually more multiple expansion in other names associated with AI in my coverage. You know, NVIDIA, the numbers have been very strong. When this surge in AI started, we were earning less than $1 a share. My expectation is we're guiding to north of $5. So we're guiding to more than a $20 run rate. And it's still quite strong, and we still have a product cycle ahead of us. So, you know, valuation to me is less of a challenge, and the durability of this strength is more of a challenge, you know, because we have seen this significant surge in investment, obviously stays strong throughout the near term here. The question is, do we see follow through where we see growth next year? And I think that's a little trickier to figure out, because you see the breadth of applications, the surprising number of companies developing these models, the venture capital interest in developing these AI models. All of that is sort of difficult to predict in 2025. And that's an element that, you know, NVIDIA will probably sound pretty good with this product cycle ahead of us, but can't really give you a lot of visibility beyond, you know, the semiconductor normal visibility. And so I think we need to hear that from customers. And I think that's why, you know, the stock tends to move more in between the quarters when we hear from some of the hyperscalers how significant these workloads are. And so I think, you know, the quarter should be very good. NVIDIA should make people feel good about what they can see, but, you know, the real question is kind of what happens after that.
I mean, I want to know what you think the 3-year compound growth rate is for both earnings and revenue. And I mean, would you even try to do that?
Well, from here, it can be challenging. We're modeling 2025, calendar 25, as kind of a plateau year, right? So we have core data center about flat. That's after a pretty steep ramp of this year, so we're still getting big upward revision from where we are right now. I really have no idea if that's the right place to be. I think, you know, flat to me is a little bit more, you know, could be up, it could be down, but this is still semiconductors. There's still probably a plateau that's going to happen. But within that flat, there's a lot of growth still, right? There's a growth in the per workload spending on training. There's growth in inference. There's growth in some of the networking businesses. So, you know, there's an underlying growth rate that's pretty strong. I would just like to model it conservatively, that after sort of a boom like this, that we have a little bit of a flat spot next year. But it's really hard to tell. And I think that's why the stock is keying off of commentary from hyperscalers that this seems durable, maybe beyond 2024. And then I would say, you know, beyond 2025, I think we'll continue to grow. This company is in a very strong position within AI, and there's a lot of desire to find alternatives and to look at stocks that haven't had the same move. But the reality is the vast majority of AI investment is going to benefit this company. So I think a 3-year CAGR, you know, we don't venture out that far, but I would say certainly we'll grow double digits beyond a plateau, but I am banking on a plateau in 2025.
And you don't see really any competition at this point? You can't even name anyone?
Well, there's a lot of competition for individual workloads. You know, AMD, Intel, Marvell all have seats at the table. Their custom silicon is going to be important. We just find that, you know, there's opportunity here and there for those alternatives, but the vast majority of this opportunity wants to be in multi-cloud, wants to have the ability to use the same ecosystem everywhere, and that all kind of comes back to NVIDIA. So I wouldn't say there's no competition. There's certainly a lot of desire to have alternatives, but they're in a very strong position. And with this B100 product cycle, it will be very difficult to continue to compete because they're moving the bar forward quite a bit in the second half.
When I think about what we call the World Wide Web and then the internet and how the world looks versus prior to that, I find it hard to believe anything could have that type of you know, to change things that fundamentally with how we do everything. You tell me AI is going to be as powerful, 10 times as powerful, not as powerful? What could you say about that 10 years from now?
Well, I think it has the power to be transformative, right? And Morgan Stanley, we're looking at how this affects a broad range of businesses. and maybe less so than the internet or the mobile internet, but certainly very strong. What I would also say is when you've looked at those prior big tectonic shifts, semiconductors tend to do very well early. You know, Qualcomm and ARM early in the smartphone cycle. You know, you tend to see those things, and I think that's where right now NVIDIA is the primary company making money in all of this. Over time, you're going to see that value transfer a little bit from semiconductors to systems to services that are being offered for AI. But right now, it's very hard to ignore AI, semiconductors and AI, because a lot of the foundation that's being paid for the next decade is being built on NVIDIA silicon. So it's a strong opportunity near term. I think that the semiconductor impact will be felt early, and that's why we felt like you kind of need to be in these names now.
Okay. All right. It's hard to get really wrap your mind around things like this, and when we're at this point, Joe. But we'll be watching. Thank you. We'll have you back. Thanks.
Great. Thank you.
Okay, coming up, a read on the housing market. The futures right now. Take a look. We are in the red this morning. 53 points off on the Dow, now 55. NASDAQ looking to open down about 75 points. And the S&P 500 looking to open off about 8.5 points. We are coming back with a lot more Squawk Box right after this.
Time now for today's Aflac trivia question. Who is the entrepreneur that created the Spanx brand? The answer when Squawk Box returns. BC. And now the answer to today's Aflac trivia question. Who is the entrepreneur that created the Spanx brand? The answer, Sarah Blakely. Born on this day in 1971, Blakely became the world's youngest female self-made billionaire in 2012.
The weekly report on mortgage applications and rates is out. Let's get to Diana Olick with the numbers. Good morning, Diana.
Good morning, Joe. Yeah, mortgage rates surged back over 7% last week. That's the highest level since early December, and it hit mortgage demand hard. Total application volume plunged 10.6% compared with the previous week, according to the Mortgage Bankers Association's seasonally adjusted index. The average rate on the 30-year fixed increased to 7.06% from 6.87 for loans with 20% down. Applications to refinance dropped 11% last week compared with the previous week, and were just 0.1% higher than the same week a year ago. 1 year ago, the 30-year fixed was 6.62%. Refi volume had been running higher than year-ago levels, even with rates higher this year, but the latest jump in rates clearly made a refinance just not worth it for most borrowers. Applications for a mortgage to buy a home fell 10% for the week and were 13% lower than the same week a year ago. Affordability is already pretty awful, with home prices surging again due to still tight supply and more demand coming into the spring market. And higher rates caused the adjustable rate mortgage, that's the ARM share of activity, to rise to 7.4% of total applications. ARMs offer lower interest rates but are considered a little more risky because they adjust higher or lower after a fixed period. And speaking of the spring market, President's Day weekend is kind of considered the unofficial start, and this new rate level, it's going to hurt. Toll Brothers reported strong quarterly earnings yesterday, but that was during the brief rate dip in December. CEO Doug Yearley did say in the release that they saw strong demand in January, but again, January didn't see a 7 handle on that rate. Joe?
We were talking about it earlier that, do you know, Peter Krause said, talking about how many people are not affected by this because they were smart enough to get long-term fixed rates, so it makes the Fed's job harder, because that's maybe one of the best ways to slow the economy is from the housing market, but it hasn't affected as many people as you would have thought maybe.
Yeah, but I mean, you have to have a housing trade. Look, some people have to move. They have to move for jobs. They want to upsize for family. They want to downsize because maybe they're baby boomers. You can't just stop the housing market because a lot of people, maybe 90%, have a 30-year fixed at 3% homes and sell existing homes.
Yeah, pretty amazing moves since 1 or 2 inflation reports can psychologically get people worried again, I think, but we'll see.
Yeah, I mean, look, 7% is hard to take, especially when you have something like 3%. It keeps not only buyers off the market, but it keeps sellers off the market. And you have to remember there are some people who might be able to afford that 7% rate, but they might not qualify it because banks are pretty tight now in lending.
Okay. All right. Thanks, Diana. See you later.
Coming up, super communicators unite. In this era of political polarization aided by technology that's reshaped what it means to connect, we're going to get some practical advice this morning that can help people communicate with each other. And there's some really interesting tidbits in this that you need to know. Best-selling author Charles Duhigg is going to be with us in just a moment. And then Christie's holding an auction for items from a rocket man himself, Sir Elton John. We're going to head down the yellow brick road with the CEO of Christie's. All of that in just a bit. Do not go anywhere.
Download the app.
Welcome back to Squawk Box. Take a look at the futures right now. We are off this morning about 52 points if we opened up right about now. Down on the Dow, NASDAQ down about 75 points, and you're looking at the S&P 500 looking to open off about 8 points. Our next guest is the author of a new book. It is out this week. It is titled Super Communicators: How to Unlock the Secret Language of Connection. Charles Duhigg is a Pulitzer Prize-winning journalist and author of several books, including The Power of Habit, which I've used to try to keep my habits going, though I'm not always as good as I should be. But
I'd like you to probably stop some of the habits I've
Some of-
seen that you
Well, we talked to Charles
Do you
about
have a
that.
book about how you can do that?
Well,
He's
but
got
you know
quite
what-
a few. That,
you know what Charles has, though? This book, which is fascinating and really actually teaches you, Joe, how to communicate, how people can learn from each other, how to make people feel
do I have to listen to them?
I'm going to give you a copy of this book after
I
this
have a
segment
copy
is
at
over.
home. I thought about it for my son. I mean, I think, yes.
I think for young people, this is critical, right?
Yeah.
Being able to communicate is a leader's job. That's what you do as a CEO.
But you have found these little, dare I say, I don't want to say tricks, but things that you can practically do to communicate more effectively. What would you say is the single biggest one?
The single biggest thing that you can do, and you're right, super communication is just a set of skills that anyone can learn. Any of us can become a super communicator. But the single biggest thing is to ask more questions. And in particular, to ask a special kind of question known as a deep question. If I bump into you and you say, oh, I'm a journalist, I could say, oh, how'd you decide to become a journalist? Like, what's your favorite part of your job? Now I'm asking you to talk about something real about yourself, and that's when we start to connect with each other.
But a lot of it, I also think, reading your book, is not just, we ask questions professionally. All three of us, actually.
Yeah, but I know the answers to
You know the answers.
And most of the questions I'm asking, I already know.
I know the answers. But it's actually about listening.
Absolutely.
No.
So, talk about that, because it's not just listening yourself, it's actually showing the other person that you're listening.
That's exactly right.
Pretending.
When we're having really hard conversations, there's always, or really any kind of big conversation, there's something in the back of our head, a product of evolution, that says, is this person actually listening to me, or are they waiting their turn to speak?
Right.
And so if we prove that we're listening, and there's a technique known as looping for understanding that they teach at Harvard and Stanford.
Okay, yeah. Let me ask you that. No, I'm kidding.
Looping for understanding.
You ask a question, you repeat back what you heard in your own words, and then you ask them if you got it right. And what studies have shown is that when you do this, it transforms conversations, because that other person believes you're listening to them, you've proved it, and that makes them want to listen to you in return.
Okay, what about challenging, confrontational conversations?
Yeah, those are tough, right? And in the book we tell the story of Netflix, where there was an internal civil war over race. And it would have been very normal for the company to say, look, this doesn't belong at the office, leave politics at home. But instead they said the opposite. They said, look, let's acknowledge our differences, but let's also acknowledge all of our similarities, that we're all people who are members of our community, we care about this company. And it's only by bringing everyone to the table and giving them a voice and showing that we listen to each other that you resolve issues like that. And so that's exactly right. In conflicts, we have to do the same thing.
Okay, here's a harder one. So we're doing this face to face.
Yeah.
But the whole world has moved to this.
Yes.
And it's not just FaceTime, it's on text, it's on Slack, it's on email. And so often it feels to me like people read things into your messages, right?
Absolutely. And this happens all the time. And it's oftentimes when we make a mistake, and it's because we forget that different forms of communication have different rules. So when telephones first became popular, there was this theory that nobody would be able to have real conversations on them because they couldn't see each other. But of course, you and I, by the time we were teenagers, we had conversations for 7 hours a night. Right. And our kids, I'm sure this is true of your kids, when they're on the phones, they understand that a text is different from an emoji, is different from an email, is different from a phone call. But those of us who are a little bit older, sometimes we forget that there's differences, and we just have to remind ourselves of those rules.
But what are the rules? I mean, no, because also people try to read in, I wouldn't say the best of intentions, they often read in the worst of intentions.
I think that's right. Or you might say something sarcastic and you can hear the sarcasm in your head, but they don't see it when they get the email. And I think the key there is to overemphasize. So there was a bunch of studies done looking at particular online discussions, and they found that if just one person started saying please and thank you, the entire conversation got better, no matter how big it was. And so a rule for being online, for a tough, is you say please and thank you. You overemphasize the politeness, you underemphasize the sarcasm.
You catch that, Joe? Politeness.
Yeah, I did.
Politeness.
Paul, unfortunately, when I'm sarcastic, it doesn't even have to be electronically. People still don't get it half the time.
Yeah. Well, so I have a question for you, because my guess is what's happening there, take laughter. 80% of the time when people laugh in a conversation, it's not in response to anything funny. It's because they're showing that they want to connect with you.
So you're asking me.
So my question.
No, I'm giving it back to you like you told me to do.
Right, you're doing a great job.
Was that good? How about this? I understand how you feel. Many of my clients have felt that way in the past, but they have found that. How's that sound?
Yeah,
I got a lot of candy.
I'd keep my cash with you.
What was 10,000 a good start? Or
Absolutely.
Would 20,000 be better for you?
Did you take a check? Can I write it right now?
You know, I did think about how to win friends and influence people. As one of the if you've read that.
Of course.
And communicating but a lot of it, I'll tell you what. I don't want to lessen what you're doing, but it kind of seems like sometimes you're steering people where you want them to go for your own purposes.
Well, so what's happened in the last 10 years is we're living through this golden age of understanding communication because of advances in neural imaging and data collection. We understand how communication happens in a way that back during that time of win friends and influence people, they didn't understand.
Yeah.
And one of the things that we've learned is that their authenticity is incredibly important. That if I try and manipulate you in a conversation, maybe it'll work for a couple of minutes, but you're going to see through it, right? And so what we need to engage in is this reciprocal authenticity, that when I say something real to you, something honest, your instinct is to say something honest back. And without that, we probably won't connect with you.
Who's the best communicator you know?
I mean, the best communicator I know is a guy named Greg Nelson and Don and Steele. Let me ask you this, and they're friends of mine. When you've had a bad day and you want to call someone who you know will make you feel better, does that person pop into your mind? Do you know who you would call?
Yeah.
Yeah, probably most of the people watching do too. That person for you is a super communicator, and you're probably a super communicator back to them. But some people can do this consistently. Some people can connect with almost anyone.
Can I ask, do you think that's an authentic thing? The people who you say are the true super communicators, is it something, is it this talent, this skill? Is it because when I started even introducing you, I said, there are these tricks. Because I read the book and I'm like, okay, there are these little, I'm going to try some of these tricks on you. But, but to call them tricks, it may be unfair.
I think it is. I think it's like saying that, recognizing the alphabet is a trick to learn to read.
Right.
You actually know how to read, right? And when you do these skills, when you just practice this, our brains are designed to make them into habits, and they become real. Because when I prove to you that I'm listening, it doesn't mean that I'm not listening. I actually have to listen to you to prove to you that I got what you said.
I also think, just one other thing, I'm not going to sell the book for Charles, but I'm going to say this. I don't know if you ever have, you don't have this, but if you ever have an insecurity about going up to somebody and talking to somebody, I actually thought that there were lessons in this book about that would actually make you feel better and more secure in actually approaching other people.
Absolutely. There was a great study done by Harvard Business School where they told students they were going to have conversations with strangers, which is really anxiety producing. And they told them, take 5 seconds and write down 3 topics you're going to talk about. Simple stuff like last night's movie and this weekend's game. And they found that people stuck those topics in their pocket and they never came up, but they reported being so much less anxious and the conversations being so much better simply because they had prepared for a little bit and they had something to fall back on.
Just to fall back on, yeah. Get that.
Is there any way to deliver bad news better?
Absolutely. Absolutely. The first thing that you can do is you can tell someone, I'm going to give you bad news. And I want you to know we can have a conversation about it, or you don't have to have a conversation. You can just take this and you can carry it with you and come back some other time.
I got the good news and the bad news is a good way to do it. Sometimes.
And which one do you want first?
That's a question. That always depends. It depends.
If you're laying someone off, saying, look, I have good news about the company, and the bad news is you're fired, I don't think they're going to listen to the good news.
Might not work.
Charles Duhigg, thank you. The book is called Super Communicators, and it is fascinating. I learned a lot of lessons, and as I said, Joe, I'm going to be trying out some of this stuff on you.
You do that. You do that.
Thank you. We're coming right back. Thank you, Charles.
Flash courses.
Welcome back to Squawk Box. I'm Dominic Chu. We've got a mix of catalysts at play for stocks to watch this morning. We'll start with a big drop in shares of Palo Alto Networks, down nearly, at this point, 23.5%, roughly 300,000 shares of trading volume. This is after the cybersecurity company reported quarterly results after last night's closing bell that actually beat estimates for both profits and revenues, but its current quarter forecast for both measures came in below expectations, as did its full-year forecast for revenue and billings growth. Shares of Palo Alto Networks were up 24% year-to-date and 116% over the last 12 months going into this print, so the expectations maybe were very high. Also on the earnings front, shares of Toll Brothers are up roughly 2% or so right now, just around 2,000 shares of volume. This is the high-end home builder reporting profits and revenues that also beat after last night's close. But in Toll's case, it actually raised its full-year guidance for how many homes it expects to deliver, and said that a combination of a strong jobs market, improving consumer sentiment, and still low levels of housing inventory will contribute to stronger demand in new homes throughout the course of this year. And we'll cap things off with a check on Amazon. Shares of the e-commerce and cloud computing giant are up just roughly about 1% or so on 250,000 shares of volume. Amazon is going to be included in the blue chip Dow Jones Industrial Average effective February 26th. It's going to replace pharmacy benefits manager and drugstore chain Walgreens Boots Alliance. That move will generate some incremental investor exposure to Amazon for those who use index tracking instruments like mutual funds and ETFs to keep those in play. So Amazon shares up about 1% right now, Andrew. Stocks to watch. I'll send things back over to you.
Thank you, sir. Coming up next, a big auction taking place in New York with a wealth of one-of-a-kind pieces from the one and only Sir Elton John. CNBC's Robert Frank is there and he's got a preview of what's coming up. Robert.
Good morning, Andrew. Rocket Man Mania starts tonight here at Christie's, auctioning over 950 items from the former Atlanta home of Sir Elton John. Everything from jewelry to watches to furniture to his car. And, Andrew, I got something special for you. These are the man himself, the Rocket Man boots, selling for up to $10,000. We're going to talk to the CEO of Christie's about one of the greatest celebrity auctions to come around in the last decade and the state-of-the-art market when Squawk Box returns.
download the app.
Welcome back to Squawk Box. Christie's holding an auction for items from the Rocket Man himself, Sir Elton John. Features art, photos, stage outfits, and even a piano from his former Atlanta estate. I'm going to get straight over to Robert Frank, who's got a special guest with him this morning.
Good morning, Andrew. Great to see you. We are here with Christie's CEO, Guillaume Cerruti. Great to see you, Guillaume.
Good morning,
Guillaume, thanks for joining us. So this sale has just gotten so much publicity. This whole Christie's headquarters has been transformed to look like and feel like Sir Elton's previous residence in Atlanta. What's been the interest so far in demand?
Very strong, very strong. You know, that's the type of sale, especially at the beginning of the year, when people want to start on an optimistic and joyful note, that really attracts so much attention. So we have had many visitors coming to our headquarters here at Christie's in Rockefeller Center. We have already a lot of registrations for the sale, online, on the phone. We expect to have a lot of people in the room tonight for the first sale, so it's very exciting.
And it's interesting when you look at some of the estimates. I mean, there are some items here that are estimated at $100, $200, the sunglasses, some smaller suitcases and things like that. But the estimates seem very low to me. The car, his Bentley, which is a gorgeous Bentley, let alone owned by Elton John, is estimated around $30,000. Do you have to put a low estimate, and then that does not include the potential Elton John premium? So these items could sell for multiples of the estimate.
That's the magic of this type of sale, you know, with very different categories of objects, but all estimated at their real value if they were for sale in a normal sale. And then the name, the provenance, the history, the setup, of course, the name of Elton John and the emotion that he has, you know, put in this sale, selling the content of his estate in Atlanta will do the rest. So yes, we expect that the prices will be multiple of the estimate, but the estimates are fair if the object were in a regular sale.
And what about the overall art market? We saw a pretty big correction last year. The auction houses were down somewhere around 25 to 27%. Your sales were down about that as well. What does this year feel like going into what's, at least from the stock market point of view, starting out better than 2023?
I'm you know, relatively optimistic for this year because, as you said, the correction took place last year, and the market has proven to be resilient over the last 10 years. It's a market that has changed much over the last decade, much more global, especially in categories like luxury. The online bidding has transformed also our industry. We have much more bidders than we had 10 years ago. So I think that once the market has corrected itself, it was the case last year, I think now it's time to start on a good base. And what we see at the beginning of the year with sales in New York 2 weeks ago, what we have already for sale in London in 2 weeks' time, makes me feel optimistic for this season.
And you mentioned online bidding, which has totally changed the auction business since the pandemic. What percentage of your winning bids now for last year were online, and what do you think that's going to be in the future?
It's 80%.
80%
of the winning bids come from online bidding. It's fair to say that we have a lot of online sales. By definition, online bidding is the only way to bid in these online sales. But even in live auction, almost 50% of the winning bids come from online. So there are more people bidding online than people bidding in the room on the phone.
And has that also brought in a younger generation of collectors that maybe just didn't know how to navigate Christie's when it was these live, intimidating auctions before?
Absolutely, absolutely. The online bidding has, you know, attracted new customers who are tech savvy. They like to bid online. They like, you know, the fact that it's so easy. Sometimes, and you're right, they are intimidated by, you know, the theatrical aspect of the live auction. We try to change things. Look at what we've done with the setup here to attract as many visitors as possible. But it's true that the online bidding is the easiest way to bid at auction.
And broadly, does the stock market have much of an impact? I mean, is it correlated to the art market and at least the mood of those very high-end customers? And we've had a pretty good stock market at the start of this year and the end of last year. Does that help?
There is an impact. I mean, we are not immune to the overall context, macro environment, political or economic environment. But as I said, we are resilient because people, especially at the top end, they know that if they don't take the opportunity to buy an object they want, a very rare object, a masterpiece, there will not be another opportunity. So whatever the stock market does, very often we see that our sale, especially for high value items, are strong.
Great. Guillaume, thank you so much for
Thank
joining
you.
us.
Thank you,
Appreciate it.
Robert.
Joe, I didn't see any Haim Satines here that Elton John collected, but there's some great photographs. I mean, the amount of art in this space is just, it's amazing that one person did this, plus while he was touring and being Sir Elton John. So it's really amazing to see how much stuff is here.
It is, and I go way back to, you know, not everyone remembers your song, and I remember when that came out, and I remember, I mean, he is just raw talent, really incredible. What a life he's led. I've seen his place from you can see it from St. Mark's Square, you know, Robert, over in Venice.
Yeah. Yeah, no, and his place in Atlanta was 14,000 square feet, and it was absolutely filled, and it's hard to believe, but when you come here at Christie's, the amount of stuff that he collected, I mean, he was obviously an incredibly talented musician, but also a talented collector, and it's just staggering, 14,000 square feet worth of stuff. He called it his ultimate Elton John man cave. It's fun to see all this stuff.
Very cool. Thank you for bringing that to us, Robert Frank. Coming up, Mike Novogratz of Galaxy Investment Partners joins us. Just made a significant move in Ethereum. As we head to break, as I look at crypto prices this morning, there's some weakness there, but not too bad. 1 1/3% on Bitcoin. We're coming right back.
Jim.
Good morning. Futures under pressure. Two big events on the way. The Fed's minutes from the last meeting and NVIDIA's quarterly results coming after today's bell. We're going to run down all of the action. Meantime, the wide world of sports streaming may be about to get nasty. Fubo TV suing Disney, Fox, and Warner Brothers Discovery to block their alliance. We're going to see if they've got a case. And crypto's comeback, Bitcoin and Ethereum, have been on quite a run. What are the next levels to watch? We're going to ask Galaxy Digital's Mike Novogratz when he joins us straight ahead. All this as the final hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box here on CNBC. We're live from the NASDAQ market site in Times Square. I can tell you that's definitely where we are right now. It's not a screen, not a green screen. Not a lot going on out there. You ever get anything from that truck? Have you ever gotten anything?
I haven't. I've said hello to that fellow.
Yeah, I see him every day. Yeah, he is quiet out there. Too quiet. I'm Joe Kernan along with Andrew Ross Sorkin. Becky is off today, and as we said, the futures are showing a little bit of pressure. We do have some interesting things coming on the docket today. The minutes from the Fed, and we have NVIDIA. Has there been any stock that maybe had more to do with this incredible rally that we've seen? Check out the shares right now. The company's quarterly report after the bell today, and looking for some big numbers there, like revenue rising like 800% or something. I said 7 times. I mean, amazing performance as AI has taken the world not only by storm, but by surprise to some extent over the past year, I think. I told you. When was I a stockbroker? I mean, it was a while ago. You might not have been born. I bought something called Symbolics. Because it was going to be. Was I early?
You've mentioned it
SMBX.
before.
I remember it.
You've mentioned it before.
Was I early? It doesn't exist anymore.
Well, then you were too early.
I was too early for my clients. And changes ahead for the Dow Jones Industrial Average. Walgreens is out. Amazon going in. It's going to happen on Monday.
Okay, meantime, check out the price of Bitcoin. Just about to cross the $53,000 level, but it is now trading lower today at $51,318. Also, Ethereum did cross over the $3,000 level for giving back some of those gains. All this coming a month after the SEC's spot Bitcoin ETF decision. And joining us right now in an exclusive interview is Galaxy Digital CEO Mike Novogratz. Mike, it's great to see you. There has been some talk about whether there'd be consolidation at this $52,000 level. Also, just about what's about to happen or not between the halving and everything else, and what kind of interest we're really seeing from the institutional space. Given where you sit and actually the institutions that you're talking to, where are we in that process?
Listen, we've come a long way fast, both in U.S. stocks and in crypto. I mean, crypto, it's almost felt too easy, right? You know, we've gone up almost every day. And so it wouldn't surprise me if there's some consolidation. Right, trees don't grow to the sky. But I think the big story is we've now opened up the institutional, really the RIA community, right? $45 trillion of wealth are managed by brokers. And, you know, we've got baby boomers who own most of the wealth in America, and they're getting their first easy access to Bitcoin. And you're seeing it through these ETFs, the massive growth in a very short period of time in this whole ETF complex. And I don't think that's going to stop, right? Last night we had $135 million of inflows after that slowed down from 400, 350. Paul Tudor Jones taught me early on in my career that prices get set on the margin, right? And so when we've got more buyers and sellers, prices go up. And I see a kind of a constant, these are hodlers as well, right? These are guys that are buying, put it in their portfolio and hold. They're not traders. And so the ETF buyers in general that are coming through these RIA channels, I think are taking supply off the market. So I still see Bitcoin ending the year a lot higher. That said, could we consolidate around here for a little while? Of course we could.
Let's just talk through the sort of dynamics of this RIA situation, which is a number of these institutions still have to get approval to do this. So how do you see that playing out in terms of just, you know, how many advisors can actually recommend Bitcoin as a product today versus how many will be able to do that in 6 months from now?
I don't have a perfect answer, but I would tell you at least double in 6 months, right? There are big channels that still aren't turned on, that we know they're gonna get turned on, right? We're in conversations with them. These are the big platforms. And like, there's an inevitability to it. Why? Because their customers are calling and bitching at them and saying, we want to buy Bitcoin with you. And so then the sales guys who get paid for selling stuff are screaming at their bosses. And so I'm certain it's going to happen. Like, this is not, it might happen, it is going to happen. It just takes time. These organizations are very conservative in general. And, you know, crypto scared the heck out of people 18 months ago. And so there's still scar tissue. You know, it's surprising that we have a approved, U.S. sanctioned Bitcoin ETF, and it's still very difficult for a lot of crypto companies just to get banking services in the U.S.
So many of these folks are hodlers, as you like to call them, as I think the industry likes to call them. When do you think we get to a point where people actually are buying and selling this product?
Well, listen, there is a trading community, right? Like, what people forget is, if you're young, it's not been difficult to buy Bitcoin, right? You get it on your Square app, you get it on almost any app, Robinhood. And so there's a whole universe of people that have bought and sold that will continue to. And hedge funds broadly, I mean, they don't buy and sell daily unless they're quant funds. But, macro funds will get in and then they'll get out just like any other macro asset. You think about gold, every macro trader I know has been bullish gold, but I bet you every single macro trader you can talk to has both bought and sold gold 4 times in the last 6 months.
If I asked you to make the downside case for Bitcoin, what would it be in your mind?
45,000, 42,000.
And what would get you there?
It could be some regulatory, kerfuffle. It could just be the market got a little long and you get people scared. I don't see that as a high probability, but we broke out. You can just look at the chart. We kind of broke out from 45, and so pushing through where you broke out from happens often in markets. It's not supposed to be easy to make money. You got to get scared a few times, and that's what's been so impressive about the real core Bitcoin community. Like, they just take the pain and buy more. I mean, there's such a belief system around this asset. It wouldn't surprise me if something happened that we're not paying attention to.
So Tom Lee was on the broadcast earlier this morning and said that he thinks this could be at $150,000 a Bitcoin by the end of the year. What do you think?
When markets get new buyers and start breaking out, it's hard to have a price prediction. I do think we will test the old highs, in a relatively short period of time. And if you take out 69,000, usually you don't go right through the first time. You'll touch them and you'll come all the way back, and you'll be mad you didn't sell something, and then it takes off again. But once you break 69,000, listen, it could measure to 150,000, right? 125,000. Again, what would have to happen? The Fed finally pivots and starts cutting rates, right? We continue to have fiscal irresponsibility.
Let's go back for a second. How correlated do you think that? I mean, it's funny you said that, because there's a lot of folks who think this is correlated to what the Fed is doing, but then there have been periods of time where it has seemed completely unrelated.
Yeah, listen, there's 2 stories with Bitcoin that always happen. One, it's a macro asset, and the second, we're early on in the life cycle, so there's an adoption cycle. Right now, this is all adoption. This is new buyers coming in and being told the big picture story, that you need to have this in your portfolio because we've got fiscal irresponsibility that's not going away. And this is a hard asset. And more people are believing, despite Jamie Dimon, despite Elizabeth Warren, that this is a hard asset. And so that's what's driving it now. But it's still a macro asset. And so in the same way, gold hasn't had a great run, partly because Bitcoin substitution, partly because, listen, it's been harder to call the U.S. government, the U.S. economy, right? The Fed really gave us the sense that they were going to be cutting in March, and now they're not going to cut in March. And
Did they, though, Mike, that's the other thing I wanted to talk to you. I wanted to talk more macro with you, which is, did the Fed give the wrong signal, or did the market, if you will, just read the wrong signal?
If you go back and read Powell's comments from 2 FOMCs ago, it's surprising they got surprised by the strength of the economy and how inflation hasn't rolled over as fast. He expected to be cutting in March. I mean, I've been reading these things for 25 years. That was a bullish Fed governor, a dovish Fed governor. And listen, I think they're smart. The data changes, they change. And so now I still think we end up getting, rate cuts. The market's now pricing in kind of what the Fed dots are. And so you probably start seeing rate cuts just a little bit later. But that will give Bitcoin, I think, some juice.
What do you take away from the earnings report? I don't know how much you focus on a Walmart, for example, but when you listen to Doug McMillan's comments yesterday about the possibility of deflation over the next several months, of the sense that there are customers that effectively are buying less each time they walk into the store, and what you think that really means for the larger economy?
Well, listen, I think it means that this election is going to be tough if you're a Democrat, right? That while the guys who sit in New York City and who have lots of assets feel pretty good about the world right now, right? Stock market's on the highs, crypto's on the highs. The bottom half of the country is running out of money a little bit, right? We had almost a UBI that came from COVID. That lasted a lot longer than we thought it would. And you see, I was talking to a guy who runs a huge hotel chain, and he said their business travel is still fine, but consumer travel is way down. And so I do think the economy is slowing. I do think Powell will cut rates. I think it'll also impact this election, right? It's going to be harder for Biden to keep saying, I got a great economy, if the bottom half of the voter base doesn't feel that.
You've been a Biden guy. What do you think about the sort of shift in sentiment over the past several weeks?
Well, listen, I have been very vocal, I think, for the last 18 months that anyone over 76 years old is too old to run for the highest office in the land. And so it's been frustrating to see this deterioration of support in a guy that really had an okay presidency. He's too old to be running. The American people's telling him that. And, there's a stubbornness. I always think we should give extra statues to George Washington as the only president who really left power willingly, or one of the few leaders in the world history that gave up power willingly. People get power and they just get drunk with it. And so it's frustrating. He could have, gracefully left and told people that a year ago. There had been a nice slate of candidates from the Democratic side. Right now we've got this bizarre election where no one wants either of the candidates. For the number one country in the world, it's sad.
So what is someone like you going to do?
Well, I publicly said I wasn't going to vote for anyone over 72, so I'm not. I mean, being a New Yorker, it's easy to do that because your vote doesn't really count. I would certainly rather Biden win than Trump, period. I do think Donald Trump is a damaged soul, and having him run our country, I think, could get really ugly. And so, but it's frustrating. I am literally going to a lunch today with people who are trying to figure out, is there any way to convince Biden to step down and
who? Oh wait, so hold on. Tell us about who's going to lunch.
I don't want. I just got invited, so I don't want to throw them all under the bus. But somebody invited me. It was a pretty senior guy in the Democratic establishment, and I thought I'd go.
And who would you like to see in that spot if that spot were somehow available?
Listen, I think any of the credible candidates would be Trump. Amy Klobuchar, Gretchen Whitmer, Gavin Newsom, who everyone thinks is so liberal. Gavin is actually far less liberal than he portrays himself as a California governor. I think any of those guys would beat Trump. Wes Moore from Maryland, a charismatic young man. People don't want Donald Trump as the president in general, but they also don't want Joe Biden as the president. And so we've never had a situation where two of the leading candidates are polling so horribly.
You have a thought about who would be better for Bitcoin?
Listen, the Republicans right now,
worth, I think, is in it these days.
Republicans. I'm lucky enough that I'm wealthy enough that I can vote for my soul and not my pocket. The Republicans would certainly at this point be better for Bitcoin. But it's interesting. This is a bipartisan issue, and a ton of Democrats on the Hill are frustrated. This has been Elizabeth Warren holding this up. She made a deal with Biden to get elected, for Biden to get elected. She put Gary Gensler in the SEC, and there's a small cabal. Sherrod Brown, who's got a very tough race. I didn't understand it. He could have just been neutral on Bitcoin, and instead he's got the whole, Bitcoin army going for his opponent. It was a strange hill to die on, but there's a small group of Democrats that have been blocking progress. And so, it would be disingenuous to say Republicans wouldn't be better for the space right now. That said, I do think any other Democrat, and even if Biden gets reelected, Gensler will be there. And I think the guys in Congress are going to feel the pressure to do something. And so I see the kind of regulatory logjam ending post-election, no matter who wins.
Mike Novogratz, thank you, sir. Good to see you.
Thanks, guys.
Good luck at lunch. Come on back with a report if you can.
All right, coming up, Fubo TV throwing the red flag on ESPN, Fox Sports, and Warner Brothers Discovery in that new proposed sports streaming alliance. The platform argues that the joint venture would result in extreme suppression of competition. Does Fubo TV have a case? That's coming up when Squawk Box returns.
Welcome back to Squawk Box. The futures right now, take a look at where things stand. About 61 points down on the Dow. NASDAQ looking to open up about 100 points off, and the S&P 500 opening down about 12.5 points, Joe.
Former Planet Fitness CEO Chris Rondeau has resigned from the company's board. In a filing yesterday, the company said his resignation is believed to be because of various disagreements since he stepped down from the CEO role back in September, and that included the decision to lay off 9% of the company's workers at the company's headquarters. He served as head of the company since 2013, but was ousted last year, and in a letter sent to the board, Rondeau said that the company was making large decisions that could change the brand or the model without a full meeting of the board and without moving any closer in the CEO search process. Planet Fitness is scheduled to report fourth quarter results tomorrow. And the shares of Solar Edge are tumbling. The company's 92-cent per share loss wasn't as bad as expected, but revenue was below what the street was looking for. And the guidance for the current quarter was much weaker than expected. The company makes inverters that convert solar power into usable electricity. The CEO said that they saw an abrupt slowdown in demand in the second half of last year due to high interest rates and lower prices, which saddled the companies with inventory. Solar Edge is cutting 16% of its workforce, closing some manufacturing sites, and exiting certain businesses to reduce costs. And you can see it is having an effect, spreading a little bit, but not too bad to some of the other solar stocks. Let's see, First Solar actually down 2%.
Coming up, we're going to talk 401k retirement plans and the tax advantages that go along with them, potentially in danger of becoming extinct in the next 10 years. We'll talk about that. Reminder, as we head to this break, you can get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime. We're coming right back.
Join Jim
Our next guest has a bold prediction. She says that 401ks will be gone within a decade as the government looks for additional sources of revenue to keep up with entitlement programs, ending tax-advantaged retirement plans. Join us now, Allison Schrager, Manhattan Institute's senior fellow. Good to see you this morning. I want you to explain your rationale, Allison, but I just looking at the retirement situation we have in this country, and I understand we have a $34 trillion problem in terms of total debt, but I don't see how, you know, trying to deal with one makes sense to pull the rug out from what is not a great situation in the first place. On the retirement picture is already troubling enough. So why do you think this is going to happen?
Well, I want to be clear. I don't think retirement accounts are going away, but the tax deduction, I think we can sort of see that gaining less favor. We're already seeing the last 10 years, there's certainly among academics been growing evidence that the tax deduction doesn't induce people to save more. It just gets people, it's really the automatic enrollment that gets people to save more. And generally what happens is when people do save more in their retirement accounts, they save less elsewhere. So overall net savings doesn't change. So what we're seeing on the left as well is a lot of discomfort with the 401k plans because the benefits largely accrue to the wealthy. And now we're seeing as well more right-leaning economists also being questionable about the 401k because they're saying it doesn't get people to save more anyway. It is tax advantage. I mean, it's not tax. A lot of people seem to think that it's tax-free. It's not. You put the money in, you do pay taxes when you take it out, although you do save on capital gains taxes. And even that is estimated to be almost 1% of GDP. So as we're looking more to revenue, particularly in the next 10 years when we start having to pay more for entitlements, it just seems like an obvious place to start, I think, for a lot of people. I'm a little, honestly, more skeptical. There are still things I like about the 401k, mainly the penalty that keeps people from saving or withdrawing. But there's certainly, I'm seeing a movement on the left and the right to say, you know, what are we doing this for? We need revenue. This is a good place to start.
If you don't want people depending on the government as they get older, and you know, so don't touch entitlements, and make it harder for people to have a bigger nest egg. I don't understand that. I would think that you would. I mean, because the compounding of money is so much quicker. That's why people buy annuities. Anything that's tax deferred. The nest egg that a person has when they finally approach retirement is going to be higher if it wasn't taxed as it was accruing each year. So it seems like you're just putting more strain on entitlements when some of those entitlements are what you should be looking at. I mean, if you really want to fix a problem, I don't know why you do it with 401k. I would means test entitlements.
Well, I mean, if we really want to do this right, we probably would put individual accounts be a bigger centerpiece of our retirement system. But the entitlement system we have is incredible, I think, as we can see, incredibly popular, and people will not tolerate cuts to it at all. And that's going to be putting a lot of strain on sort of our fiscal situation. So I think isn't that people don't want people saving for retirement. It's just that I think growing evidence, the tax deduction doesn't really induce people to save more. So maybe we could use this as another source of revenue that would be a lot more politically palatable than just like a bigger tax on income.
So even if you were to do entitlement reform, I mean, I don't know many people that think that we can get around it eventually. Why can't you do it when it's politically unpopular for people that are retiring in 2 or 3 or 5 years, but why not change it for people 20, 30 years from now?
I mean, as I said, like all of us pension scholars would love that. We've been sort of shouting that for years. It just isn't, I mean, I think we can even see in this political campaign, even discussions of increasing the retirement age for people my age is sort of become just sort of politically toxic. So, I mean, there's a lot of things we could do that would be better, but they've just proven impossible over the years. So I think this is why ultimately, you know, the 401k doesn't seem to have the same fan base that sort of that the Social Security system does, or even sort of corporate tax rates do. So I think this is why this is looking like a likely target.
Well, it's not going to help. Obviously, it's not going to solve the problem. So what will solve the problem? How are we going to pay for all the non-discretionary things that we're going to pay for? Where should, if basically if the tax rate is above 50% in total in many places for many people around the country, what would advocates for higher taxes think is a fair? Is 70% okay?
Well, I don't think anyone who says 70% is fair is advocating that, is thinking because it's fair. I think they're being more punitive. I was emailing with one of the people who wrote the paper, who, as I said, is a conservative economist, Andy Biggs, and he was like, it's not that I want higher taxes. He's like, I just think that getting rid of the 401k tax deduction will just be less distortionary than other things we could do. I'd rather see this than a 70% income tax.
Yeah, but how much money are we talking about?
Well, honestly, not enough. It's, I said, like 1% of GDP, but it is a start. And, at least I said, I think the thinking is as well, is at least tied to the retirement system. So it then goes back into entitlements. So, I mean, I said, like, if I were in charge and I could completely reform entitlements, this is not how I would do it. It's just, as I said, like, with the tax system we have, with an entitlement system that seems completely intractable and unable to reform, this just seems like the least bad option.
Okay, all right, interesting. Alice, we'll see whether that does come to pass. I don't like change, just of any kind, basically. So I guess that's why I'm resistant. But where would we be? We'd be,
It's less change than the alternative. I guess that.
Yeah. I know. All right, you'll see someday. So change is, this makes me anxious. Thank you. I know you get anxious with change at times.
I'm not that change.
You like?
I'm cool
because you like progress. And progressive.
Yes, I think I know.
Right.
I know other
Progressive
people
ideas.
who don't like change as much. Coming up, Fubo TV isn't playing around when it comes to streaming on sports, and it's now launching a lawsuit to block the alliance of ESPN, Fox, and Warner Brothers Discovery. We're going to see if the company has a strong enough case to take on these titans. And Apple's Vision Pro making big splash here in the U.S., but now the device showing up in one place it shouldn't. Find out where when we come back. Xbox Fubo TV is now suing Fox, Warner Brothers Discovery, and Disney as it aims to block the launch of a joint sports streaming platform from the media giants. Joining us right now more on the antitrust landscape is David Balto. He is the former policy director at the FTC and former trial attorney in the antitrust division of the DOJ. He's now at his own firm. Good morning to you. What do you make of the lawsuit, and what do you think the chances are that they will prevail?
Well, yeah, Joe just talked about how anxious he can become. Well, if he's anxious over what he talked about earlier, he's going to need a giant anxiety pill if this deal were to go through. There's a clear record here that ESPN bundling tactics have significantly raised costs to consumers, and allowing them to effectively merge with these other firms is going to force consumers to pay through the nose for the programming that they desire.
Well, I was already anxious about this. I mean, you know, I work for Comcast. I didn't like this already. So you nailed it. Very, very anxious about it. I don't like it. I mean, you put it's like collusion. Put all these big companies together. I don't think the league should. There's a reason they didn't tell any of the leagues what they were talking about either, David.
Right. And look, the current antitrust enforcers have taken a really careful and critical look at bundling and how bundling raises the cost to consumers. We need ESPN, it's essential, but once you take ESPN's market power and you bundle it with other products, it significantly raises the cost of those other products. Now, the FTC has taken a tough stance on this in the pharmaceutical industry and come out with a policy statement against that kind of bundling. I think this is a case that has real legs to it, and a court should block this deal in order to protect consumers.
David, let me ask you a question, though. If you look at the media landscape today, it is quite large. It has lots of incumbents, but also lots of challengers, well-heeled challengers in the form of technology companies like Amazon and Apple, and so many others that are coming into this space. You could argue that some of the legacy companies are actually in trouble. I mean, genuinely troubled as a result of what's happening. How much should that be part of the calculus here?
That's not a big part of the calculus. The calculus under the antitrust laws is protecting consumers so they don't have to pay more for services that they need and desire. And the record here is crystal clear. ESPN's bundling tactics in the past have significantly raised costs to consumers. This merger will just be more of the same. It's like telling an 800-pound gorilla, here, you know, eat tons of ice cream. This will make life better for us. No one's ever better when a gorilla goes from 800 pounds to 1,000 pounds.
So what is your gamble then? You think this deal is not going to happen? You think this will never come to fruition?
I think this deal is going to be challenged by the Justice Department, but the lawsuit is there too to make sure a court gets engaged immediately and you know, takes the right actions to protect consumers.
Let me pivot for a moment. I'm curious what your thoughts are on the other big deal of this week, which was Capital One and Discover Financial. How do you think regulators are going to look at that? We were talking about the op-ed in the Wall Street Journal this morning about it.
They're going to be extraordinarily skeptical about it for two important reasons. Capital One and Discover are important head-to-head competitors in the consumer end of the high consumer end of the market, the consumers who care for cash back. So they're direct competitors there. There's no way to avoid that. More importantly, Discover is an important maverick in the cost to merchants, the merchant discount. And by being acquired by Capital One, that discipline on the merchant discount part of the market would be eliminated. This is a lose-lose situation for consumers and will get intense scrutiny by the Justice Department.
David, you don't think there's any argument to be made that Visa and MasterCard effectively have been a duopoly, with American Express out there as well, and that they could use some competition?
They do have competition. The question is, what will happen to that competition from Discover if its parent is Capital One? And what I'm suggesting is its incentive and ability.
You think that Discover is a viable competitor right now to Visa and MasterCard? Hardly. How many people do you know with a Discover card?
lots, and there should be more. And to the extent there are anti-competitive practices by Visa and MasterCard, the Justice Department should go after them. But they are an important rival in the market. There's important head-to-head competition between Capital One and Discover, and that would be lost if this merger went through.
David, it is nice to see you this morning. It's always fascinating to get your insights, and we appreciate it. Thank you.
Good. Thanks. Take care.
Coming up, Apple's Vision Pro making a big splash when it debuted a couple of weeks ago. The device is only available in the U.S., but the product has found its way into one blacklisted country. That story when Squawk Box returns.
CNBC.
It's been just over 2 weeks since Apple's Vision Pro headset officially hit store shelves. And despite the tech giant saying it would only be available in the U.S., the buzzworthy product is finding its way onto the streets of a country in which Apple says it's no longer doing business. Eamon Jevers did some digging into how that's possible as a part of a CNBC's new series, The Jevers Files. Hey, Eamon.
Hey there, Joe. You're right. On February 2nd, Apple launched its new Apple Vision Pro at the company's flagship store in New York. The company said the product would only be for sale in the United States, and because Apple paused its sales in Russia to protest the invasion of Ukraine nearly 2 years ago, You wouldn't expect the Vision Pro to be for sale at all in Russia. But a CNBC survey of Russian tech blogs, online sites, and channel checks in Moscow reveals that the Vision Pro was readily available for sale at retail outlets in Moscow within days of its launch in the United States. The fact that the hottest new American tech product was available with almost no delay in Moscow before it is officially on sale in London, Paris, or Munich is a high-profile demonstration of the difficulty of unraveling the global economy, even in an era of war and conflict. Asked about Apple Vision Pro sales in Moscow, an Apple spokesperson emailed CNBC, "As you are aware, Apple Vision Pro is only available at Apple retail stores in the US." In the Russian capital, that statement may reflect Apple's intent, but it doesn't square with reality. A retail outlet known as Restore, which was an official Apple reseller before the invasion, is offering the devices for sale now. But prices are high, as much as 50% more than in the US. Prominent Russian tech blogger Sergey Romantsev recently demoed the device walking through Moscow and says the Vision Pro sells for thousands of dollars more at stores there. Romantsev says he actually bought his device by pre-order in New York and had someone fly it to Moscow so he could demonstrate it immediately after release to his more than 1 million followers on YouTube. Romantsev predicts the high prices in Russia will keep demand down for Vision Pro in that country. Apple sales continue because the Russian government wants them to. In 2022, the Russian Ministry of Industry and Trade issued a document permitting Apple products to be imported to Russia, even when official supplies are banned or suspended by the manufacturer. In Russia, that rerouting of supply chains is known as parallel import, and it's part of the reason why nearly 2 years after the invasion and Apple's pullout of Russia, Apple products and a wide range of other luxury goods are still available in stores there. Back over to you guys.
I'm just excited about the Jabbers files. How often are we going to see something like that, Eamon?
You know, it's a new brand that we're using, Joe. It's going to be featuring sort of exclusive reporting, stuff that you're going to see on CNBC that you're not going to see anywhere else. And that's hard to predict how often you're going to get that stuff. So we're going to use it as we can to spotlight those things that we have that are exclusive to us and to CNBC.
I mean, I'm swelling with pride. Is your mom watching? Did you look behind you? Did you see the branding and stuff that you got?
I did see it. Yeah, the team worked hard on that yesterday, actually. They were running around making sure all the screens were all set up. Kind of cool.
I think it's very cool. So that's
the Kernan files could work.
That's taken. No, that's taken.
Is it?
Chronicles, someone just said. Chronicles.
Yeah, or the Kernan report you could do. That also would work.
Deal book is taken.
Deal book is taken. Somebody got the center of the square on that brand.
Damn, all the good stuff's gone. All right, Eamon. Interesting.
How about Kernan Listens? Brand.
Yeah, that's a tough. That would be
after
nobody would believe it.
Nobody would believe it.
A lot of stuff Charles was saying, I didn't want to say anything, but I was just going to say, homie, don't play that. No, I'm not.
That's hard.
I'd like to. I'd like to be a better person.
I'd like to be a better person.
I'd like to be a better person.
I agree,
Eamon,
Joe. But I would also like you to be a better person.
it's getting late in the game. No, I have time.
Fair enough.
Thanks, Eamon.
Yep, thank you.
Eamon. Congratulations. When we come back, some of this morning's top stocks to watch. Squawk Box come right back after this. Welcome back to Squawk. I want to get to Dom Chu, who's got today's big morning movers. What's going on, Dom?
All right, so Andrew, we're going to start off with the mover getting a lot of attention in housing right now, and that's luxury home builder Toll Brothers, which is up roughly 3.5%, just around 20,000 shares of volume. It reported quarterly profits and revenues that both topped consensus estimates alongside an expansion in profit margins over the same period last year. Now, Toll Brothers CEO Doug Yearley says that demand for new homes will remain strong in 2024, given a stronger jobs market, better consumer sentiment, and continued low levels of housing inventory. So those Toll Brothers shares up 3%. Elsewhere, stocks are fractionally lower in the housing market. A quick check, by the way, on shares of Uber Technologies, which is just down about 0.25%. The ride-sharing and transportation logistics company is just about trading on 70,000 shares of volume. Uber is going to be added to the Dow Jones Transportation Average effective Monday, February 26th. It's going to replace JetBlue. That news was released alongside Amazon's addition to the Dow Jones Industrial Average, which will replace Walgreens Boots Alliance on that same day. And we'll end with a check on shares of computer chip giant NVIDIA, which is down roughly 2% or so right now, just around 1 million shares of volume after a 4.5% drop yesterday. Earnings are slated to be released after today's close, and expectations are pretty high going into the print after a blistering run over the last year, just up about 229%, driven by optimism over artificial intelligence, chip demand. Options prices are indicating what could be a move of 11% up or down in that stock post results. We'll also get a quick check now on some of the other chip stocks in the market right now ahead of those results. Names like NVIDIA, Advanced Micro Devices, Broadcom, Intel, and the semiconductor ETFs are all a big focus today. Whatever NVIDIA does, guys, could reset the entire narrative on semiconductors, Joe. We'll see what happens with that one. I'll send things back over to you.
Don, did you say Walgreens was booted from the Dow? Did I hear you say that?
I didn't say that. I don't believe I said that, but that would have been interesting. It would have been very.
You didn't think of it. I didn't either. Someone tweeted that.
Listen, here's what I would say. I was very
Greco thought of
punny.
it, so now I'm embarrassed to say it.
I was very punny earlier on in my career. I think a lot of my editors have
punny.
Yes, try to get me away from doing those puns. So.
Okay, thanks, Tom. Join us to talk markets as we approach the opening bell on Wall Street. Catherine Rooney Vera, Chief Market Strategist at StoneX, and the notes I read, they spoke to me today, Catherine, and that is that we got a little, maybe everybody got a little ahead of themselves, and the perfect scenario that we were envisioning at the end of last year, we sort of thought that was going to happen this year until last week, and now anything that sort of takes away from that makes risk assets, it makes it a little bit questionable. We're not in the same place we were a month ago.
Kernan listens. Yes, that was my thesis coming into 2024, and I think it's panned out pretty nicely. That the trajectory, the disinflationary trajectory, combined with strong economic growth, the market was assuming almost as a certainty, Joe, that would be the trend for the entirety of 2024. And my take was, look, complacency, euphoria is really high. Let's hedge our bets with defensive positioning, with put options. You can protect your tech position, your S&P position for 12 months at the money for less than 4.5%. Made sense to me.
Yeah, in a couple of things you said. What if disinflation is transitory? That's a thought.
What
right?
if?
Right?
Yeah, I think.
Yeah, and it's. We quickly said, oh, the Fed orchestrated the perfect soft landing. The economy can stay strong, and inflation can come down to 2%. That's never happened in the history of the world, and we're all saying, yeah, wow, these guys are geniuses, and everything's great. I mean, what were the likelihood of that scenario? I mean, we need to look back.
Soft landing is historically improbable, that's for sure. But things can change. So I think the zeitgeist, the market idea was of this ideal landing that is a historical improbability, considering the pandemic to have launched us, Joe, into some new economic reality, when in fact, from my perspective, it's an aberration. So we're living with the repercussions of that aberration from reality. And what we saw in the last inflation data was that goods prices are coming back up again. So we got a broadening out of inflation. So look, I think that the risks coming into this year were underpriced. I still think they're underpriced. There's a good chance of a soft landing occurring. What we're seeing right now is not that. What we're seeing right now is a reflationary scenario where the economy is growing way above potential. Reflationary scenario means inflation creeps back up again because economic growth remains strong, risking the multiple, while the other risk is on the other side, Joe, and that's hard landing, that's recession, and that risks earnings. So there's underappreciated risks right now in the market.
And we could have both, because the reflation could cause the Fed to orchestrate a harder landing. You also point out the possibility, I mean, China cut rates significantly. What if China rebounds? No one thinks it's going to. Suddenly we believe, you know, we accepted China doing like 11% every year forever. Now we think they're never coming back. They could come. That country could come back, and that would be inflationary.
Well, that's a risk that people should have top of mind because no one's talking about it, right? And then the other risk is we have an election coming up. If we do get a Trump too, that could also be inflationary, you know? So I think that there are things that, you know, the mainstream, we analysts are not talking about that I think are underappreciated risks, and we mentioned several of them.
Right. It might be inflationary, but we also might have a southern border again. I mean, I'm kidding. I'm not going to enter into any political commentary.
No. I'm an economist, but just looking at the numbers, I think we have to be cautious on the inflation trajectory and this anchor bias, Joe, that the market has fully discounted.
Great. Very good, Catherine. Thank you.
Thank you, sir.
Good to have you. I didn't say anything all day. You had all these guys on with the Kraus and Novogratz. I didn't say anything all day long. The entire time.
So you felt like you
So I just threw one thing in. Maybe
seconds.
a border. If you're a country, how about a border?
Nobody's disagreeing with you. Who's disagreeing with you?
Someone who's sitting in the White House.
Make sure you join us tomorrow. Squawk on the Street begins right now.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer. Almost as David Faber here at Post 9 of the New York Stock Exchange. David has the morning off. Futures a little jittery this morning amid the ongoing sell-off in semis, meaning NVIDIA tonight is key. Meanwhile, Palo Alto, Vertiv, and Teladoc cutting guidance. Our roadmap begins with NVIDIA out after the bell, a day after the stock saw its biggest drop in 4 months. Palo Alto is plunging more than 20% pre-market as they lower their full-year guidance. And then later this hour, a CNBC exclusive with B of A Chairman and CEO Brian Moynihan. Let's begin, though, with NVIDIA under some pressure again ahead of its big earnings tonight after the stock suffered its biggest one-day drop in market cap during yesterday's session. And last night on Mad Money, Jim did reiterate its bullish stance on the company by comparing Jensen Huang to one global superstar.
Jensen is the CEO equivalent of Taylor Swift. I'm not joking. I'm dead serious. Whatever happens tomorrow, do we really think it's make or break for NVIDIA, up or down, yay or nay? No way. Nobody's about to call a top in Taylor Swift, so why the heck does everyone seem to want to call a top with NVIDIA?
This morning, Jim, you say he's not sweating the quarter. He's working on something more long-term.
He's sweating the March keynote, which is something that he does a deep dive every year. This one's going to be, there'll be a virtual, but you have humans. And that's what he thinks about, which is a 5 to 10 year plan. Now, he has to deal with the quarter because he is human. Taylor Swift has to deal with her appearances in the box with Kelsey because she's human. But what really matters here, and then people have to understand, is that if you think that AI is a short, if you think it's all, if you think it's degenerative AI, if you don't think that there's really anything to it, then you should sell. Because NVIDIA is what makes it all happen. I have said own it, don't trade it. And the reason I've said, the only other stock I've ever said that about is Apple, because I need to restrain myself. I find myself there was someone in the journal yesterday who quoted me as saying in 2017 that he bought the stock. And I looked it up, what did I say in 2017? That's when I named my dog NVIDIA. So it's like, it tends to resonate. But I think it's really important people understand that this is not nearly as important for Jensen as it is for everybody else, this National NVIDIA Day. And, Colette Kress, who's the amazing CFO, will come on. It'll be very straight. There'll be a line which says that China's a problem, and if we don't get China by 2025, then we're in trouble. And tomorrow you'll hear that's all people say. The reason why it's down is because they said China trouble, because that's what happens to the stock. I caution to say people, you have to understand there's something between plunge and explosion upward. And that's what happened in the second half of last year. And I think that's, they're not going to catch this thing.
Yeah. Can't you be a believer, though, in the long-term story and still have your eyes open to digestion by
Yes.
hyperscalers?
Yes.
Isn't that part of the story tonight?
Yeah, and I think if you go to Jensen has many partners, but one of the more I would say tempestuous one is Snowflake and Frank Slootman, where Jensen went to the Slootman Festival. Everyone has a festival. We should get festivals. And one of the things that happened was that Jensen came in peace, as he said. And Slootman basically attacked him, saying, listen, you're charging too much for these things, and people are going to rent this rather than spend the money because they don't really know what they're spending on. And I think that's true for a lot of companies. They don't. They want to get them. Sovereign nations, what do sovereign nations know? They take a big chunk of these. But I think there was someone who said, listen, maybe there's too many H100s out there. Well, that's why it does the H200. But in his mind, he's working on the H500. And that's what people don't get. That's why I compared him to Taylor Swift, who drops an album while she's doing an album, which you can buy in vinyl for like 3 times the cost. Right. And I just think that that's what you have to view him as. You have to view him as, it's just a continuum. Like, I remember when I went to his office, and there was this thing behind me, and it was calculating furiously. I said, what's that? He goes, well, this is how fast you have to go to land a man on Mars. And when you get really close to Mars, you have to stop, and then you have to take it back up. And I got to calculate exactly what would cause a soft landing on Mars. I said, well, why are you doing that? He says, well, why wouldn't you do it? Well, that's him. I mean, this is a man who has dog robots picking up Jell-O and then giving them treats when they get it. Right. That's the man. So he's not thinking about the court.
The implied move tonight, about 11%, would be one of the biggest market cap moves ever, maybe behind Meta's day the other day.
I am prepared for, Palo Alto. I am prepared for people to say, well, it was the digestion. It looks like that this Grace Hopper may or may not be big. China, they need to be able to sell the H200. Gina Raimondo, Commerce Secretary, doesn't want them to. Amazon has too many, and sure enough, Alphabet's developing its own. I mean, these are all, let me give you the, I mean, I can write this. I can chat GPT tomorrow's trading on NVIDIA. But I would come back and say, remember, this is a company that is doing and thinking on a different plane than the rest of us. And I wish they would do what Walmart did when Doug McMillon said, listen, we got to split it 3 for 1 because people want to share. Then I think NVIDIA wouldn't be so nouveau riche.
That's interesting.
NVIDIA stands for nouveau riche data.
It's French for nouveau riche.
Yes.
We're going to talk Walmart later on. There is one last thing that JP Morgan points out today, that if the guidance is too good, the street, strangely, will sniff out, well, maybe supply is getting better, and then the inventory correction comes. Is that possible?
Look, I think that to be smooth here is to be smooth on the Apple iPhone 4, Apple iPhone 5. I mean, he compares it to an iPhone moment, and that's both good and bad. iPhone moment, iPhone changed the world, but then we have people who say, look, the best is behind it already, and that's something we put on air all the time, when the stock was at like 7. So you have to understand that even though this is enterprise and not consumer, there's always going to be someone who says, look, this is the top, and it's all fanciful, and we're not going to buy the Eras tour from this guy.
Let's turn to Palo Alto Networks this morning, down on its latest earnings results as well. Jim, 3 downgrades today. Piper says, oops, I did it. They did it again, calling it their 3rd straight disappointment.
That's true. Now, I think Nikesh Arora is basically doing, and I'm going to quote this because I went to it with him and he didn't seem to disagree with it. He's offering instead of doing a la carte sales, he is offering a price-fixed 21 category meal. In other words, he's bundling. Now, no one was ready for this, okay? And no one was ready for the federal contract shortfall in the next 2 quarters not be good.
Which they had staffed up for.
Which they had staffed. We downgraded the stock for the Travel Trust. And I shouldn't, I've told everybody I'm not supposed to give, I don't want to give anything away, but we have a big annual meeting on Saturday. We're upgrading today. Because everyone else is downgraded, we're upgrading. I want to run into the fire on this thing because I think Nikesh realizes that you can't nickel and dime all these different pieces anymore. You have to offer a suite. Now, he used a word which I think he wanted to take back very badly, which is he said there's fatigue. What he meant was that there are so many people, salespeople, in selling individual products that people are like exhausted and can't come up with the ROI. They're not fatigued in the sense that they're not going to buy any cybersecurity anymore because they'll all be inundated by, if you were to issue a statement today saying, listen, you know what, we're not buying any more of this, like Chinese hackers, Romanian hackers, Russian hackers, Venezuelan hackers, I would say even, maybe Pakistani hackers would be after these guys. You can't do that. You cannot possibly stop spending. So the idea that the fatigue was wrong. You're giving up the game for this year. Now remember, this top 5 performer S&P, top 5 performer last year S&P, and Nikesh Arora is a visionary. And to be a visionary, I have to tell you, I want people to go to the conference call because it is brilliant. At one point, he says to Brad Zelnick, who hated the stock much lower, I will point out. First of all, he says, he's talking about platformization. That's what he's going toward. And he was only introduced 5 years ago when you didn't believe us, but now we got to worry about consolidation. And he does say that there is, to this one he says to Joseph Gallo from Jefferies. I love this. This is a short-term hiccup. I know you guys would love life that was linearly nice in quarters and moved up in a beat and raise percentage. I'm trying to get this done in the next 3 to 5 years, where we even become bigger and longer in platform and cybersecurity. And I say that, it's going to be down 100. I'll see that, and I'll raise it by the fact that Nikesh Arora is no longer a billionaire.
There was good sound with Nikesh and Jim last night on Mad Money. Take a listen.
There is no cybersecurity abyss. I think this is a reshaping of our demand curve so that we can grow faster in the longer term. We want to go ahead and platformize our customers. We want to be able to execute with them as they want right now so we can drive this business to a bigger number in the future years.
Interestingly, Jim, today the president is expected to sign an executive order looking at preventing cyber attacks in the nation's ports, which are increasingly controlled online.
Well, these are the things that only will go with Palo Alto. He does want a suite. He's up against CrowdStrike and a lot of things. I don't think he's trying to take it down 100 to be able to make some record. That's facetious. But I do think this. I think a lot of people feel like the model was working really well. You were a $100 billion company. You were number one. Why does the number one company have to commit suicide? And the answer is what he would say is no. We have to be able to take this thing into a price fix meal. We can't just keep getting nickel and dime by CrowdStrike. So this is the end of that. We're going to go for suite, not unlike what Salesforce has or ServiceNow has, of which, by the way, they provide a lot of the cybersecurity ServiceNow, to Workday. So he's going towards that. No one was expecting it, candidly. A lot of people felt, well, wait a second, this is just gold. Well, you know, he's not sitting on a gold mine right now, but he could later.
We're going to watch it today, along with a lot of other tech names. In the meantime, I want to get to our Leslie Pickard this morning. She's down in Miami with a very special guest today. Morning, Leslie.
Hey, good morning, Carl. Thank you so much, and thank you to Brian Moynihan, the chairman and CEO of Bank of America, for joining us from your financial services conference here in Miami. Appreciate your time.
Thanks for coming down, and it's a great group of investors and companies, and the team's done a great job pulling it together. So.
Yeah, the event is great so far. You just came off of your fireside chat where you talked about some big macro themes you're watching. You say that the consumer is really kind of firing on all cylinders, that there's a lot of strength there still. They're still borrowing. Activity is high. But you juxtapose that to kind of the commercial sector, and you see that kind of moderating a little bit. And as we look ahead to the Fed minutes later today as kind of a news peg here, I'm curious what you think all of this means for the Fed's kind of decision-making as it pertains to monetary policy.
So I think if you think about the consumer, the consumer is still spending more out of their accounts at Bank of America this year versus last year, about 4 to 5%. Last year at this time, that would have been 9 to 10%. So it's slowed down, and it's consistent with a lower growth, lower inflation economy. And that's good news, because the consumer isn't going south and is not spending. They have money in their accounts, their capacity to borrow. There's a lot of concern about the aggregate debt levels, but if you actually normalize them for the growth in the economy, they're kind of in the same place as they were pre-pandemic, so that's good. Commercial companies have to look at the world around them and everything they read, whether it's the wars and whether they could escalate, whether it's the Fed is going to hold longer, whatever the news of the day is, and you'll hear more this afternoon, or whether it's just worried about final demand. That's what's more concerning. So they're not using their lines as aggressively, which is an indication that they're not putting money to work quite at the rate, because it's more costly. The decision to borrow on your line now at 200 basis points spread over short-term funds is a 7.5% decision versus a 2.5% decision 36 months ago, 24 months ago. So they're going to be more careful, and that means that the investment rate has slowed down.
So putting this all together, there is this grand debate out there. I heard Steve Lee's been talking about this on the morning program on Squawk Box this morning, just about this idea of whether the Fed needs to cut kind of preemptively to make sure that some of these cracks that are kind of percolating under the surface don't come to fruition and push us into a recession. And others say, no, you need to follow the data. You need to make sure that you are, not being too easing in order to make sure that inflation is officially stamped out. Based on kind of your vantage point, where are you on that debate?
So our team, the research team, which is #1 in the world, has 3 cuts this year, 4 cuts next year, and they've revised theirs from 4 cuts down to 3 cuts. And that's this debate about whether the data that just came out in the last few weeks shows the economy and the inflation is coming down, but not quite at the rate people had hoped. And so they've got to have a clear path. The Fed's not being mysterious. They're saying we have to have a clear path down to the 2% target. We have to be well on the way before we cut. Now, the air potential is actually to not bring rates down and normalize soon enough. Just like it was not to raise rates fast enough, and you can hear the Fed governors and the chair talk about, well, maybe we didn't move fast enough back before when you saw signs of inflation. They have the same possibility, and so that's what they're wrestling with. Our view is that our team's view is 3 cuts this year would bring the economy back into sort of equilibrium at the end of 25 with a Fed funds rate in the mid, 3.5.
My colleague Jim Cramer has a question for you back in studio. Jim?
Yeah, Brian, what price of anything is down from 2 years ago?
I'm sorry, Jim, I didn't hear you quickly.
I'm trying to figure out what price, house, car, rent, what is down so that we should feel confident that the Fed should cut?
The end of the day is the pricing went up and wages went up. They just went up in 2 different cycles. And so the wage growth that occurred early in the post-pandemic cycle and the contribution from the government to them added a lot to consumers' firepower. The problem is then the pricing caught up with it. And now we're trying to get that back in equilibrium. So it'll take people get used to mortgage rates of 7%. Jim, you well know, because you're about as old as I am, so we've been around a while, that was what we used to think was a good mortgage rate. It's just that for 15 years we had no real rate structure, rate structure in the United States and around the world, and so people got used to lower rates. It'll take time to do that. That'll work itself through the system, and as rates normalize. The inversion of the curve has to be corrected. There has to be some changes made, but when you think about it overall, Jim, the reality is, yes, prices are up, but wages are up, unemployment's down, people are earning money, and so that's the tug of war that's going on. And they've moved the consumer to a different level of spending and capabilities. Will that hold is going to be an interesting question.
Yeah, but 12% mortgage for me first time, Brian, so yes, we are similar age. Yesterday, kind of an amazing tie-up, Capital One with Discover Financial. Is this something that you think should be investigated by the FTC because it might actually cut back competition in the credit card business?
Jim, it's far from me to look at somebody else's deal and reflect on it, honestly. Capital One and Discover have made a major transformative discussion. It will concentrate in the credit card business. We're an effective competitor, $100 billion in balances, and great opportunity among our customer base to drive more growth. So I don't worry about the consolidation from a competitive standpoint, but that's someone else to judge on whether they have feelings about it or not.
What does it mean for your business as a credit card issuer? Because this tie-up would make them the largest credit card issuer in the U.S. as measured by card loans outstanding at $257 billion. B of A has about $102 billion, so a sizable player there. But this creates a pretty significant competitor for you. How do you kind of assess the landscape if this deal does go through?
Well, at the end of the day, if you go back and look historically, after the MBNA transaction, Bank of America rose to the top of the credit card outstandings. We've been more cautious and direct on how we do it. We do it for our customers. We drive the business to be in affinity with our Bank of America customer base. We drive the business to have great credit underwriting. And in the world where we're talking about normalization of credit, we're talking about getting back to 3% charge-off rate. We underwrite to higher rate tolerance and higher loss rate tolerance in that. We're underneath that. So that's good news. So being the biggest is not necessarily what we want to do. We want to be the best with the best rewards product, Preferred Rewards, which is integrated with our consumer franchise. 11 million customers are 70% of the balances in our consumer business that are tied in Preferred Rewards through their card, their checking account, the mortgage, the home equity. And that is where you generate real economic value for your shareholders. So we never said we were going to be the biggest in any business. We want to be the best in every business.
But is scale important here?
It is, but the scale, our scale and their scale is not much different. When you look at operating costs, if I were a $20 billion issue, it might be concerning, but $100 billion plus, we did 4 million new cards last year. We're growing exactly the way we want. And, our balances grew 10% year over year.
You mentioned charge-offs. I want to pivot, if we can, kind of to what's going on in the regional banking world, because there has been, since we last spoke to you in Davos, a flare-up in that community with shares of New York Community Bank Corp. It's seen half their value evaporate this year. Another East Coast regional bank, Valley National, also down significantly. The concern there, once again, kind of this commercial real estate. And at this juncture, especially as the prospect of rate cuts are getting punted further and further down the road, do you think that the market is overreacting, or do you think there is a real risk here in commercial real estate, and that these flare-ups are going to just keep happening until something gets solved?
So if you look at the commercial real estate out there, loans out there, half are in the industry, half aren't, and half in the industry are more heavily weighted to regional banks, and that's where the concern comes up from our research team and others. But if you look at the underwriting, people forget that the underwriting standards, on commercial real estate in the late 80s and early 90s, when you had massive failures, have been fairly well regulated. And so as we look at our portfolio, is $60 billion on a loan book of $1.05 trillion, so 6%. Office is 2%. If you look at that office space, it was underwritten at 50% LTV, loan to value. Reappraisal, it's only in the 70s. For current appraisals on current properties that have been rated down, i.e. that we had concerns about the cash flow. So we feel very good about our portfolio. Will it be a constant question? Yes, because in the end of the day, what has happened in commercial real estate is evidenced by the trend in our company. When the management team took over in 2010, we had 130 million square feet of real estate. Today we have about 60 to 70. That's by densifying activity, concentrate, yes, less people. And so that change is going on. It went on with velocity before the pandemic, and then was accelerated by the pandemic and the work from home, a day a week, 2 days a week. So if you think about it, we all through that process only got about 25% of our floor space built to the modern environment that we have. Then the pandemic hit. Now we have people, if you think about it, if you do 4 days a week out of 5, that is a 25% reduction or 20% reduction in usage. So that gives you a whole nother configuration point. That's going to go on, and that's what's happening in the office space market, and that's what people are concerned about. The reality is it's a slow transition that takes place, and we feel very good about our portfolio. People forget that whether it's in the CCAR process and whether it's the SNC, the Shared National Credit process, or whether it's just how regulators operate together, ratings integrity is a critical part of what the banking system has. So all these banks have been going through CCAR and stuff.
The stress tests. 30
people going through the stress test have had constant review of their portfolios as to underwriting criteria, throwing it against a 40-50% downdraft of commercial real estate prices, and how do you charge off. And the last results, I think we were about 9% over 9 quarters. So think about that, with a 50% drop in prices instantaneously and no ability to work around it. So the banks have been pretty well regulated on this. It doesn't mean it won't be work. It doesn't mean it won't be workouts. It doesn't mean it won't be charge-offs. We took charge-offs last year. But the system is much more ahead of the problems than they were back in the late 80s and 90s when we had a last serious commercial real estate crisis. And when the regulators came in and re-rated whole portfolios overnight, that work in the top 30, 40 banks goes on every day now.
Brian, I want to thank you so much for your time. Really appreciate it. Great conversation talking about just the changing landscape in the financial services industry against the backdrop of your financial services conference here in Miami. Appreciate it. Carl, I'll send it back to you.
All right, great stuff, Leslie. Thank you. That's our Leslie Picker with Brian Moynihan. We'll take a look at futures here, get to some of the other names moving on earnings, including ADI and Toll. We'll revisit the great discussion with Jim last night between him and Doug McMillan of Walmart about inflation, particularly
right now,
food.
I'm loading the Philadelphia 76ers and the Flyers into my new Apple Sports app. I don't know whether you're able to.
Priorities. More Squawk on the Street in a minute.
insurance.
Got some news on Icon Enterprises this morning. New CEO Andrew Tenno is a portfolio manager over at Icon Capital, as the current CEO David Willetts moves to be CEO of Pep Boys. Also, financial update, intends to maintain their quarterly distribution. We'll take a quick break here. Opening bell coming up in less than 5 minutes. Don't go away.
Good morning, retail traders. Wishy-washy Washboard Jim is here. Doodle-doo. Nailed the bear flag yesterday. PLTR 2340. Definitely pulled back to my first support just now, off 1 penny. 2213. I had 2214 for PLTR. Hope everybody's having a good day. Yoko, Magnificent, Ricky, Subway, Organic, Oceanic, Johnny X, and the rest with initials. Randy. We have less than a minute already.
Let's get Kramer's Mad Dash as we count down to the bell.
Yeah, one of the most amazing companies is actually a SPAC, and the company's called Vertiv, and its CEO is Dave Cote, late of Honeywell. I'm sorry, its chairman and CEO is this guy, Albertazzi. I had him on, he's really fabulous. But this stock, had it been in the S&P, would have been the #1 performer last year. It makes heat rejection, power transfer, makes all the picks and shovels inside a data center. And last time I reported, and it was a great quarter. And they gave good guidance, but the guidance was too weak for some. This might be a precursor to NVIDIA, in the sense that this stock was at 65 last week on February 15. It's now down 10. There's nothing wrong with it except for the fact that it came in hot. Now you could say, well, wait a second. People who own NVIDIA are getting blessed here because the stock is getting clocked ahead of time. But just keep in mind, Vertiv, #1 performer if it had been the S&P, and somehow let
somebody got the clap.
It was an amazing quarter. So just expectations. And the long knives are out for the nouveau riche NVIDIA because no one can believe it could be go from 150 billion.
Pawn PAWN is down 25%. PLTR just hit the 200.
5 a week in recent weeks.
Well, I mean, Jensen won. Okay, so
SMCI is down 50.
the problem with those who think he's just kind of a cool guy is because they're missing the point. He is the Da Vinci of our era.
We're back at my support level.
Long and hard about what's going to appear in 2034, of which I hope he is still running the company. And the rest of us are peons. We're like Lilliputians, and we're going after him and thinking, well, you know what? Wait a second. Well, no, we're not even in his plane. When I've been out there, when he had me, he created me, and he said, hey, I'm Cramer. And he was like, it was better than me. He did a great monologue. I don't think people realize we are not of his world. So you can sell it, you can sell him. When you go through headquarters, he's saying hello to everybody by name. They don't even know who he is. And I just think that he's otherworldly, and that bothers people. He's everywhere. He's giving speeches. The speeches are incredible. I watch all his speeches. He just this morning comes up and he's got an announcement with Google about a relationship about AI platforms. Someone is going to say tonight that Google is oppositional NVIDIA. Well, then
Spy holding support.
Together, Google's Gemma optimized to run on NVIDIA GPU. This just came out a few minutes ago, and I'm just sitting here thinking, okay, go sell it. Make my
it's a key data point for the market overall. Of course, Jim, it's a good thing we have it because the week is sort of a vacuum of data.
We could be bouncing off the 21
we're getting a little bit of
on the
SPX. This afternoon will give us a taste of
on the
whether
daily.
Or not, they want more evidence.
I see your minutes and I raise you Walmart. Yesterday, Doug McMillan talking about, unlike Brian Moynihan, I asked Brian Moynihan the question about what's come down. The natural answer is to say, well, why don't you go to Walmart or Costco? They are at the forefront of
3-day rule.
About food inflation and how it's sticky. Well, it is sticky. That's why Walmart is attacking it. That's why Costco is attacking it. I thought Doug had a lot of good things to say about what Walmart's doing to make it so you get it when you want it, where you want it.
Let me be looking at some orders here.
Take a listen to what McMillan told Jim.
Our general merchandise prices, things that are not food or consumable, are actually down versus a year ago and comparable to 2 years ago generally. And then on the food side, we're seeing some of our fresh food categories come down, but processed food, dry grocery, and consumables still
3
have
Black
a
Crows on the
2% inflation that's
SPX.
problematic, like mid-double digits. But this year, compared to a year ago, prices are up less than 1%. So I think even in those categories that have been more stubborn, we've been fighting hard to keep our prices low.
Now, I like Walmart's private label, and I defy anyone to say that it's any different. I'm not just talking about string beans and peas.
I'm looking at the 4980 strike for the lotto.
That I've ever gotten. These are the two companies that are saying to their suppliers, do you want to sell here? Do you want to be in Walmart? You want to be in Costco? Take your prices down, because they have the power that J-Pal wishes he had. They can wave the magic wand and evict you. I had a company that had a popcorn business.
These are all bullish candles.
And it just geared up big for Christmas and was like unbelievable. And
SPX.
raised prices and Costco kicked us out. And then the company
The 4980.
Costco is more powerful than any company other than Walmart, and people should understand they are at the vanguard of keeping prices down.
That said, I mean, food companies were up 2% yesterday. We had General Mills and Hershey present at CAGNY, and they are talking about maybe
Got my order ready.
in calendar Q2.
Yeah, well, good luck, because Ozempic, we're going to have a special one. Eli Lilly is offering Mounjaro and Zepbound $300 below Novo Nordisk. So, I mean, you can eat all the Cheerios you want, but I think that what happens, as we've been seeing, is that your willpower is what this thing's about. These drugs give you willpower, and Lilly under $300 under, no one even knows this stuff. It's like killing me. You go sell Eli Lilly, that's another one people want to sell. But I think that General Mills is shaking in its proverbial boots.
And that journal piece you mentioned basically talks about how food hasn't taken this much of your income in about 30 years.
Right.
And they quote Kellanova, Steve Kalan, saying, in general, it's hard to point to areas in which food prices go down and stay down.
Yes, the supply chain is really drastic, and everything costs more. The transport really just gutted a lot of people. And you look at where's the 2 ruby red grapefruits for $3 when it's now $6. I mean, how did this happen? Well, the answer is that
Grab
everybody let it
2
happen,
right here.
and someone is going to have to hurt their gross margin. And the companies going to hurt their gross margin are the companies that are
$3.50.
going to lose sales to the empire that is Eli Lilly, that people are all, well, no one, Doug Mill wouldn't go there. No one is willing to admit that the 7 to 10% of the people are going to be taking these things just don't want those foods anymore. Pepsi at one point was up 3. I think that Ramon LaGuardia is amazing, but if you can eat just one, then you're going to eat just one.
The other thing you got to with McMillan was
Thanks for typing in risky.
Dealing with the employees, and also the Vizio deal, which continues to bite on Roku today, Jim.
Well, look, I mean, he mentioned, I asked him directly about Roku, and Doug, CEO of Walmart, is saying, look, more the merrier. But the fact is that Vizio is a game, set, match. It's a checkmate, because they can win advertising. By the way, they have $3.1 billion in advertising. They can go, I think they can go to $4 billion. The Vizio deal is slightly, it's not accretive yet, okay? Not accretive yet, but I think it will be accretive by next year at this time.
Speaking of all this, Amazon, of course, going into the Dow on Monday. Bezos selling some more shares. Great piece in the Journal about how nobody wants warehouses in their neighborhood, Jim, but they still want next-day delivery.
Well, there's a warehouse country in the Lehigh Valley, and you get there, and it's a you're looking at it, you're saying, well, is that like some sort of secret Area 51 installation? No, it's Amazon. Amazon's up. Very little money's indexed to the Dow, so that is just ridiculous. Is it as ridiculous as Nick Hesh's stock being down like 90 to 100? Kind of. But I do think that one of the things that I am grateful for is that it looks like that Bezos is done selling. So 50 million shares.
Yeah, the 50 handle.
Yeah, and maybe we can go back to talk about how good Jassy is.
Yeah. The other one, Uber going into the
Go,
transport,
baby.
replacing JetBlue. Bernstein today looking at how Uber went from being a money-losing stonk, in their words, to a name that's returning capital, transport-worthy, asking which is the next one.
Yes, and what happened was this moment that people forget where Dara said, okay, look, this is it. He did a year of living efficiently, not unlike Mark Zuckerberg, where there's a really funny video of him doing something at UFC. I don't know. They won't pass him a shirt. But I think what is amazing is that they were the first company to realize we got to stop the spending. And within a year, they were making a lot of money. They were spending way too much. Do you know that Drizzly?
Come on, Jim. Get on a different subject. You're wasting my time.
What is this Drizzly? What's the matter? Immediately they come back and say, would you like to buy it? I mean, they're clever people. They're fun. They're great. And they're on top. But I've got to tell you, look out for Risher.
420 could be an idea to exit.
And he makes bold challenges, including his airport pledge. And look at it. Sucks good. Yeah. But anyway, it was just a decision by Khosrowshahi to get the company profitable. And it worked. I mean, I
good job.
Did it. It was like a memo. The memo was basically saying, we're cutting out the peanuts and the free popcorn. It was one of those, where it's like the paper clips. And boom. And that's what happened. Yeah. And they did it. Yeah. Good for them.
See if we break this 9. We'll take it to the 21 and the 200.
Down 20.
Well, I mean, I got to tell
so
you,
far, everything looks bullish.
I read Rusty Brazil's notes today. We're talking about a big.
Back Randy's statement.
About to be turned on. We're going to be sending that stuff out. Why don't people do this?
Now I'm at 460.
When I asked him, does anything come down? It should have been one of those where it was rhetorical because the answer's net gas. Net gas affects probably more people than
You'll get my coffee and I'll be right back.
Realize because it is how it is our heating fuel. It's good. I mean, it was -9 when I was in Kansas City, and that was kind of cold. And the only thing that kept you warm at all was net gas.
Right. No, the first close below 2 got our attention and just kept going.
Yeah. Well, look, this is an amazing thing. Obviously we have the lowest cost natural gas in the world. We can't export enough, and what happens? It's going to be a great source of national security. The president has just said that 2028 we're going to put a pause in, which actually might hurt Wes Farrell, who's a great visionary, might hurt his project. I do think that this cheap fuel is not hailed enough, but we don't build pipelines. No one wants pipelines in their land. I have a pipeline, my land. Every year they give me a calendar. Fantastic.
Looks like a toaster at the bank.
Yeah, they give me a calendar. Like one of those where you rip the page off.
Yes.
Holy cow. The toaster would have been better. My God.
You mentioned the decline in Palo Alto. We've also got
100 yet? Is it 100?
We've also got Teladoc with similar losses on a much smaller scale. And then SolarEdge Technologies, too.
Well, SolarEdge turned out to be a financing play, and a lot of the European financing is not there. It's similar to Enphase. Teladoc is just the ultimate commodity. They talk about 90 million people being involved. But you know what? Those are fungible. anyone can. I could probably call up like 5 people right now and get a prescription for I don't know, a super duper prednisone. Yeah. But Palo Alto is different. That is a man, Nikesh Arora, deciding, you know what, we are going to risk our market cap and get this thing right and go with a price fixed product, so we don't have to keep being nickel and dime by others. And it's shocking people because here he was, king of the world, and suddenly it's he's like he's not like he's like a rook. No, he's kind of like a pawn. No, Nikesh is not a pawn. He's way too cool.
Yeah. You mentioned, we were talking about the Teladoc, WBA, Jim, not just getting kicked out of the Dow, but also the downgrade from HSBC to reduce structural headwinds, new leadership, cash flow pressure.
Traded perfectly.
Okay, so here's the scoop on WBA. My friend Lisa Gill, who runs the JP Morgan Healthcare Conference, would tell you that Tim Wentworth, the CEO, is a brilliant man who, first he did was cut the dividend. That was smart. He has another really big quarter. He's got to reset, all right? And then I think Walgreens is going to be back. Now, what did Walgreens replace in the Dow? GE. What's been the best stock around? So let's not just necessarily, keep in keeping with that. I think that Walgreens, Wentworth will turn it around. I think it bottoms at 18. I think Karen Lynch is turning around CVS, although there's so many minute clinics, I don't know.
CVS.
I can toss my wife at a minute clinic. She can 5 of them. I don't want to.
We haven't touched on mortgage apps down 10.
Snow's down. Snow's down quite a bit.
$1 million homes, gross margins up again, orders absolutely fabulous, and Doug Yearley, I was congratulating him last night because his nephew works with me for the investing club, who does kept a fabulous job. But what I think I like best about this is that
we can get them down a lot more. Well, we got a support right here, triple top.
2 years ago, that they were just going to make a lot more money on every home. They're not going to lose money. They're going to buy back stock until the street recognizes how great they are. And they did everything, every single line for toll, whether it be the unit orders, whether it be the land that they're selling. They made a fortune on one piece of land. But this is just a remarkable company with a remarkable quarter. And Stuart Miller from Menard.
Then we're awful close to support.
Stuart, you got some work to cut out for you because Doug Yearley has delivered. Just delivered fabulous.
I have toll, talking about toll right now. I should have it on my watch. It's one that I watch that I don't trade much.
Toll Brothers did benefit from a January decline in mortgages, but the orders are great. The spring is fabulous. I just think you look at this and you say, how many people can afford $1 million home? And I come back to inflation. Because on that Home Depot call yesterday, they're talking.
Okay, get ready for SPX again. See if we create a shoulder line here or a double bottom on the tweezer. 330, the 49.80 again.
You mentioned Depot. They do get cut by HSBC today.
330.
Back to reduce. Sales momentum is poor. Muted industry fundamentals, Jim.
Well, I thought that was ill-advised.
Now we should come up and retest a triple top.
Do-it-yourself I was surprised professional and do-it-yourself were equal. I expected the professional to be better. But I do think that the renovation market isn't as strong as we think.
And that's right at the 21, right where Randy said.
23 times earnings, premium group, 2.5. They just raised the dividend, and if it finally comes down, you get a chance. I think, look, it's 8 points from its high. You can let it come in a little, but this is Ted Decker's doing a remarkable job. And if you
that ain't 3 Black Crows.
They have a lot of aisles that were very strong, so I don't want to give up on Depot. I think that this could be Lowe's time at Marvin Ellison, in part because when I hear that the do-it-yourselfers really browsing the aisles of Home Depot and do more business on February 27th, maybe you get a good quarter from Lowe's.
Yeah, that's their lane. I know you were mentioning some Apple news earlier. What were you talking about?
Upside down, that there is Eddie Q, who's a remarkable fellow, we both know, has insisted and pushed through a sports app. It's Apple Sports. I downloaded it and loaded immediately the Sixers and the Phillies and the Union. What you do is you load your teams in. It's got the odds of all the games. You pick. A lot of this is because, like Eddie with Duke, which had a good win last night against Miami. What happens is you have your teams that you like, and you want the instant upgrade. You want it, and this is the beginning of what I regard their major sports initiative. It's very early, and you can say, listen, I want to have a leaderboard. I can do whatever I want. Apple TV, go to it. But when I said, how about my Vision Pro, which they did not have, he said, no. So that means to me Vision Pro coming.
Well, Eddie's definitely going to be watching the Duke news. We know that.
Well, you're a talker, buddy.
Missing expectations. Revenue 11.02 billion. We see profit before tax declined about 80% in the quarter to $1 billion from $5 billion a year ago. That includes a $3 billion charge from their stake in China's Bank of Communications. They said it was a valuation adjustment of about $3 billion. The bank said that it's a technical accounting adjustment and it's not a reflection on the China Banks of Communication. If we look at net interest income, that fell 7%. And
Baba is up. China's up today. K-Web and Baidu. Tesla's up.
Made about $3.4 billion in provisions to cover expected credit losses. Again,
Come on
this
now.
report, we're watching them down today about 9%. So this
370.
This valuation adjustment was certainly a big deal, especially if you look at the
On
full
my
year
SPX.
revenue is up 30%. That's a pretty good number.
All right. Yeah, that's
Says
not
it's ready.
Terrible. Just linked to China in the wrong way right now. As a bank business is going to be still a lot more sluggish in its bounce back than maybe some of the gambling-linked kind of Macau, where it's
didn't
just
want
sort
to
of
see
binary,
that.
open or closed.
Double
flow
bottom.
of money, the capital markets thing is a little bit more complicated when the stock market's been such a mess. And there's so much pressure from the government there too, so it's a pretty tricky spot doing business as a Chinese bank, and when you've got a big stake in it, having to adjust your valuation is never going to be well received by the market. Thanks, Jeff. Good look at some of the big movers here this morning. Coming back up, let's go to NVIDIA. Let's get into the numbers in some detail. Let's talk about the trading possible outcome this afternoon, preparing for our big event.
You want to see
Riding
that?
on this, of course.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim.
Let's see if I'm fooled here. Man, I used to fall for this every time when I first started. I'd get out of the trade because I'd be down a little bit, and then bam, it bounced right back up, and I go, shit. We hit 310, 305, 310. It's definitely a double bottom. It's lower than that. So that's a falling wedge, according to the way I chart. Falling wedge. Now if we break the 9, I think we are going to get up here and break the 21 also. But it's going to squeeze one more time, probably 1, 2, 3 if we don't break the 9. That'll be our last chance. I'm still green. I'm in at 330. But that's a possibility. I think it's really all about this next candle, how it closes. Should grab one more, just means we're back at 330. Black.
The trend.
NVIDIA earnings.
Juncture still.
Yeah, about 640, 650 should be some pretty good support. Again, it ran up parabolic, way back. But remember, look at what happened to PNW today, Palo Alto.
You got double bottom.
It's taken down. CrowdStrike.
NVIDIA.
It's taking the whole industry with it. So the reason why NVIDIA is so important is not only if NVIDIA, again, they're not going to miss, but again, miss the whisper number, so to speak. 24 billion. That could take a whole semiconductor.
340.
That's what the scary part of this is. This is not just one domino. It's the biggest domino, not
come
the
on.
domino. So it has a lot of weight tonight. Again, it's weighted, by the way. This leapfrog. It was Apple, Microsoft, Amazon, Google.
That's
and
a
then
trip.
When NVIDIA overtook Google for market cap, overtook Amazon for market cap, knocking out the door here. But remember, it's about 5% weighted of the S&P 500, 5% weighted of the Nasdaq. So again, decent weighting, but it's really the tone, right? It's really setting the stage. Like, hey, is this going to be the Super Bowl of earnings season? Is this going to run and bring others with it, or is this going to do a 10 or 11% drop and bring down all the semis with it? AMD comes to mind, and some of the others.
Yeah.
You mentioned the hockey stick style of growth. Nothing shows that better than the difference between NVIDIA's forward PE and its trailing. Trailing, it looks like a giant bubble. Forward, it looks like just kind of a standard growth valuation, maybe even a value stock by today's standards.
Well,
like
I'm
a
gonna go that far out.
35. Yeah, like a high 30s PE versus a 90 trailing. I mean, do we have to close that gap?
Well, again, and I was kidding around with you about that. There's no value. The value manager's not going to touch this one. But your forward
That's
PE
right.
is in the 35, 36 range, which is normal. Look, we've seen this before. We saw Apple in a huge upgrade cycle.
So the next moving average, and we got 1-2 freebie. So this is really something to learn when you're charting these out and you see a pattern. Count. If you can count to 3, you can trade with me. So we had 3 black crows, run it up, got out of the trade. And it's created what you call megaphone pattern. And inside of that megaphone, we have a wedge. So you count to 3. 1, 2, we pulled back, and then 3, and had that little initial pullback here and created a shoulder line of an inverse head and shoulders. So I got, what? Three different patterns here. We come up and hit the 21. So we got the 3 black crows. We come up and then we had another 3 black crows. Then by this time we created a megaphone. Then now we've created a downward wedge. And then we came back and we created inverse head and shoulders. So if this comes back one more time, that's the last chance. Right now we're getting ready to squeeze between the 9 and the 21 EMAs. NVIDIA, I think this pullback is healthy. But the way people were talking, we might pull back more. Someone said alert right above this double bottom. Right there. I'm still in. We got to break the 21. We're still squeezing here. Now we're in a correction mode in the market because we've had a bubble in the AI stocks. Getting ready to break here any moment. So we broke out of the flag according to the 1 minute.
But 15 is only 2% of 700. This would be equivalent to doing a $2 wide spread on a $100 stock. Oftentimes we're looking at $5 wide spreads on $100 stocks. So as the product gets bigger, oftentimes you've got to increase the size of those spreads as well to get kind of similar pricing dynamics. If we're able to do this for a $5 credit, that would be 1/3 the width of the strikes. And so it brings a break even to $5.95 on the downside and $7.55 on the upside,
What the hell
both
just
of which would
happened
be outside that $70 market maker move.
Okay.
Risk on the trade would be 1,000 though. So again, bigger product, bigger trade, bigger risk. So you can make 500, you got 1,000 at risk. And I got another one for you, Oliver, that's neutral to bullish. So this would kind of lean into his idea of, hey, if the stock goes down, I consider being bullish this stock or lean into it a little bit, potentially as a buyer. It's a skewed put butterfly. The reason I did this is it allows for some breathing room to the downside. The best case scenario for this strategy is actually a lower price, but it's done for a credit, so there is no upside risk. Also lowers that break even to below 600 to 599. So exact strikes in both these trades are this week's expiration. This one's looking at buying one of the 620 puts, selling two of the 610s, buying one of the 590s. So buying $10 wide put vertical, selling $20 wide vertical. That allows you to do this for a $1 credit or thereabouts. If it goes right to 610 and hung out there, theoretically it could expand to as much as an $1,100 profit. You have $900 in risk with a break even of $599, Oliver. When you're looking at this type of a strategy, again, it's risk defined, neutral bullish, looking for some weakness. And it's been since like 2018 since NVIDIA's actually outperformed its expectation to the downside.
It's a pretty solid trade to bet that NVIDIA doesn't blow up, right? I mean, is that just because the option, the volatility
Well, I think
so
we got to
pumped up?
define what blow up is at this point. I mean, just down 70 is a one standard deviation move in
Okay, so
terms
it's
of
not
you
really
know
a blow up.
68%. So you got 90 or 80, $82 of cushion here, but all the upside there's no risk. So the first trade had a little bit wider window to the downside by $4, and you collected a bigger credit, but you took upside risk for that.
Mhm.
So this is a good idea or a good conversation about how there's always trade-offs. For that additional upside risk, you got a little bit more credit, and you took a little bit less risk to the downside. In the case of the neutral to bullish strategy, it's a little bit omnidirectional, but there's no upside risk at all. Break even $599, but there is downside risk.
Right, okay. But you have to get below $599.
Before that kicks in, and it does cap out below $590 at $900.
I feel like generally
Gotta
most
watch my
people are going to
call.
be drawn more to that second trade because it doesn't have the upside.
We're at 370.
Yeah, and you can have a situation where the stock, if particularly if
Blake,
you're a shareholder or you have
now we have a
allocations
rising-
to the market, you want the stock to go higher. You're not kind of hoping for this
almost a
sweet
wedge.
spot. Hey, it goes up to 1,000 or something, doesn't hurt you at all.
First trade is more of a direct fade.
Yeah, fade of volatility.
Fade of volatility. Okay. All right. So look, it's a fun market because the premium is so pumped up in here. You can really get creative and do a lot of different approaches for the stock. All right. Down almost 2% right now. Smaller decline than yesterday. Thanks, Alex Coffey. Thanks, Ken Mahoney. Coming up, we're in hour 2. We're going to switch it over into the EV category and check in on Rivian when we come back. The share's a little changed, but we do have a lot going into their earnings as well after the bell. Stock
Rivian's
desperately
earnings are
trying
after
to
the
hold
bell.
on to the level from its previous
Rivian.
earnings. Has been a wild ride, but holding up even as the EV trade
Right.
has been so brutal. Rivian's actually been doing okay. More ahead in hour 2, morning trade live.
We're definitely at a pivot point on the yearly. There goes the SPX drop.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made.
Yeah, I don't appreciate it. But it seems like the platform's running better. I have to admit, Ameritrade think or swim. Where am I here? So we're at 380. Come on, break it, baby. And another megaphone pattern. Oh! Woo! Exactly. Is there a way you can turn that down a notch? Just turn it down a notch or two. All right, bam. We hit our first resistance. Make a business decision. Megaphone pattern. 1, 2, 3. Jimmy counted it. Jimmy nailed it. 440. I'll take it. Some of it here. Where? We'll put that right there. 440 yay. Do you understand? I understand. Yabba dabba doo! That's so what am I trying? Genuine? Because back in high school, I'd go into a party and they'd Washboardjim's here. Yabba dabba doo. Okay, now we've hit the 200, so you know what to do. It's time to make a business decision. Woo! I don't think I mess around. Hang out with Washboardjim, he's no clown. I'll take it. I'd like a good grade, please. If you can count to 3, you can trade with me. I think that's how it's done. Out at the 200 SMA. I got to thinking yesterday after this morning about how you all called that 200 SMA yesterday. You know what I'm saying? Very good. One, two, three, boom. 1, 2, 3, boom. This is what makes your most dominant traders, your novice traders, they don't quite get it when you can count to 3 if you want to trade with me. If you want to count to 4, you might get a little more.
Count to 3 and trade with me, but count to 4.
Exactly. That's all it takes. One trade a day, you're off. You get out of here and do what you got to do. Don't try to overtrade. Now you just kind of kick back and relax and let the market tell you your next trade. If you're hyperactive, take you some downers. I got some Valium in the kitchen with some rum if you need it. Nancy, would you get me some ice cream? That was nerve-wracking even with one contract. That was a $200 trade with 2. And more than that, now we're going to come back up and retest. FBI. Maybe we could be getting another knife soon. Beautiful. See, you can see the broadening of this here trend. This is a bear flag, but we went ahead and broke out of it. 1, 2, 3, boom. 1, 2, 3, boom. 1, 2, 3, boom. 1, 2, 3, boom. How's he do it? The crowd's going wild here at the sports arena. Jesse James and Washboardjim, goes by James Howard, are now on the back of the barn. Get ready for open up a can of whoop ass. Jim, you're just playing too much. Nope, I'm waiting. See, now we hit a resistance. You got to get out and let it do its thing, because it could decide to say, okay, we're going to pull back. We could pull back. This is a megaphone, right? So we got to determine where's the solid support at. And inside this megaphone, there's a pivot point. It's somewhere right in here, right on the bottom of this channel, at 49.62. Right about there. 49.63. That's where I'm going to put my support, and I'm going to call that the pivot point. Beautiful. Come on, you dingbat. Time is it? 9:15. I got to go do something I don't really want to do, but I got to do it. Rivian.
The shares are going to turn around. And, look, I think people really like the cars. I feel like they are arguably
The problem was, the last time they came out, during earnings, inventory, I mean, the cars they sold were pathetic.
So, I mean, it's a fun one for sure. The fact that it's only pricing a 10% move, maybe it's kind of getting overshadowed by NVIDIA today. Everybody's putting all their options interest over there.
Yeah, that might be the case. I mean, from a technical standpoint,
Somebody's selling it too, buddy.
Primary downtrend is still intact. So we have
We're holding support, NVIDIA.
But you're right. From an intermediate standpoint, maybe you do see a nice little pop, and this could be a fundamental trade to the upside or downside for that matter. This is kind of one of those home run type of setups as you're talking about the implied move that we are seeing in the options market, but the actual historical volatility, which has been able to outpace. So I would say from a technical standpoint, around $15, $14.50 would be that area of support that it could see a bounce. And then if you hit a resistance level at around $26 to $28, I think from a short-term trade standpoint, that would be around the exit area that a lot of traders might be targeting here in the near term.
All right, thanks, Kevin Green. With that in mind, let's bring in Scott Bauer, who's doing some trading. He's the CEO of Prosper Trading Academy, looking at Rivian for us ahead of the report. It's a fun one, Scott. What do you think?
Well, Kevin really stole my thunder because I was going to say, even though you see this implied volatility numbers, in the stratosphere, the actual option premium is not very expensive. So I still am in the bearish mode here. I still think, as Kevin said, the overall trend is still to the downside. Now, I would never want to just sell a call to the upside because this thing could rip. But I'm going to buy a really, really cheap put spread from a dollar standpoint. Just this week. So, a couple days on this trade here, I'm buying the 12.5 put spread. I can do that for 55 or 60 cents, which is unbelievably inexpensive for a stock that can move this much. And as Kevin alluded to, that 14.5 area or so, that's kind of a line in the sand here. And if Rivian reports something that is, guidance is not good, or they're issuing more stock, whatever it may be, and it drops through that 14.5, look out. So this is a really, really inexpensive put spread to play the downside. And listen, if the stock does pop, if it reverses, if it goes up, all I can lose is what I paid for this put spread. So 55 or 60 cents. That's why I would play the short using a buy of a put or a buy of a put spread rather than selling a call on the upside, which would give me unlimited potential risk.
Okay, so the cost for this is pretty cheap because you're taking a very directional shot. That's the idea, is that you don't put a whole lot on the line. It could be a nice big trade if it hits, and it's pretty straightforward. It's basically effectively you're shorting stock.
Yeah, I'm shorting the stock with very limited risk to the upside. So if I was bearish and I'd literally just shorted the stock, obviously,
right,
I could get blown out of the water to the upside. Here, by buying a put spread, all I can lose is what I paid for it. So I think that the reward to risk on this is fantastic for this. Overall, maybe long term, maybe I'd be a little bit more bullish on Rivian. But I think for this print in this environment here, they're going to show some metrics that maybe the street is not really looking for.
Okay, so very reasonable to have doubt in Rivian at this point, no question about that. I mean, this is an earnings season that's punished companies that haven't been able to really clean up balance sheets. I don't really think that's in Rivian's nature right now, so they'd have to show some insane sales and growth that would seem like to really impress at this point. All right, so the 15 put both for the end of this week, short-term trade.
Short-term trade. This is solely an earnings move. This is something I'll probably get out of tomorrow even and not even wait until Friday. But, what I look at, you guys discussed, they're losing 38 grand a car. That is, they can't sustain that. So that to me is a key metric. If they can't improve on that, I think we break below that 14.5 support area that you and Kevin were discussing.
Yeah, it is a pretty wild stat. All right, car company loses 40 grand per car. Not exactly a ideal financial situation.
Cool looking car.
Cool looking car.
I see him on the street.
I know, that's what I'm saying. I feel like they
exactly.
they were smart to get ahead of the Cybertruck, smart to get ahead of Ford. I mean, I do feel like it's the standard in terms of like EV pickup and SUV type stuff.
I agree.
So, looking at some B-roll right now, I think that's shot outside of your cabin out there. All right, thanks, Scott.
It might be.
All right, appreciate
Thanks,
it.
Oliver.
CEO, Profit Trading Academy. All right, coming up, we're going to get an active investor on with us to have a pick and a pan. Some good old stock picking coming up next.
Man, it's right out of squeeze, too. It's hard to say, man. This thing can go either way. Just a little bit of good news. Because we're squeezing on the daily. I mean, it's still a bearish candle. Well, it could be a gravestone. That could be good. Yeah. I was reading up about put spread and iron condor. So here's your vertical put spread for 22 cents. 14.50 put and then a $15 sell in a put. Then the iron condor. Would cost me 41 bucks. And I think that would be a better challenge. Be a lot less stress. 41, now it's at 43. And it dropped. So we're coming to a double bottom. But by 5 on this practice trade. Get double bottom. This thing could tank too and drop to 14. So we got a double bottom on Rivian. Dashing through the snow. Double bottom on Rivian. Now this would be a more riskier of a trade, I think. So I wouldn't want to go all out. Where'd it go? It didn't hold. And the video will have a triple bottom. We got a 1, 2, 3 here, which is the shoulder line of a two-headed snake. There goes that James again, talking about two-headed snake. Can't tell me you've never seen a two-headed snake before. We got an expansion pattern, bullish kind of. I think these are bullish. I'm not quite 100%. Boom. That's NVIDIA. Or we come back down and do the 1, 2, 3 down here. Then we take the trade. So watch your NVIDIA. Rivian is at 42. NVIDIA. God, it's so expensive. Okay. Man, $800 NVIDIA call for 702 for 665. Okay, get ready. I just don't, man. He's so far out of the money, or just so scary to trade. The March 1st. The 800 strike for 6. Let me get that one off. Okay, we're at the get ready. 650 for the scalping one. And we're going to call this as 2, and that's number 3. 650, the 800 strike for this week. you can count to 4, you might make a little more. I'll move that over. It's definitely the 200 SMA is resistance. It has to break out here because we've got your 1, 2, 3, and we pulled back to 1, 2, 3, 4. So it has to do it this time. Has to. This is NVIDIA. Now, if you're green in this trade, you make a business decision every time you hit a moving average. You don't always get what you want until you till you trade with Jim. Now we're at $6.95. I'm up $45. Now we're coming up to a resistance. Now I know we have to break this number 4. If we don't, I get out of the trade because it's my last chance. If we don't break out this time, I don't think we're going to break out. Could I have silence, please? Let's break the 200 SMA. Let me get it again. How does he do it? We're squeezing between the 9 and the 21. Come on now. We're still in there. If we don't hold that 9, I think we're going to break out. I can smell it. Let's watch tape, Jim. Come on, come on, come on. Resistance will be right here.
see this robust product demand. So that's their most recent acquisition. But again, I think concerns from not only Temu, but there's Shein. There's all of these Chinese pop-ups that are unfortunately doing what Etsy does, but cheaper.
Is that how you say it? Shein?
Shein, yes.
Ah, okay, yeah. The clothes.
Yes.
All right.
The
nice.
like fast fashion where you can get clothes for like 10 cents.
I just remembered that I made one of, I think, my first Etsy purchases ever the other night, but I forgot. I was watching Dune, and I bought that bull figurine, you know, like the Matador figurine that he's got. Found a great one on Etsy. Pretty stupid price.
You got to get rid of that beard, man.
When I made the purchase, but I think it's arriving soon. Okay, Rick, what's up?
I think that sounds like a great purchase.
Right, you know what I'm talking about? I mean, we're stock market people. It's like,
exactly,
you know,
I bought a bull and bear statue off Etsy myself, too.
Okay, so that's what they do.
Yeah, it was cool.
Trinkets.
Trinkets, yeah. But,
Ladies and gentlemen, the Chartist Artist.
An interesting chart here because what we've got
on
is
Etsy.
a longer-term downward sloping trend line going across the highs in competition with a shorter-term trend line sloping up, starting with these yearly lows near 58.20. So this kind of triangular shape here is always worth watching because we want to look for a breakout in either direction. We're getting an increasingly compressed boundaries here for where price can go. So we've got to break out one way or the other eventually. I guess we could also just drift sideways, but that's the less likely outcome here. Our moving averages clustering together, reflecting this lack of a strong trend and this triangular behavior bouncing back and forth here between these two lines here. Our 21-day EMA slightly above our 63-day EMA. Price tested both of these and got to hit a little bit of a rally today. We held the line at that mark where these two moving averages were converging toward each other near about 75 or so. Now we can see RSI has remained above that 50 midline here, so also more geared toward the upside according to momentum here. So what we'd be really looking for though, like I said, break beyond either of these trend lines. If we do break to the upside, there's a couple points to watch. First, we've got our purple 252-day exponential moving average, which lines up with these volume nodes here around 84.63 or so. Then the eventual real upside target here is where we had the post gap highs right here, where we topped out again right there near 89.78. To the downside, we've got to get through our moving average confluence. Then our pattern, then we had a little bit of a kind of a double bottom type price action there near 66.30. That's another area to watch.
All right, so it's definitely getting squeezed here. It seems like potential over the next couple of weeks to have a big move. It doesn't have to happen on earnings, but if it stays in the range, then it looks like we're coming up on something with a little short-term upward bias, you know, in the chart, but long-term downward bias. So, all right, that's going to be a tricky one. Let's talk tomorrow. We've got a home builder with Builders First Source. We've got Wayfair. I guess let's talk Wayfair since we're in the category of online shopping right now.
Yeah, and Wayfair also expecting to see some vast improvement on its bottom line this quarter, up about 87%. I mean, still expecting to post a quarterly loss, but an improvement nonetheless on sales that are expected to tick up modestly, about 0.5% for the quarter. But what's actually more interesting than that, typically these numbers aren't that interesting as what like analysts have done over the last 30 days, but EPS has been revised almost 9% to the upside just in the last month. So Street getting actually more optimistic.
So as the Chartist Artist speaks, we broke out of the squeeze between the 9 and the 21, both of them being EMAs. And as the Chartist Artist says, the 63 EMA is next, and it does follow this here expansion pattern resistance, which is a double confirmation. You'd either take profit here or see if we're going to break this resistance. We're definitely at a resistance level right now, but if we break the 21, I think we can run all the way up to 123B at the 200 SMA. But we're getting ready to squeeze again between the 21 EMA and the 63. And we got a double confirmation of resistance at 496518. We still have higher lows and higher highs, and we're still yet in a wedge or an expansion pattern, falling expansion pattern, which means we could still see a lot of volatility. So you got to be critical at this stage. and we have a solid support right at 49.62 for a 1, 2, 3 bottom. As long as we hold this pivot point area, or this resistance of 4962.92. I called this out a little bit earlier. So we'll see. We got NVIDIA still squeezing. I'm gonna go get me lunch, but I'm in this trade right now, this NVIDIA. I'm going to call this shoulder line of a three-headed snake. Maybe a four-headed snake. Wow. Can you imagine that? Left shoulder, head, 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 right shoulder. If we come back down for 5, that ain't gonna be good.
It seems like a dicey spot for Wayfair. Last one, Builders First Source, Jenny. We saw Toll Brothers, a big success story again this morning.
Yeah, and I mean, I think that right now, based on these estimates, we're not necessarily expecting the same success story, but maybe perhaps expectations are low. I mean, we're only about 3% off of all-time highs here, so that's a bit of a precarious position as we go into earnings that are expected to drop 16% year over year. Sales expected to drop 8%. This is a company that does focus a lot on it's really dependent on residential construction as well as repair and remodeling activities. So for that reason, softer housing demand compared to a year ago, paid in part to these higher mortgage rates, is expected to weigh on their quarterly performance. However, we are seeing this still need for single-family homes at a relatively affordable cost. So for that reason, there is demand there just compared to year-ago levels, expecting to be relatively disappointing. But maybe this is priced in, which is why we are seeing such a nice move in KBH today, I believe, or Toll Brothers.
Yeah,
and
all of them.
we are up about 0.5%, but again, only about 3% all-time highs.
All right. I mean, this trend looks like, clearly the best chart we've been looking at here, yeah?
Oh, by far. This is a beauty of a chart here. And if we took it back even further, you'd see we're up 650% or so since 2020.
Wow.
So really strong price action here.
BLDR.
70-some% or so since we had earnings right around there, pretty much just straight up and to the right, with the only deviation really being a upside breakout here that we established a support level at near 171. That was, a resistance level that we established. We broke above it, then we retested it. So that's one area to watch to the downside. We've also got 21-day EMA near about 179.50, then our lows near 171. Those are support areas to watch here. For resistance to the upside, we've got our +1 standard deviation channel coming in, 1 standard deviation to the upside from our linear regression line. That comes in just below 198, but we got to break through these all-time highs near 189.40.
All right. Okay, good looking chart. We'll see if it can take another leg higher. Thanks, Rick. Thanks, Jenny. Coming up, we got an update on Apple for you. Then our market meetup, talking about the session underway. Still some pressure. Not much has changed since the open, though. Apple green today for a change.
Apple green today for a change. Hope and change.
I remember when I first started flying.
Oh my God.
And we would experience turbulence.
Turbulence.
I would.
Oh, please don't ever say that again. I was flying over in Jamaica and we had turbulence. I was scared to death. I didn't know if I was going to make it or not. And all of a sudden I looked at the, what do you call them? Stewardess. And she looked down at me and she says, "We're going to die." And right then I knew I had one more life to live. Is Jim the only one that has balls to trade NVIDIA? I think so. Because they ain't really been talking too highly about it. I'm going to go into the kitchen and form me a mountain of food. Break resistance.
Actually stands out from the crowd of sports apps out there because Apple does not represent a team or a league, and it's not incentivized to engage users for long amounts of time. This is something that's meant to be checked multiple short times throughout a game. And so Apple says that this is really something that they'd like to augment going forward and continue to get more people to use it. Of course, we know Apple does have licensing agreements to be able to show a few different leagues, and that'll be integrated as well.
All right. So I guess market okay with this Apple development because we've sold a lot of Apple news over the last couple months. All right, and it doesn't seem like there's going to be a gambling connection just yet. But part of the whole gaming world is so focused on sports that if you can get sports data, sports
Did you steal my chain?
content anywhere right now, it's a hot thing. So it could be good for Apple on the content side. All right, thanks for the heads up for the update. Randy Young, senior markets correspondent from the Schwab.
I think she stole my chain.
Joining us from the West Coast, almost, George Tillis and Scott Durfee. This morning for a little chat. We got NVIDIA down again. Scott, does that set us up in a better condition for this stock this afternoon? A couple days of downside?
It might. It just depends on what happens with NVIDIA today. NVIDIA has sent ripples through the entire financial markets. as we have been in anticipation of what's going to happen this afternoon. Now, it's not just NVIDIA, though, that's in focus. It's really kind of by proxy, if you will. The entire AI community is being looked at by what's going to be happening today with NVIDIA. So tons of stuff happening there. Definitely will move the market. That's probably a foregone conclusion one way or the other. It just depends on how things come in, but we'll see how it goes today.
Yeah.
George, what's your gut tell you?
It says I'm hungry.
I think at the end of the day, there's going to be, those who missed out are going to be chasing it if it moves to the upside, while at the same time there's going to be profit taking. And then on the downside, I think there's going to be dip buyers and sellers. So I think the bottom line is there's going to be a lot of volatility. I think if it does move higher based upon the fact that it's moved down the past couple of days, it may be short-lived. I think right now the market's in a distribution mode. It looks like it's top-heavy. I call it a cash grab, if you will. And you just have to think about the nature of what we're dealing with in terms of money. 1.6 or $7 trillion in underlying market capitalization. It's going to be tough to move, but if they move it, it's going to be quite shocking, I suggest, across the board for the markets, especially the technology space. And I agree with Scott. If you just look at Palo Alto today, that's an AI-centric cybersecurity play. It's down. Supermicro, it's a smaller cap stock. It's already down, I think, around 40% off the highs intraday, about $1,100. So there's quite a bit of volatility in these names, and I think at the end of the day, the market may recover if NVIDIA does, but I suggest it may be short-lived.
Okay. So hopefully, things will stay intact at least, because we might need a little help if minutes show any hawkishness from the Fed. It's another event today at 2 p.m. Eastern Time. One in Chicago. Scott, I think it's secondary to NVIDIA, but it certainly is not unimportant.
Yeah, you're absolutely right. And on any other given day, it would probably not be secondary to most things, right? I mean, that's the power behind NVIDIA right now. But this is something that we do need to pay attention to. This balancing act that the Fed has been participating in, trying to make happen over the last several months, going on over a year now, we really need to pay attention to that, because, what happens in the minutes today, depending, like you said, whether we're hawkish, dovish, neutral in terms of the tone, will definitely have some sway on what's happening in the market as well. May not be easy to see it because, again, the overshadowing of NVIDIA, but it will nonetheless be there, and something that we'll definitely need to deal with the ramifications of it going down the road, even in the very near future.
All right. George, you think any of the Fed stuff this week is going to move the needle on bonds?
It's quite possible. I think at the end of the day, looking at where the Fed's projections are, they have 3 cuts. I think the market right now is recalibrated to 4, if not 5. I think looking at the Fed, where the federal funds rate is relative to PCE inflation, they have negotiating room about 1% or 100 basis points to the downside. And I don't think everyone's expecting that 2% to come soon. It's not. I think 3% is the new 2%. We have to get over that and not necessarily look for the Fed and federal funds to kind of, save us from any market dips that may come about. We still have a banking issue that I think is manifesting slowly, and it takes time because things take longer than you expect. But, I think, I don't think that it'll be too much of a market moving event. I think that the Fed is going to stick with their projections, which is 3 right now. And the market is obviously recalibrating because inflation is still rather sticky.
All right. Nice chat, guys. Good assessment of the day ahead of us. Appreciate it. Scott Durfee and George Tillis. Thank you for joining Morning Trade Live. I will see you this afternoon. 2 p.m. is when the fun begins. Market on close. Earnings after the bell. Next up is Nicole Petalides with Trading 360. Have a great day.
360, yeah. Where is that? New York? break the 200, we're going to go up and hit the shoulder up here on NVIDIA. I'm at 35. Be right back. What is it? 57.
Skews as far as like leaning from buy to now neutral. I haven't seen any outright sells, any panics, but today's move obviously substantially to the downside.
Adobe.
All right, and then big news for Amazon. Why is that?
So Amazon is going to officially be joining the blue chip stocks, and this is a fun one as we are seeing they will be replacing in Walgreens in the Dow starting Monday. This does follow plans of Walgreens announcing a 3-for-1 stock split, which will also be effective Monday.
Walgreens stock
S&P
split.
500 and the Nasdaq,
That sounds
the
interesting.
Dow is weighted by share price, not by market cap. So I do think that this split is all things interesting, no doubt, but we do know that this will also sort of change the consumer staples sector in the index, which is something to consider here. And I will say, all in all, we also have seen news that sort of even, I'd say, sort of headlined ahead of them joining the Dow Industrial Average is the fact that Executive Chairman Jeff Bezos sold another $2 billion of stock in recent days, or just a cool 14 million shares, bringing his total stock sales this month to about $8 billion. So according to recent filings we've gotten with the SEC, Bezos did previously offload about 36 million shares since February.
Bezos sold over 14 million shares, totaling 2.37 billion.
His recent buying spree does bring his total to about 50 million shares. However, mind you, these sound like massive numbers, but he still owns about 164 billion worth of Amazon stock, and as of Tuesday's close, has a fortune of around 191 billion, making him still the third richest person on Earth. So he still owns a ton of Amazon stock. This is small percentages, but still feels like major numbers when you look at the past month and say 8 billion of Amazon stock he's offloaded.
Yeah, understood. Pretty amazing. And I had to double check this fact that a friend of mine told everyone, but GE was booted out of the Dow Jones Industrial Average so Walgreens could come in, and that was back in 2018, and now Walgreens is out and Amazon will come in. So very interesting changes in the Dow 30.
Change of the times.
Yeah, no doubt. Markets correspondent. Thank you, Jenny Horn. In the meantime, want to get some insights in the news shaping the markets, and for that, we welcome in Joy Yang, Head of Product Management at Market Vector Indexes. Thank you so much for being with us. We were just talking about what a tough day it is for Palo Alto. Yesterday, we saw NVIDIA has been under major pressure. In fact, I saw at one point it was down over 100 billion. It was the biggest sell-off in market cap ever. I think it lost maybe 75 billion. But where do we stand on NVIDIA, and what are you watching for today? Why is today so important?
Hi, Nicole. Thank you for having me. So it's going to be an exciting day today with NVIDIA reporting earnings later on today. And as you mentioned, we've seen some price drop in NVIDIA, but we should put that into context. So NVIDIA still up, over 40% year to date, over 200% on a 1 year period. So the price drop that we saw yesterday, which was down over 4%, and at one point over 6%, should be put into the context of the overall story, which is that AI is still very much a focus. We've seen the big tech companies
Honey, you're way
announce
wrong.
that they are still investing in AI and putting money into this space. So that's all positive news for NVIDIA. But today we also have Fed minutes announcements, so we're watching.
We were at 200 bucks,
on where interest rates
and we had a high of
are going and how that will
746.
ultimately impact the wider economy.
There's even
We're up
talk of
over
a hike
300%
that
in a
was
year.
sort of something that people were looking at maybe
Not
for
40.
January. Once January passed, people weren't talking about it so much. But over the last 24 hours, I'm starting to hear
Jimmy
the
does
word
not
hiking
like
again.
to be lied to.
That would be not good for tech stocks, right? Because when you start to see these hikes, it's not necessarily good news. For NVIDIA, there was a time last year where we saw NVIDIA do so well and the stock jumped over 20%, and that, really helped to kick off the AI excitement that was happening. Could we see 20% moves tomorrow morning?
I mean, certainly anything is possible if you look at the historic volatility of NVIDIA and AI stocks overall. These are volatile stocks. They're on par with Bitcoin, and I think people probably don't realize how
SPY broke
volatile
out.
we're seeing some of these movements.
SPX,
But
baby.
I would also say that AI is not like a one story.
So we had a head and
We've
shoulders.
been watching our AI index, and what we've seen is that
Inverse
we see
head and
stocks
shoulders
like
right here.
NVIDIA up 200%
Touch,
on 1
touch,
year.
3
Stocks
times,
like,
boom.
Microcomputers, which is up over 400% over the 1 year. But on the other hand, we also have stocks like Cerence, which is
Extremely nice.
down over negative 40% on a 1 year basis. So there's a wide spread, and there's a very narrow leadership, just like we've seen in the broader wider economy.
Oh, yeah.
We actually saw, I think it was Loop Capital that put a $1,200 price target. I mean, people have been getting nuts with some of the price targets. I won't say nuts, it's not for me to say. I'm very excited, a lot of euphoria, and to you, is NVIDIA still something special, something really different than the rest of the names?
I think there is a lot of, I guess, optimism about AI and what it can achieve and the productivity that it can unlock. And I think what's interesting about NVIDIA is that it's actually services quite a wide segment.
Boom to the 200 again.
It's in our semiconductor index. It's
4980s
in
at
our
360.
Index, our metaverse index, our 5G index, and our e-gaming and esports index. So it has a lot of engines.
There's my water.
Its performance. So I think that's a really good sign, and why people are looking at NVIDIA and separating it from the wider AI space.
Is it likely that we could
You're a
see
very smart
that
woman.
NVIDIA will beat earnings? It would be the third consecutive quarter where NVIDIA
Very wise woman.
a rise of more than 200% in the revenues. What kind of numbers? I know it's 455 and 20.3 billion. Those are the estimates. But what kind of numbers do you think we could see? Do you think we could see a beat?
We could see that it is meeting expectations, outperforming expectations, but what that has on an impact to price is unknown, because how have investors already...
Why is everybody doubting his stock right now when they're all pumping it up so much?
Price performance.
So when you look at the rest of the group and a lot of the excitement that has surrounded
Because everything's in a
AI,
bubble.
is that coming down overall, or is AI still the big story of 2024?
It is still the big story, but we have to look at some of the risks in this space, which is not just on the demand side. We know that it's not only driven by some of the users of AI now, that we see it in wide use across all industries, but we have to look at the supply side. So if we're looking at kind of global economy and the fact that this industry is heavily dependent on its global partners around the world, what will happen if supply side is, shut down, as we've seen in the pandemic? That has a clear risk on future profitability and performance.
Yeah, we've had, when you talk about volatility, look at what's been going on with Supermicro, right? SMCI has had some wild trade swings just over the last week or so. In the meantime, you've also had regulators sort of stepping in, which chips can go abroad, and you have some of that too. Where does that factor in?
So that's all, certain investors are pricing that in, but how much are they pricing that in and looking at some of these, event prices that are hard to price in is unclear, because regulators, sanctions, and economic global crisis, it's going to be hard for investors to factor in.
I just got one.
No doubt NVIDIA's had a long track of beating the estimates.
I'm going to check out this Rivian call I made.
There's been a lot of excitement, right, around this name, to say the least. That being said, are you a fan of the group? Do you like NVIDIA?
I'm a fan of NVIDIA because of its diversified business line, but I would still caution investors try to invest in AI through a diversified approach, whether that's through diversified themes or diversified AI ecosystem. I think that's still a prudent way, because unless you can time the market, you should really seek to kind of, hedge the volatility around some of these stock names.
Yeah, thank you so much for being with us, Joy Yang, Market Vector Indexes. Thank you, Joy. Thanks so much for being with us today. A great look there and preview of NVIDIA, which we will have for you here after the bell today.
I want now, baby.
The big three stocks, three charts, three trades. Ben Lichtenstein will go through the technicals. Charles Moon of Prosper Trading Academy will take us through the trades for Snowflake, CrowdStrike, and Roku. Next, here on Trading 360 on Schwab Network. Don't go away.
I won't. Right now, Jim's in NVIDIA. He's in a call. $660, and then we also have the SPX up now at 410. Too bad he had to exit. I have to say it's beautiful. I'll be right back. Yeah. Some two. Some two. It's always a first. Not a bad idea. Right to resistance is now 1016.
So, you know, the FOMC minutes, I'm not too concerned with. It's pretty evident that the Fed members have spoken their minds and, you know, relatively speaking, kind of gave guidance to the markets on what they're looking for and what they're expecting. So we're still kind of having to deal with the CPI reports, but I think a lot hinges on NVIDIA here in the near term.
Oh yeah, I mean, look at some of the big moves we're seeing. I mean, Palo Alto today, which is selling off 26%. Some of the reactions have been huge. That being said, Snowflake is the first name that you are taking a look at here today. It hit a recent high of 237. 1 year, it's up almost 40%. Needham puts a price target of 265 and a buy rating. Tell me how you're feeling about Snowflake today.
Yeah, you know, I actually expected them to be a little bit weaker. I knew that, you know, usually the cybersecurity and cloud sector go hand in hand. So seeing how elevated Palo Alto was and how far they came down and really corrected their price in such a short period, I actually expected Snow to be testing on this 203 level that I'm looking at closely. So we'll have to wait and see. I still don't want to be a buyer just yet. I'd like to be a buyer at a lower scale, right around that 203, 205 price range. That's where I'm looking for a strong pivot. If we hold on that level, perfect. I like the rebound right back to this 220 level, perhaps even as back as high as 235. I don't think this rebound, unless the markets go absolutely bonkers to the upside here, to really race back to new 52-week highs. But there's a lot to like about snow, both in the near and long term. The trend has been strong. They have a huge buyback that they have to fulfill by 2025. It just seems like this is a smart dip to rip idea here.
So wait for a little bit of a pullback and then you buy it.
On snow.
And bend out this chart.
Well, I can understand the mindset there, Nicole, because we have seen some weakness. It is on the trajectory lower right now, but I think take out 215 and you reverse a bit of a longer-term trend we've been seeing for months. So let's just begin first and foremost with the short-term candle chart. I got a 5-minute look at price activity.
5 minute.
And the move lower here, you can see in shares of SNOW from 237 down to 211 recently. And again, on this 5-minute candle chart, in this instance, a pretty well-defined trend lower. You can see, and I've identified migration of value to the downside. Bears remain in charge as long as we remain below 218. And the reason I say that is because we're currently balancing around 214. So value is being established at this new lower level. And as long as we hold below the most recent area of value relative to the one we're currently forming, to me it looks like, again, we're in a bit of a downtrend. Now, the possibility that we're in a larger area of value at this lower level is definitely present. And in that instance, you'd be looking at 232. But I got a little bit more granular, a little bit more fine-tooth combed on this one because it's a 5-minute candle chart. Now, here's where I think you could take a step back a little bit. And as I mentioned, 215 is significant. Look at this chart. Obviously, trend up, right? Very well defined, what the bulls were looking for when we were trading down around 180, and we're going all the way back to, we're talking the beginning of January, but look what started to happen as of recent. We've got a 15-minute candle chart here, and two things that jump out at me on this chart. One, we've got a very well-defined double bottom down here, right? You can see where stock bottomed out. We bounced around 190, migration of value to the upside, and then look what happened.
SPX bounced off the 9 on the 1 minute.
Formed here around this 237 level. We bounced around 228 in the most recent area prior to the one that we were currently forming, 215. So we just got below that right now. We are at a make or break point here right now. So again,
make or break it, baby.
Charles taking a bit of a step back on this one. He mentioned 203, 205, a key area. Taking a look here, look, that coincides with your 50-day moving average. You got RSI, which is coming off a bit here, but was supportive of the most recent move up. So this could be, again, potentially setting up for a buy opportunity. But 215, again, I think is that key level that I'm watching right now. Below that, it does start to show some signs of weakness.
Okay, and so he's waiting for that pullback, see if you can actually get that. If there are signs of weakness, this could work for you. Final thoughts on Snowflake, and then we'll get to CrowdStrike, Charles.
Yeah, and again, we're highly dependent on the overall market conditions themselves, but I really do believe this is one of those names that we have to kind of scoot back, and I definitely would be treating this a lot more short term with the market conditions getting a little bit shakier here. There's nothing wrong with getting in and out of the markets for pretty good profits at a buy low, sell high opportunity. You know, this is at these levels, especially how elevated things are. I'm looking for lower risk opportunities with greater upside.
Now, as you can listen to these guys been talking here lately, they've been a little bit bearish because they noticed the trend of the market changing a little bit. Now, approximately 2 weeks ago, I knew this fella named Washboardjim. He came out with a video he called Irrational Exuberance. So again, I beat the fat cats again. That predicted a pullback, and that's what we got. Thank you. Thank you very much. So magnificent. I would appreciate it if you gave me a grade.
Thank you very much. That's really nice. Thank you.
Irrational exuberance. Now they're all coming out and whining. Well, they don't ever tell you when it's ready. This is the time where you can make a lot of money. Next week we'll probably be going back up again. 4-day trading week. Now the SPX are at 440. Who's this guy talking about? Crowd strike on his 5-minute chart.
Similarly as we did with CRWD and the move lower here that we're seeing, and
I mean, this guy would butt heads all the time.
I'm sorry, I said CRWD. I meant similarly to snow. On the 5-minute candle chart, you can see a very well-defined trend lower. Again, these are 5-minute candles, so we're not going to put too much weight into this, but easy to identify.
Then why do it?
Duration of value to the downside. Bears remain in charge as long as we're holding below 320. I say that because it looks like we're starting to balance here, form something a bit overlapping a rotation around 290. So we're going to reference that last area, and that's again about $30 above where we're trading right now. Taking a look here, step back. I want to show you what's going on as we look at, again, similar pattern as what we were saying the bulls should be a bit concerned about in terms of snow around 215. Take a look here, a 30-minute candle chart. And
oh, a 30-minute.
What's going on here? We saw a very
damn shock
trend playing out. The move back below 295, though, brings an end to that bull run from the beginning of January. We were down around 244 all the way up to 338. And why do I say that 295 was key? Because, look, when we were balancing around 320, we had a false breakout to 344. Still holding that range, though, right? So not anything to be too concerned about for the bulls. But the second we took out the middle of the range that we were in prior to this area that we formed at this upper level, yeah, then all of a sudden we're kind of taking back areas that were established on the way up, and that's not what the bulls wanted to see. So trend up invalidated with that move below 295. Let me show you what's going on, a bit of a longer term chart here. Look at this one. You can see a well-defined trend to the upside, bottom left to top right, but another one that was invalidated as of recent. This was with the move back below 300 here. That was significant. It brings an end to this longer-term bull run. From the beginning of 2023, stock was down around 100 all the way again up to
this guy's got a weird way of trading.
Not what the bulls want to see across multiple time frames here. The 5-minute candle trending lower, and then you see those two key areas
none of
on
these
the more
look right
and
to
this
me.
longer-term chart getting taken out.
I mean, I would put the stop right there in the gap.
Great charts, Ben. Really.
Him and I would butt heads all the frickin' time.
Yeah, I don't really necessarily disagree with that in these situations. Short-term trends having.
I'll tell you something, buddy. I disagree 100%. Now, I will not come work for Schwab if that other 5-minute chart guy is still there. Get rid of him, and I'll join the team.
When we see them rebound, there's certainly a lot of demand. And again, if Wall Street continues to like these names, as long as there's no downgrades, I fully expect at least a short-term bounce, and then we'll see what happens.
Right. Last but not least, Roku really has been out of favor. Now you have obviously possible more competition along the way. Tell me a little bit about Roku.
Yeah, the stock has seen a huge flight of investors taking profits since the peak, right around 109s. And, you know, this is almost like a two-part play in this scenario. Number one is really riding on that Walmart.
Oh, my.
Walmart becoming the
Roku looks sexy.
competitor. You know, this is now not Roku, not just dealing with Amazon, who's always viewed as a big competitor, but also you're adding Walmart into this equation with their Vizio buyout. And so this is a name that I certainly see breaking down pretty significantly. I saw that Roku got a buy rating today, but very ill effect. It's slightly down at this moment. I'm actually looking for a rally somewhere around $70 to $72. $72 is that little gap fill here. 70 is that psychological level, and I want to see if sellers start jumping in. If they do, I think they're going to drive this down to the lower gap fill right around $60. It's right around $59.70. And from there, if we actually start seeing the stock hold and pivot, that's where I would look to actually cash out and look to reverse it right back up to the $67 to $70 level. So this is something that's going to be very fluid. It seems right now.
Always clean, Mr. Jim. May I help you?
Looking to press the stock price down to fill that major gap, and you know once they.
Always clean, Mr. Jim. May I help you? Hello?
breakout to the downside as we transition from a horizontal to a vertical phase. This is in line with the trend that's been playing out on this 30-minute candle chart going all the way back to, we're talking beginning December. Stock is trading up around 109. You can see it balanced around 102. That breakout occurs below that range that we had been in, the vertical phase, transition again into horizontal, rotational, very much random.
SPX pulled back to the
And then look at this, that
63
high conviction phase.
at 330.
Even as I look at this, you can see a couple little areas where I think if you pulled out like a 5-minute
The
candle chart, you could see
49.80.
some pause and consolidation around there. Again, very supportive of this bearish.
Could pull
narrative
back
we're
down and
seeing
hit the
here.
shoulder
Lower
again.
on this chart here, easily identifiable, and again, not what the bulls want to see. Take a look here one more time at a longer term chart, and this is a daily candle chart. We're going all the way back to the end of 2020. Look at this, Nicole, Charles. Weakness across the board. A couple things that stand out. We've got a double top up around 500, so that was sort of the upper extreme of this range that we formed on the way down. Easily identifiable areas of value that formed at lower and lower levels. Look, we're breaking through 75, so the double top around 500, migration of value lower from 435.4 to 75, back below 75, opens up a door for retest of the 2022 lows. We're talking still a ways to go here, but yeah, another chart here, 3 time frames, 5. I think it was a 30-minute candle chart we looked at, and now, again, a daily that this is not what the bulls were hoping for, that's for sure.
Okay, he's looking at the daily.
Roku have been struggling.
Whoa.
All right, thank you for that, and all those charts, and going way back on them as well to give us more perspective. Charles Moon, final thoughts, please.
Yeah, you know, this is looking very similar to last July, August in the Qs, where we started having a little bit of a breakdown for a few months, and then we went on this really kind of hellacious rally. I'm not saying that
Did you say
we're gonna
hellacious?
see something similar, but we have to be really cautious of the NASDAQ and the SPY losing their 50-day moving averages, because that could actually start triggering a little bit of a pullback in risk and profit taking, some risk off movement. So it's certainly going to be a dip to buy, but we're just not sure when this dip's going to slow down. And that's really where I'm throwing a little bit of caution in the wind. And we've been somewhat programmed in 2024 to buy any pullbacks. You know, we have one steep down day and all of a sudden we rally for, 2-3 days, we recover and then some. I'm not sure that we're going to be in that same modus here going forward, at least for the next month or so.
Okay, well, we'll watch for that because there has been obviously a lot of volatility, some anticipation, and for example, a down week last week, a couple of down days now. Charles Moon, Prosper Trading Academy, Ben Lichtenstein, thank you both for the big 3 today. We had Snowflake, CrowdStrike, and also Roku. Coming up next is Spotlight on fixed income investing and how millennials are even becoming more interested in fixed income. We'll hear more on that with a pro next here on Trading 360.
I was born on the south side of Chicago. It's been a long road, but now I'm working for
Might have to just get out of these because I'm getting where I don't trust NVIDIA now.
Nicole Fedelides, live on the floor of the New York Stock Exchange to look at developing stories. Kevin Green is here with us this morning, senior markets correspondent here on Schwab Network. So SolarEdge, we'll start with that on the earnings front, taking a look at SolarEdge. Lower in reaction to the numbers, a revenue miss, weak guidance. Tell us more about SolarEdge today.
Yeah, we were seeing the stock down about 14% in the session, but it has recovered. In the pre-market session, it was trading down around 23% here, Nicole, and that's after, as you kind of talked about, their earnings announcement last night, where they did miss on the top line, but they did beat on the bottom line, with the adjusted earnings per share coming in at a loss of 92 cents versus the street's expectations of a loss of $1.17, but that revenue coming in a little bit short. But it was the guidance that really caused this reaction. They are actually seeing revenues for Q1. They are projecting them to be coming in between 175 million and 215 million. The street was actually looking for $406 million for that particular estimate here. So they're struggling when it comes to demand within this space, especially in the European markets that saw a huge boost at the start of the Ukraine-Russia conflicts, but now that has actually subsided here.
Not
and
doing
also
much.
We're seeing some domestic weakness here, especially in the residential area, and they are expecting to be to mark down a significant amount of their inventory within the quarter in order to try to right-size their business. So not a really good report, but this is not the only one within the solar space that has seen these type of reactions. It does appear that we have not seen a bottom when it comes to the demand picture here domestically when it comes to renewable energy sources as a whole.
Yeah, thank you for that, Kevin. And then what about, I have one more for you that we're going to preview, and that is Rivian. What can we expect from some of those numbers that we'll be watching after the bell today, along with Nvidia? But we did that one already. Tell me about Rivian.
Yeah, so the market is expecting around a 10.8% move to the upside or downside when you're looking at the options market. And the revenue estimate right now is sitting at $1.28 billion. And the adjusted earnings per share loss is expected to come in at a loss of $1.39, which would actually be an improvement from what we saw last year. But their production numbers were actually fairly good when it came to the quarter. So that should actually boost their top line revenue picture here. And now the question is going to be about margins. We've seen this situation occur not only in China but here in the United States, where price wars in the EV space has caused margins to contract across the board, and that's not going to be good for Rivian. That's still trying to ramp up their business in a way for them to be profitable. But if they can talk about their production efforts in the near term and that they are continuing to expand those operations and their need for cash starts to become a little bit more reduced than what we've seen over the last 2 quarters, that might be a bright spot for the name. But we are expecting some fireworks when it comes to this earnings announcement.
All right, thank you for that. Kevin Green, see you later for some of those reports. Appreciate it, senior markets correspondent.
Can't wait.
Thank you.
I can't wait either.
Can't wait. Me too, can't wait. Today's the huge day. We'll have Nvidia and Rivian and so many other names that we've been focusing on throughout the week. And of course, we'll have the Fed minutes. Now it's time for our spotlight on fixed income investing. And for that, we welcome in David Botsetz with us, Head of Innovation and Stewardship at Schwab Asset Management. Thank you for being here.
Thanks for having me.
So,
always clean. This Jim may help you.
People have been loving. They've been loving money market funds.
Always clean. This Jim may help you. Hello. Beers.
When the Fed may move to cut rates, as many people are predicting. So people are starting to think, well, if I'm in short-term bonds, I'm in ultra-short bonds, where do I go from here? Do I start to tailor that
SPX came back to the shoulder line, or the shoulder line went to
And you're
SPX.
seeing that, in fact, right? You're already seeing some inflows into intermediate bonds.
That's
Is that
exactly right.
What kind of timing?
Oh, yeah.
I'm sorry, David. And I just am curious. When we're talking about short-term versus intermediate, what kind of time frame are we talking?
Sure.
Duration?
So we'll look at kind of 3 buckets. We have the ultra-short bond, which tends to be a duration less than 1 year.
Mhm.
We're looking at the short-term, tends to be that 1 to 5 year, and intermediate in the 5 to 10 year space.
Right. So you're seeing, and in droves. I mean, how are we starting to see the moves?
Yeah, we're in January, so we took a look at January flows of this year. Ultra-short bond fund ETFs. This is the first month of outflows that they've had in some time. They were one of the leading asset gatherers for fixed income ETFs in 2023.
What about, I mean, how are people talking about equities? Because we're going to have I mean, there's still talk of one more hike, but I'll put that aside. The idea is that we're going to have decreasing rates. We're going to have rate cuts. You know, when you talk about a portfolio, we'll talk about someone going into retirement versus some of the millennial trends that you're seeing. But when it comes to equities and bonds and having a diversified portfolio, where do we stand on that?
Yeah, I think we're still seeing a very well-diversified portfolio amongst many investors, right? But they're thinking about how do I really position the equity portion of my portfolio? Talk about the Magnificent Seven and what the run-up's been there. So looking at the diversification that they have.
Sure.
Do I have my right weights between large cap and small cap? Small cap has tended to underperform, so thinking about those allocations in their equity portion.
Right, and within your notes, there was less risk, more risk. If someone was interested, were interested, for example, they're going into retirement, maybe they're looking, or maybe they just have some time and don't have that same risk appetite.
Yes.
What do you say to those folks who have less risk appetite but want to be invested?
Well, quite frankly, now is a good time because of where interest rates are at. Fixed income, again, is providing income in your portfolio. And we saw many investors, especially those that are getting later in their age, looking for income, were going to equities for income. Right, that introduced additional risk in their portfolio.
Sure.
Right, now they can get into the fixed income space, things like the intermediate space of the fixed income, where in the corporate space you can get 70 to 100 basis points more yield than you're getting in treasuries.
So there was the Schwab 2023 ETF and Beyond study, and very interesting findings when it came to the millennials. Tell us about that.
Well, there are a couple of things that weren't surprising. Number one, wasn't surprising to hear that millennials tend to have more use of ETFs in their portfolio and a propensity to use them more going forward. What was surprising was the utilization of fixed income. That millennial cohort indicated they were investing more in fixed income than the older generations were.
That's interesting. You know, and people went to ETFs as they were building wealth, right?
That's right.
Are the millennials building wealth?
Well, I hope that they are, and it indicates that they are.
Right.
What we've really kind of tried to look through the holdings to surmise why are they investing more in fixed income. And while we don't have exact data to tell us this, the things that we do hear, that many of them have gone through the great financial crisis. They've seen their parents struggle. They tend to be a little bit more conservative with their allocations than what the older generation has been. They also realize they've got longer to save.
Right.
If I'm a millennial, I'm not looking at 5 to 10 years to save. If I start early, I can invest for the next 30, 40 years.
Yeah, tell me a little bit. You said maybe you want to consider munis for diversification versus corporate bonds. I mean, my dad used to talk about munis all the time, right? So tell us a little bit about what you're seeing and some trends there and why those might work for folks.
Yeah, I think there are two things. One, again, the yield, very attractive in the municipal space, especially depending what state you're in, the taxable equivalent yield when you account for the tax benefit from the state. The second is diversification. And when you think about traditional corporate bonds, you see a high overlap of issuers of corporate bonds to what you have in the equity portion of your portfolio. Whereas in the municipal space, you see different issuers. So it can really help to buffet your portfolio or diversify your portfolio a little bit more from an issuer-specific standpoint.
Yeah, and SCHI is one of the bond funds that's been seeing some inflow. Is that right?
Yes, that's right. That's our 5 to 10 year corporate bond ETF. 2023, we took in over $5 billion in net new flows into that fund.
It's great to see you, David. Thank you so much. David Botzett, great to see you, of Schwab Asset Management. Coming up next, the disruptors. George Sillis is standing by. He'll take a look at analog devices after the company's earnings. He'll break down those numbers. He'll give us an example trade. Stay with us. Here's a look at winners and losers in the S&P. We'll be right back.
If we go down much more, I'm going to get out of my NVIDIA. We're at 610. I got in 650. And then I got to leave here shortly. The SPX is getting ready to squeeze any minute, any second. Looks like we're going to come back down to 63, 49.63 on the SPX. I'm down 50 on my NVIDIA.
Giving us, if you're an investor and holding it for a year, about $3.60 a share, which is about half of their earnings of $7. So the moral of the story here is this is a steady technology name in the semiconductor realm. It's higher by about 5% over the last year. It did, as a company, guide lower for next quarter's sales and earnings, but the stock is higher, and I think that's the market we're in. Obviously, there's demand for income and value, and this is certainly a name that fits those two criteria.
Okay, so with that, how would you go about an example trade today?
Yeah, so I mean, looking at the stock, Nicole, because it's more of an income-based producing stock versus a trending stock, what we're going to do is we're going to continue to allow the trend to manifest higher. If you look at the 50-week moving average, it seems to respect that area, which right now is around $184. So what I'm going to do is go out to March monthlies with 24 days expiration. I'm going to continue to harvest some yield by selling essentially the 187.50 cash secured puts. So you could actually sell those for about $3 a share or $300 in credit per contract. So if the stock continues higher or drifts sideways, that's fine, because that $3 premium, which is your max return, will erode to zero between now and the 24-day expiration. Now, if you do put on this trade, you have to be willing and able to take ownership of the stock at 187.50, but your cost basis is right around that 50-period moving average, that 50-week moving average at 184.50. So it's basically a yield harvesting strategy. It is neutral to bullish, but it also gives us some flexibility down to the 187.50 before you're assigned shares if you do put on this trade.
George Sillis, thank you for that. We really appreciate it. Analog Devices up 1.5% today at 192 and change. George with our disruptor every single day. Thank you, George Sillis. Coming up next, it's time for our 360 round, and we'll take a close look at Toll Brothers. The company reported its earnings, and we're seeing the stock touching new all-time highs. What do we need to know on these home builders and the housing market? Our panel is ready next on Trading 360.
Dun, dun, dun.
Download the Schwab Network app and join in on the
And the video came back and hit the 5th time down here. Still in it. If I get one more, it could be a good risk. People ain't very bullish on it though. Not what I'm hearing.
Price homes recently. Seems like demand is improving for those as well as their core luxury homes. So thought it was a good quarter overall.
Right, understood. Alex, what did you think? Did you think it was a good quarter overall? What stood out to you?
Yeah, I thought it was a good quarter. You know, in general, they mentioned that demand picked up starting in December, and that has continued to accelerate into January and February, which is similar to what other builders have said. And that's mainly, you know, when the interest rates inflected and started to go down. I think consumers are realizing that, you know, interest rates are likely to start going back down, and then on top of that, builders are offering incentives. But the biggest thing I think is that, you know, that I took away from the toll call is that they said that the shortage of resale inventory and the age of the resale inventory is causing more and more people to consider buying, you know, a home, especially a spec home that's ready to go.
So the shortage of inventory is basically, if you see something, you should grab it. Probably good news for a lot of these home builders. Are you surprised, Jay, to see these home builders that have been surging? I mean, for example, Toll Brothers, 1 year is up 90%. The home builder index has been, you know, hitting those 52-week highs. Even, you know, to Alex's point, as the mortgage rates came down, people have started to show more interest. Do you like? Is there any other
Talking
name
about
in the group
Toll
you like
yesterday.
more? How do you feel about the group?
We're at $12.
So we've been neutral in the group mainly due to mortgage rates being stuck now above 7%. I would say Alex's point around the existing home inventory is pretty important, because as of the December resales, I think existing home sales have been down year over year for almost 25 months in a row.
Ooh.
So as we have less homes on the market, as the existing homes are less relevant to the conversation, that's going to help give the builders, Toll and the other builders included, the potential for more market share. And certainly I think, as Toll talked about on their call today, to give people a new home experience versus, I think what Doug Yearley said was the average age of a home, existing home right now is 45 years old. So certainly an interesting value proposition for would-be home buyers.
When we talked, thank you for that. When we talked about recessions and everybody was waiting for the recession that never really came, but certain sectors saw somewhat recessionary feeling, and home builders, homes overall, buying, that sort of saw a pause. And Alex, that started to pick up again, to your point. Do you think people are getting, in addition to seeing rates coming off the highs, are people getting more comfortable with the current levels of mortgage rates?
Yeah, I think people have come to accept that mortgage rates are not likely to come down, let's say, back to 3%. But, one of the biggest value propositions that the builders are offering the consumer is that they're willing to give people either incentive money or actually offer forward commitments. Either way, they're buying down the rate 100 to 200 basis points below market rates. That's something that the resale market can't compete with, and that's also something that the smaller private builders can't compete with. And so that's what's allowing the public builders to gain market share, which is something that I think the overall investment public, tends to overlook.
Been in the news a
But
lot.
That's been the driving force for the last 35 years of the home builders, which is why I think they continue to perform even better. But especially in the last year since interest rates went up, they really gained market share because the private builders have been very disadvantaged, and the overall people who have an existing home have no reason to sell that home and move out of it because of the low mortgage rates that they currently have.
Yeah, and look, enticing people to come in and buy a new home, right? Builders are buying down rates significantly to help with affordability, is what you wrote, and that entices folks to go that way, especially when you have a short supply. Final thoughts, is this coming in, Jay, is this also cutting into their margins? Final quick thought.
Not from what Toll said about the gross margins. Now, they did say that there was going to be a sequential decline just based on some different geographic makeup of what they're closing this quarter versus last quarter. But in general, based on their comments, it sounds like pricing power has started to firm up. As Alex said, people are finally getting used to these higher rates, and they're going ahead and making those life decisions they need to make and figuring out what home is affordable for them.
Thank you both so much. Alex Barron, Housing Research Center. Jay McCandless of Wedbush Securities. Good to see you both. Thank you. That's going to do it for us here on Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange every single weekday, 11 a.m. and 2 p.m. right here on Schwab Network. So join me at 2 o'clock for the watch list. See you then. In the meantime, keep it right here. Fast Market is next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in...
Very good, Schwabi. Jimmy called to bounce on the pullback here on the SPX. Boom. Again. It's like $80. I could just sit here and trade this all day long and be very satisfied. What's that? Oh yeah, speaking of Rocket Man, he is having a auction. He's auctioning off a bunch of his crap. Elton John. Anybody ever seen Elton John? I've seen the next best thing to him, Survivor. A little joke. I saw Survivor. Are you going to see Survivor? People would laugh at me. So yeah, I have the tiger. Should you take profit? I think I would have. We're going to come back and retest. I hate to see it retest to 63. So if we retest to 21 and start to move back up right here, we're squeezing between, again, the 9 and the 21. It could come back and hit the 200. It's either the 21 holds or we hit the 200. That's my opinion. Yeah, I'm going to put on my shoes. I hate to do this. I can't believe this job I do. The people that own the building are up in Kansas City. So we have an inspection today. And she messaged me, oh, by the way, Jim, I'm getting an operation today. Would you mind going up for the inspection? I said, what the heck? I said, so are you serious? Okay, we came back and hit the trend line. SPX back at 300. The 49.80 did not hold. See if this is a fake out. We got 3 black crows. So we got another shoulder line. I'm going to get in it right here. The 49.80 lotto. $285 off the 200 SMA. Oh no. So I got to go down to this building and let the inspectors come in and inspect it. So tell me she had a fake operation. If this doesn't hold, I'm going to get out of this trade because I got to get ready to leave. Now we're at a double bottom. This has to hold here. I'll add more. 2 more. One. Yeah. Let's see. $240. God, a big knife. $240. You can drop more. Shit. It might. What came in here? Wow. Tempted to go ahead and get 2 more at 205. That gives me 6. I put on my shoes and go. Can't be late to this. I don't want to go either. Oh man, drop more. Jeez. So it's getting cheap enough to where I can buy 4.
Symmetry likely to the downside? How do we want to think about this?
It was the MVP of 2023 so far year to date for the S&P 500. NVIDIA was up coming into today, I think about 40%. So that was the leading stock in the S&P 500. This is a universally well-known stock. This morning in Lower Manhattan, I dropped my car off. I got out of the car. As I began to walk away, the parking attendant yelled at me, "Hey, Joe, what do you think NVIDIA is going to do tonight?" Did. And my response was, I think if you're long the stock, it's time to sit on the sidelines and watch. If you need to be active, you're doing it in the options market. I think you have to have the discipline, if you are not long this stock, to say, I missed it. And at some point in the future to reassess and re-enter the trade.
Gosh, guys.
Could
Maybe
be
tomorrow.
You're killing me.
But no one knows
They
that.
may knock it out of the park.
They may not. Listen, this could be last May.
So this is the conversation.
Again, they
by the way.
could.
Nobody knows. Nobody knows what the numbers are going to be. And even if you had the numbers today, you wouldn't know how to trade it. You wouldn't. No.
Well, if you look at the last couple of quarters, they did beat and raise, but the stock really didn't do much. And I personally think that we might get the same reaction this time around. This is NVIDIA. They're likely to beat and raise. You know, first of
I'm
all,
about
because
screwed
they've
on
got
this
the history
trade.
of that on their side, and second of all, when you think about hyperscalers and what they've been saying about cloud capex,
We're definitely back at the bottom.
artificial intelligence capex, they're in acceleration mode, and
I
that's
don't
not
wanna
a
load
couple of quarters.
anymore.
I think that's going to be a couple of years. So I see scope for NVIDIA
Just leave
to
it
come out
alone.
and say, you know, that it's not just a 2024 demand story for them, but also 2025. Having said that, I mean, the bar has been raised significantly higher. It seems like once NVIDIA got to that 650 threshold, a lot of analysts came out and they raised their price targets to 750. So the bar has been reset. So even if they beat and raise, I'm not sure the stock actually
I mean,
rallies.
there's like $800, $900 price targets. The options market, by the way, Joe's pricing in a near 9% swing on earnings. That's a
Down 140 on
$150
NVIDIA.
billion dollars worth of market.
But to your point, Scott, I mean, the stock very.
Oh, we got FOMAC coming up.
Response that it had last May, where it went from 305 to 379 on the open from May 24th to May 25th. You know, there's such a variability in what the outcomes could be for NVIDIA this evening. But the one thing
Oh,
that
I gotta go.
everyone has to understand is that the stock is working off some technically overbought conditions. If it advances further, it will be even more overbought, and that overbought nature can extend over a period of
I
time.
gotta
The
get
bigger
out. I don't think I
question
trust
is,
these guys.
what's the effect on the market? Do you get the broadening out if, in fact, NVIDIA takes down the technology complex?
Okay. Weiss, I think we got your shot back, I'm told. So let's bring you into the conversation, too, in terms of what you think is really riding on tonight. You have now Palo Alto in the rear view. Stock's getting hammered.
SPY at the bottom.
The bar has got to be incredibly high for NVIDIA. Just to refresh everybody's memories, I just said the whole ball
I'll be
game
back.
of the most crowded trade on earth is how our own Josh Brown views NVIDIA. He's trimmed 20% in the last, couple of weeks or so. How do you see this?
First of all, it's annoying to me. It's annoying because I didn't own the stock on the way up. And despite not owning the stock, what Josh is telling me is that it's going to impact my other holdings, Meta and Microsoft, etc. And I find that annoying. But putting all that aside, I disagree. You have to go along with what the narrative is going to be. So the question is, did Jensen Huang telegraph to the market when he talked about capacity being tight, that the biggest issue he had was getting capacity from Taiwan Semi, which I own? If that's the issue, if it's demand outstripping supply and he can't get the capacity, it's a lot different than double ordering, than weakness, etc. But in terms of what it does to the others in the group, such as Meta and Microsoft, I don't think it does anything. You have to believe that the AI, evolution is going to die right here and now, and that's just not the case. So yes, it's a very high bar for NVIDIA. I personally think that if they meet the number and they come along again with the appropriate dialogue during the conference call, we'll be okay. Sure, it'll knee-jerk down, but it's not going to be a disaster. But it doesn't really inform what the fundamentals are for the other stocks, only for what NVIDIA is.
No, but it certainly is it represents the mania, if you want to use that word, around the AI hype. So while it may have no fundamental impact on the other names that you mentioned, it still trades part of that group. Absolutely. And it still could have an impact on the near-term direction of those stocks if it just forces people to rethink the velocity in which the stocks have gone up versus what the fundamentals actually are in the here and now, not on the come.
Exactly, and I'm not disagreeing with that. If NVIDIA misses, everything's going down. There's no question about that. But in terms of what bounces and how soon it bounces, I think you'll get a great buying opportunity in the others. Whereas I wouldn't take the buying opportunity in NVIDIA because it's still overvalued, like I wouldn't take the buying opportunity in Palo Alto. So NVIDIA is a victim more of the analysts that continue to raise numbers, even during the quiet period when there's no information they can get from anywhere, from any company, because they were all in the quiet period. So that's what you have to be careful of, that momentum. So absolutely, it's a binary event tonight. Unlikely it won't be binary. But let's not forget, we also have the Fed minutes in between. So I don't think that really changes the direction tonight.
Right.
Not for the better, possibly could change it for the worse. But yeah, I mean, it's, you know, I think you got to take a look at the long road ahead, not just the next few days.
Yeah, good points you make. Let's bring in Bill Baruch, one of our committee members, because he is making a move in NVIDIA ahead of the print in overtime. He's joining us on the phone today. So you've trimmed NVIDIA. You've also trimmed it by 20%, right? You also trimmed AMD, but tell me about NVIDIA. Wow, trimming it into the print when the stock is down, what is it, down 8% or so in a couple of days?
It is down 10% from the high, yeah. We did trim it yesterday into the close, and when it bounced back a little bit, so I was very happy with the sell price. But, you know, again, it has fallen about 10%, so I think some of the air is coming out a little bit, which is you know, I think a good thing here. We trimmed it 20% yesterday. We also trimmed it 33%, about a third, ahead of AMD's earnings. So we've reduced this and really just monetizing the move that's happened. I think with the stock was trading above 700, we really needed to see a revenue beat and raise, but a revenue beat that was somewhere, you know, in the 5 billion range. Now, you know, just a modest beat on revenue, I think would be a good thing. They would obviously have to raise their guidance, but the stock's settling in, and if it trades lower, I have some targets to the downside I'm looking at to re-enter the position or pick more back up.
You think we get dip buyers pretty quickly if this stock goes lower?
I think there's some really good technical levels to look. I think the long-term story has not changed. And, you know, it's going to be, I mean, we're in the earlier innings of AI, and NVIDIA is the leader. One of my fears, more than anything, is just an unwind. And I've talked about this a couple times. You have tremendous call speculation. It's an easy way for a lot of, whether it's retail or portfolio managers, to measure risk, buy calls. The people selling those calls are market makers. They're selling calls and then buying stock. If this thing's not up 15, 20% like it was last May, all of that gets unwound, meaning the market makers then sell their stock. And the retail or portfolio managers long the calls are now have somewhat worthless calls or massively reduced value of those calls. In such an unwind where the story doesn't change, I'm looking at maybe a 610 to 620 would be a tremendous place where the consolidated at the late end of January, first couple of days of February before taking off again. I would love to reestablish a stronger position at that level.
Yeah, 610, 620. We'll keep our eyes there. Thank you, Bill Baruch, for calling in.
Thank you.
Giving us the latest on your trade there. Other mega cap news, Weiss, Amazon joining the Dow next week. Walgreens, you know, see you later. JP Morgan says Amazon remains their best idea. What do you think about this news? You own the stock.
I do own the stock, and you know, we've had Bezos selling some stock. It's really just a minor sale and means nothing. He's probably looking to buy another couple of homes. Look, I have mixed feelings about it because I sort of like it not being in the Dow because now there's another technical aspect to worry about it. But I do think under Jassy, we're going to continue to see just better improvement in terms of their ROI, in terms of how the company performs, in terms of being very focused and very cost conscious. So I think it's just the beginning. And then going back to AI, you're going to see exponential growth in the cloud and cloud tools. So that's really going to help reassert their business as a tremendous growth driver. So to me, that, when coupled with the fact that for all we hear about e-commerce, it's only about 30% penetrated globally. So you still have major strides there. So I think it remains a great story, and it's got, you know, the valuation paradigm hasn't changed. It's always expensive. It'll always appear to be expensive. So I'm just staying with it.
Yeah. Uber going into the transports next week.
Yeah, and it should. I think this company is going into the right places. They've done a lot of the right things. Not having much of an impact today, but again, overall the market is down. But this is where it belongs for sure.
Do we have a conversation too, just outside of this, about, you know, the idea that nothing else is really doing anything in the market other than tech? I know small caps were up for a couple weeks in a row. Russell obviously getting hurt by rising rates yesterday. It's down again by about 0.5%. Dan Greenhouse of Solus sent a couple of charts our way, which I thought were interesting, looking at, you know, the other sectors that have been doing well. We talked about industrials yesterday, and there was a downgrade on valuation because the chart has looked so good. But the idea that a lot of stocks in these other sectors have been doing pretty well, 50%, by the way, of financials, for example, are within 5% of 52-week highs. 50%. 42% of industrials are within 5%, Jim, of 52-week highs.
So just before we go to industrials and financials, can we broaden the universe to the equal weight S&P 500? And these just facts, okay? Now the equal weight S&P 500 is up 2.6% year to date.
Fix your mic. It looks like it's about to take a nosedive. There you go.
Okay. I hope
Now
that doesn't
continue,
bode
please.
well. We're not calling the
It's live TV. Just go
We're
ahead.
not calling the mic in video, okay? Up 2.6%. That's the average stock experience through the first 7 weeks of the year. By the way, that's pretty good. That's pretty good. We would be applauding that if it were not for the fact that the Nasdaq's up 6.3% during that time frame. That differential of 3.7 percentage points was twice that just 2 weeks ago. All right, so there is a broadening going on right now, and it should happen in the industrials and financials, in my opinion. Here's why. We know that this is the year that the spending from the CHIPS Act, the IRA Act, and the Infrastructure Act of 2021 are really set to hit. So that's going to need financing from banks. That's going to need earth-moving equipment and all sorts of industrials, transports, etc. Those sectors should be performing well. There are fundamental reasons for them to perform well.
Okay, I mentioned, financials, 50% of those stocks are within 5%. Let me get to a move of yours before we take a break. Interactive Brokers, you're going to sell it. You plan to sell it. Personally.
Yes.
It's in the T.
Yes.
You obviously can't do anything there before a rebalance period takes place. We know that. But you're selling it personally. Why?
And by the way, there is...
Well, obviously means it's going to come out of the T.
No. It does not mean that at all. No, because quite candidly, in terms of momentum, it is red hot, very strong. In terms of quality, it's doing well also.
Why are you selling it personally?
Well, let's go back to when I bought it and why I bought it. I bought it in the first days of January. I bought it on what I was recognizing as a breakdown and a strengthening of momentum. And I said at the time on air, my objective is for this stock to get above $100. That is what it has done. That's the reason why I increased my exposure to this name beyond just owning it significantly in the strategy. I also wanted to own it personally. So I bought it at 85. I will sell it out on the close today, and I will ring the register, and the trade did exactly what I intended it to do.
Okay, so we will take that break, and when we come back, we'll just play a little bit more on this idea of, look, 50% of the financials are within 5% of their 52-week highs. One is not within any percent because it is at a new high today. It is JP Morgan. It's coming off of a new high. It's been a really great rally for that stock. We'll talk about that and the financials more specifically, and we'll do it next.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
or download the app.
All right, welcome back. We are watching shares of JP Morgan. I mentioned there, look at that, highs of the day. It's a new high. That stock has been on a big run, Jimmy, up 46% since the end of March of 23. It's up 17% in the last 3 months. It's really outpaced a lot of these other names in that space. The question is why? Why?
Well, I think there's two reasons. One is you can just be bullish on the name. You can think Jamie Dimon.
You got to tell me, and I'm sorry to jump on you.
That's good.
You got to tell me more than Jamie Dimon.
No, I was okay.
You know what I mean?
Yeah,
You got to tell me like the stock's up for more than just Jamie Dimon. You know what I mean?
Sit tight for a second, my friend.
With all
what
respect, I know what everybody says.
All right, got it. So there's two reasons. One, you can be bullish on the stock for its idiosyncratic merits, which include Jamie Dimon. That's not why I'm in the stock. Okay, I'm in the stock because I'm bullish on financials, and it's the best name in the financials. I'm not going to talk about the valuation of JP Morgan, the dividend yield. It doesn't matter. They're all attractive. The reason to be in JP Morgan is the reason to be in financials. You've got all that infrastructure spending going on. That's going to need financing. You will see, and probably soon, the capital markets really reopen. You've had some green shoots. I hate to use that term, but you have, and they're likely to continue. By the way, all this trading volatility in the markets does generally help the financials and JP Morgan with it. And lastly, as the Fed has now calmed down with interest rate moves one way or the other, it does appear that helps net interest margin to increase overall. So there's a lot of reasons to want to be in financials, and JP Morgan is the creme de la creme.
I mean, there was a period of time, I said over a year, where it dramatically outperformed a lot of these other names. Over the last 3 months, there's been a huge catch-up. In fact, it's not the best performer over the last 3 months. Your city is.
I know.
And we've talked about it a lot because a lot of people are talking about it. And they're talking about what Jane Fraser has done in sort of reinventing that bank under her leadership.
And I think there's legitimacy to that thesis. I think she has been doing this for actually quite some time, about 3 years now, and it's just been recognized in the last 4 or 5 months. She's cleaned up the international operations quite a bit. She's cutting costs like crazy. Now, what I will say is when you have a turnaround like this, and this is a turnaround, you can look at the prior performance before like October of last year and see that it was terrible. When you have a turnaround like this, it does take more than 1 quarter to confirm it. So you would really like to see the first quarter numbers and future guidance come in better than expected to feel this turnaround is intact, in place. But right now, I'm not trimming a share. I'm letting Citigroup ride. It's very cheap. They're buying back shares below tangible book value, good dividend yield. There's really a lot to like here.
Weiss, Goldman Sachs is, I know you have Bank of America too, but you have Goldman, and this stock has been on a nice move as well over the last few months, right? You put all the issues behind it. They get rid of the Apple Card, Solomon's not facing the kind of heat that he was a year ago. In fact, it's been, sort of put to me by people that I've spoken to that he's putting a big foot forward and letting everybody know it. He's obviously not going anywhere, and the stock is responding.
Yeah, so I think what's responding to is, look, David came out and basically did a mea culpa, said we went into these areas, let's cut our losses and get out. That's decisive management that limits your losses and allows you to focus on what's working for you, number one. Number two, they had a great quarter. Number three, as up until the last week, there was optimism about the IPO and the secondary market and the M&A market opening up sooner than the latter half of the second half. Now, that's dissipated somewhat with Powell's comments and with what we've seen in inflation, but nonetheless, I still think that is what will occur. And that's really where the juice is, where the high margin products are. So Goldman is front and center there. And when you look at their performance versus Morgan Stanley, it's kind of stark. And frankly, I can't explain it because Ted Pick is going to be a great CEO. But that's what Goldman's playing for. So it's a great option itself on what's going on in equity markets and with interest rates. So yeah, so it's a much more important holding to me than B of A. B of A, be honest with you, I equivocate on it. Do I still want to be there, or do I want to look somewhere else? Because it just has been a consistent underperformer for me.
Anastasia.
Yeah, I want to agree with what Jim has been saying about financials, which is I do think positive catalyst here at this stage of the cycle because, first of all, when the economy, what's happening with the economy is economic enthusiasm is creeping back in, and the data is clearly inflecting higher, whether you look at manufacturing, whether you look at consumer confidence. During those periods of time, financials tend to perform quite well. And of course, we do have rate cuts that are still on the table. But there's one other thing that is making me more positive on financials, which is the consumer. If you look at consumer and if you look at the delinquencies, they have been rising, but what you're hearing from banks is more positive commentary on those delinquencies stabilizing and maybe declining as the years goes forward. So that means that they've provisioned for those loan losses, for those delinquencies, they may not have to do quite as much going forward. And then the last point is that pickup in market activity. We do expect that more and more private equity sponsors will be looking for exits this year. We're seeing the leverage finance deal activity pick up quite a bit this year. So more exits, more capital markets. That bodes well for the likes of JP Morgan as well.
All right, let's get the headlines with Kate Rooney. Hi, Kate.
There, Scott. President Joe Biden will sign an executive order today to give the Coast Guard the authority to respond to cyber threats and will require ships and ports to strengthen their cybersecurity. The White House says it will also invest billions into port infrastructure, including domestic manufacturing of cargo cranes to counter many of that China built in with advanced software currently in some of those U.S. ports. The mother of Russian opposition leader, meanwhile, Alexei Navalny, filed a lawsuit with a Russian court demanding that her son's body be released. According to a Russian state news agency, a closed-door hearing is scheduled for March. Navalny's team said that his mother had not been able to find where his body is being held. And Intuitive Machines' Odysseus moon lander has entered the moon's orbit. That's according to a statement from the company. It comes ahead of its moon landing attempt on Thursday. If it is successful, it'll be the first U.S. lunar landing in over 50 years. Halftime Report returns right after this break.
Jim.
All right, we're back. Let's get to Bob Pisani with today's ETF Edge. Hey, Bob.
Hey, Scotty, good to see you. After huge inflows last year in short-term Treasury and money market funds, 2024 is already seeing some change in investor sentiment towards bonds in general. So what's in and what's out in bond investing? Let's talk to the man who knows all the answers to that. David Botzett is the Schwab Asset Management's head of innovation and stewardship. Schwab is the 5th largest ETF provider with over $300 billion in assets. Thanks for joining us, David. So we were at the ETF conference last week. We were talking about this in Miami Beach. 2023, all about short-term treasuries, money market funds. But things are changing in 2024. What's hot now, and where should investors be positioning themselves for their bond portfolio?
You know, what we're seeing is positioning more in the intermediate part of the curve. And in fact, you talked about short-term. Ultra-short bond ETFs took in big flows last year. January of this year is the first month we've seen outflows.
So inflows right now into intermediate terms. So intermediate to you is what, 3 to 5 years?
3 to 5 years, going out as long as 10 years in some cases.
Okay, so what's seeing outflows right now? I know TIPS was really hot a year and a half or so ago, but inflation's going down. So
yes.
TIPS would not be as popular, right? I mean, what's not popular? Where are you seeing outflows?
TIPS is not popular, so we saw in the second half of last year, TIP outflows significantly. Ultra short, as I mentioned, seeing outflows in the first part of this year as well.
Yeah, so corporate bonds now, we've had a huge rally at the end of 2023. Prices went up, yields went down, and the yields have been backing up a little in the last month or so. It's very interesting to watch that happen. But the corporate yields are great, 5.6%. Your intermediate term corporate yield, 5.6% right now, and 4.3% for treasuries. Can you make a case for why investors should be owning corporates with a higher yield over treasuries right now?
I think what we're seeing is exactly what you point to, that yield differential. You're seeing upwards of 100 basis points in incremental yield for very similar duration exposure.
So what do we do now? I mean, what are you telling? You've got a huge portfolio of bonds. You've got over 30 billion, in assets under management just there. What are we dealing with right now?
Yeah, we're seeing a lot of people and talking to a lot of people about extending the duration on the fixed income portion of their portfolio, getting that incremental yield from what they could potentially see short-term rates in the second half.
And the reason you should not be so much in short-term and now in intermediate, just explain it to the viewers. Why should they be thinking about that?
Well, because right now we're at a point where interest rates are more likely to come down than go up. We know that the Fed is kind of taking their foot off the accelerator of raising rates. So when you're in longer dated duration and interest rates start to come down, you not only get the income, but the price appreciation.
Good. Thank you for explaining that. We're going to have a lot more coming up on bond and stock portfolio for 2024 and where you should be positioning that. That's coming up on ETF Edge today, 1:10 p.m. Eastern Time. David will be joined by Nate Geraci. He's the president of the ETF store. That's etfedge.cnbc.com. Scott, back to you.
All right, Bob. Appreciate that very much. Bob Pisani coming up. We have some other committee stocks on the move today. We'll give trades on Diamondback, Public Storage, and more. We're back after this.
Black-owned businesses grew almost 5% from 2019 to 2020, according to the most recent government data. That's lower than Hispanic and Asian American business growth. Experts say more action is needed to further these advances. Celebrating Black heritage, I'm Sharon Epperson.
All right, let's do some committee stocks that are on the move. All right, Weiss, Vertiv Holdings, VRT. You tell us you trimmed 3/4 of it last week, and now you threw in the towel. You sold the rest this morning with the stock's down more than 6%. What's up?
Yeah, so look, this has been a great stock, and when I came out and said that I was in the position, I'd said I'd wait for a pullback to buy more because it's not cheap. But it's geared to the data center cycle. They make the cooling systems. So I noticed the volume was tracking very high, unusually high, and driving it down on down days. So I started thinking about, do I really need to double, triple, quadruple down on my exposure in technology, which, even though this is a capital equipment company essentially, is geared to the tech cycle? So the answer was no. So it was a great, great trade for me in a short period of time. And then today, when they reported they missed, it was a slight miss. The stock traded down, but then recovered nicely, but then started to trade down again. I said, you know what, such a small position at this point, I'm going to be really pissed at myself if I ride this one down. So I'd rather get out of it and revisit in case it has a meaningful decline.
Okay.
So it was more portfolio management as well as book and gain.
Got you. Thank you. Diamondback, Joe. Record intraday high. They beat on top and bottom. 182.74 was the new all-time high today. Stocks peeled a little bit off, but not much. You own this.
Very rare that you could say an energy company reaches a new all-time record high. This company, which is in the process of the Endeavor transaction, privately held company, this is going to make them a significant player in the Permian Basin, and it keeps the independence. I think the one thing that's important to understand about this company is, prior to the acquisition of Endeavor, this was a buyback story. This was a company that was taking 75% of free cash flow and distributing it to shareholders. They've said today that number is now going to go down to 50% of free cash flow. So keep that in mind. It's no longer a capital allocation story. It really is about their presence in the Permian.
You want to tell me about Public Storage, too, which is in the Joe T as they beat?
Yeah, so there are 3 REITs that are contained within the index, and the exposure to REITs has been basically zero until the most recent quarterly rebalance. Host Hotels, Public Storage, Extra Space Storage are the 3 names that were added. In the case of Public Storage, I really think today is more of a technical bounce than anything else. Getting a little bit familiar with this company because it's a new holding within the index. Don't see anything really fundamentally that would allow me to get overly excited about it.
You like REITs? Anastasia?
Well, REITs are, of course, my contrarian play for 2024. They do need some rate cuts for them to actually finally work. But on Public Storage in particular, the places I want to look within the REIT universe are those that have the net operating income growth that is running a little bit faster than the index. And when I look at self-storage, the NOI growth on that is about 0.6%. So it's kind of towards the bottom, end of where I would like to see in terms of NOI growth. So I would rather focus on some of the secular growers like industrials and maybe some multifamily and data centers.
How about Celanese, Joe? It's in the T. They missed. I don't know what the stock. We see the stock.
The stock has bounced. It's had a remarkable trading range today. 137, I believe, was the low. Now it's slightly higher. It's up a little less than 2%, up about 1.75%. But this is a chemical story, and it's been a good chemical story in 2023 and 2024. But more recently, what this earnings report is speaking to is the weakness in Europe and China that is being exported here. And they lost a little bit of their pricing power because of that. Technically, though, today's price action keeps the strong momentum in place.
All right, we do have some key committee names about to report their results. I know it seems all about NVIDIA, but we have Host Hotels, we got PG&E, we got Intuit, we got Coterra, ownership across the board from some people here. We'll trade them next.
Let's talk some more earnings. Wednesday, that's today. After the bell, Host Hotels Joe T.
Now, this is the one REIT that I do have some enthusiasm about. This is Richard Marriott, chairman of the board. You're getting exposure here to the affluent consumer through the portfolio of properties that they have throughout the United States, Canada, and Mexico. Ritz-Carlton, Naples, wonderful place. I would expect a strong earnings report, and the stock is trading near a 52-week high.
Did you refresh my memory? The other travel-related names that you had in the T, you bounced, right?
Liquidated Marriott, liquidated Booking Holdings.
Expedia, do you have that?
Expedia is still in the index.
Okay. PG&E is tomorrow morning. Jimmy, you own it, right?
I do. When you're building a portfolio, not every stock has to be a high drama NVIDIA or Palo Alto Networks or whatever. Sometimes you want some ballast in the keel of your ship so that you're not swinging wildly from one. This is a steady Eddie utility with actually a little bit of a story here. 4 years ago, they came out of bankruptcy after a bunch of forest fires out in California, reinstated the dividend recently, exquisitely well run by the management there. And I just think at this price, there's room to eventually increase the dividend and see the share price go higher.
Trying to look at what the stock has done. Because utilities, when I showed you that list at the top of the program about the number of stocks that were within 5% of their 52-week high, utilities were at the absolute bottom of the list.
Right. So remember about utilities that in 2022, they did very well as a defensive play in a bear market. Last year, they gave a lot of that up. It had a lot to do with NextEra Energy, which was the biggest utility, still is, and was way overpriced. So the whole sector came down also as people fled from defensives into growth names. But at this valuation for PG&E, I think this is an easy one to own.
Okay. Intuit is Thursday morning, tomorrow morning. Joe, it's in the Joe T.
Added last April, been very strong performer throughout 2023. Here we are in 2024. I think a lot of analysts are calling into question right now if there's exhaustion in the stock. Revenue is expected to grow at around 11%. That really meets the revenue targets of this company. QuickBooks division will be strong. Credit Karma, which is the loan division, there's some weakness that's indicated there. This really is a stock that could go either way, and I do think it is susceptible to the technology complex if in fact it weakens.
All right, we'll take a break. We'll come back. We'll talk about 2 big winners, 2 big losers. Do it next. Sniffer down there. I'm back. Now I'm really mad. Jimmy does not like to wait. SPY just hit the 200 on the 1 minute.
Jimmy got burned on the video. I'm gonna go get my coffee.
All right, let's talk about two big winners and two big losers today. Winners, Garmin's on my list because it's up nicely after the company beat EPS and revenue. You own it in the Joe T.
And this is a margin story.
I still think I
added
should
to
be
the
in
index
this
last
tonight.
July margin came in very strong, gross margin at 58.3%.
If it was at 650, I would be in it.
Buyback,
We hit
dividend,
666.
Strong management of the balance sheet with obviously some very powerful momentum recently.
Losers, Solar Edge. Can we see that one? Because it's getting hammered today. That's after mixed results, a smaller than expected loss. Revenue guide, though, for the first quarter was well below expectations. We don't have any ownership.
We wait,
specifically
you
on
idiot.
that, but you have been looking, Anastasia, at solar stocks.
That's right, because clients have been asking about it. Some of them do own it, and it's been a really tough trade to own. And unfortunately, while I think a lot of negativity has
honey,
been priced in, I just don't know what the positive catalyst
If your
would be.
clients own this, why are you recommending solar in the wintertime? Jimmy would have a conversation with you, and you might lose your job.
Company where it's a lot of the times it's less than one, so it's a lot of leverage for these stocks, and residential solar demand has slowed down significantly because, Scott, if you're trying to put rooftop solar on your house, you have to borrow money, and you're borrowing that at a pretty high cost right now. And by the way, the cost of electricity with nat gas has declined. So unfortunately, while valuations have reset, we're still looking
It's
for
really
that
not
positive
dropped that
catalyst.
much
That's
at
a-
all.
Weiss, give me something quick on Teladoc. It needs a consultation stat because the stock's getting crushed.
Stat is right.
T-Doc.
Yeah.
Look, it's a complete commodity business at this point. I can't tell you how many, virtual online healthcare provider companies that I look at. So no barriers to entry, no mode. Hospitals can do their own. So frankly, I think the valuation
This looks
is
sexy.
arguably maybe too high.
We'll take a break. We'll come back. We'll do final trades next.
I'd keep an eye on Teladoc. Looks too sexy for my walk. Too sexy. Oh yeah, you sexy. All-time low of $15. So yeah, I'd keep this one definitely on watch. T-Doc. Find out why it's down so much. Off the earnings. Oh boy. Man, it really sucks. I think about this all night, going down there and meeting these people to inspect this building. It's not my job. So I'm reluctant to go down there. I think they're like pawning it off on me. And I go down there and they already showed up and they're gone. That's what. Dead coming. I put 24 hours of thought into this thing. Jimmy does not like to wait. So I cleaned a couple windows and cleaned this one little door. And then I went back up there and said, man, I'm supposed to meet somebody up here at 11:30. Well, they've already been here. So shit. I missed out on a trade. Cost me money. How dare you? Mike, you're into solar, aren't you? How's your business doing? I guess it depends on what we're doing, right? If you've had a government background check, you're probably doing pretty good. What about 28K? You make 28K today, Yoko? Take SOUN instead. Sown without the D.
Angel.com.
All right, can't wait for closing bell a couple hours from now, 3 o'clock Eastern time. We're going to drive you right up to NVIDIA's numbers.
Big orders coming in on Sown.
Bryn Talkington.
15,000 right there.
Rascon. We're also going to have a conversation with the former Dallas Fed President Robert Kaplan about what the Fed may do.
Frick. We don't want to listen to your Dow president.
I'm going with LiDAR. Stock has just been a star since they reported earnings. Again, this is really geared to the airports and TSA, to defense, etc. So I like this name. It's still cheap. I buy it here.
Jimmy Chalet.
General Motors. Look, I know we talk about this thing being dead money for a while, but it's at the top of its 2-year channel, and there's fundamental reasons for it to break
shut
out.
up.
You like Jimmy Fondue?
I like Jimmy Chalet. I'll do Jimmy Chalet.
This guy.
Cybersecurity, going back to where we started the show,
I just downgraded your ass.
I want to be a buyer.
Joey.
Do you say General Electric or GM?
All right.
I think you said GM.
That's better than fondue or Jimmy Cheese.
Hey, welcome to The Exchange, everybody. I'm Brian Sullivan. Here's what's ahead. Chips, they are front and center. Key events for NVIDIA and Intel today. Let's start with NVIDIA. Maybe the most important stock in the world, consistently surprising investors every quarter, and it's been printing money for them. But can the company keep that going with competition growing? We'll talk
These
about
lackluster
it.
alerts on
Can it
NVIDIA.
compete with NVIDIA? Does it even want to? Your guest says yes, and we'll explain why. Plus, Intel CEO will join you live in just a few minutes. Bottom line, everybody, it is a big show.
There's got to be one person out there that calls the stake on all these guys. Used to be George Soros. He used to be real big in here on CNBC. They don't bring him up anymore. But they used to talk about him a lot back in the day. And I didn't like the guy. He shorted the market a lot. Why was I talking about him? I had a reason. Shit, I can't remember now. Oh, yeah.
A little.
These guys, there's got to be one person out there that calls this market. Maybe the big bankers, Jamie Dimon or whoever. Warren Buffett. Now they're all bearish. Everybody's talking bearish. It's like we all got a sucker punched, got fooled. Everything's going to go up because of 6 rate hikes, and now they're talking about none maybe. They don't know what the heck they're doing on here. Neither do I.
The average move, by the way, post earnings for NVIDIA stock is up or down
SPX
roughly
knife here, man. It's going to look
7.5%,
sexy.
So fairly volatile. Options markets right now are pricing in what could be a plus or minus 10% move in the shares, so more volatile than average. And by the way, at a $1.67 trillion valuation, a 10% move, simple math, could equate into $167 billion worth of swing if those prices bear out the way that the prices are coming out right now. And just how much is $167, $170 billion? We'll take a look at this just for some context. The current market cap of Verizon is $170 billion. IBM, Big Blue, $168 billion, and Uber Technologies at $160. So, Brian, what we could see hypothetically, if options prices play out, is a move to NVIDIA that adds or subtracts an entire company like one of these after earnings this afternoon. I'll send things back over to you.
Dare I say, Dom, that is random but interesting. Dom,
RBIs, I love it.
It's fantastic. 170 billion. Holy smokes, Dom, thank you. I'm going to steal that for tonight, by the way. All right, let's bring in somebody who knows what is at stake and who owns a stake in Intel. In fact, was a software engineer back in the day when technology and data weren't really ready for prime time and there was no such thing as a data center. Very different story certainly today, and now she is a professional investor. That is Boca Capital's Kim Forrest is back. Kim, let's start with NVIDIA. I mean, wow. I saw you nodding off to my left on the giant screen here. Big numbers around NVIDIA, their earnings, the options activity that Dom just laid out. How important is NVIDIA tonight?
Very important.
Well, Brian, I think numbers say it all. It's really, really important. But let's talk about why is this important. I think what the two questions that are being asked, probably invisibly, is first, is AI a real thing? Is generative AI
you ready?
The next internet, the next whatever, the next big
got 120 on these.
It's going to change our lives.
SPX Lotto,
is,
4980 strike.
The second thing is, does NVIDIA benefit from this quarter, and does that build out still continue? So those are the things that we're going to hear about tonight. And who knows? Who knows any of these questions other than
I do.
I'm going to put a stake in the ground and say, yeah, AI is a thing, and it will be in 5 to 10 years incorporated in many ways in our life that we can't even imagine right now.
Yeah, and would you agree that it is, if not one of the most important stocks in the world? I mean, NVIDIA matters to NVIDIA, but it seems to matter to everything because they're the forefront of AI, or one of.
It's the big...
Hey, Jack. Brian, I got a secret for you. Did you know Intel was the big stock of the day at one time? Did you know that IBM was the big stock of the day at one time? Did you know that Microsoft was the big stock of the day at one time? Do you get my point? Did they ever tell you not to marry a stock? I'm just curious. If they did, Brian, let me know.
We've got Intel, and we got a live interview. Christina Partsenevelos is out west, has Pat Gelsinger here in a few minutes. Christina may be patched into the IFB right now. If you are, hi, Christina. Bonjour. Is there one or two specific questions that you would love to hear asked and answered from the Intel CEO as an investor?
Yes.
Yeah, I mean, what's their plan for AI? Do they have people already signed up?
Come
read
on.
a little bit of the press release.
SPX at 105. Add on here, maybe.
Favorable, and timeline is important. What's the timeline for all of this? And I think those play into tonight's NVIDIA results as well.
There you go. Kim Forrest, Boca Capital. I know everybody's waiting with bated breath for tonight at 4 o'clock. Kim, thank you very much. All right, so we just mentioned it. Why don't we stop talking and get to it? Intel CEO Pat Gelsinger is with Christina out in San Jose,
105 and
California.
120.
Christina, I'm going to sit here and let you take it away.
Thank you, Brian, and yes, I did hear you. Pat, thank you so much for joining us today. Great job on stage. You have a lot of big announcements, and I want to start with, I guess, the big one, top in headlines, and that's signing Microsoft as a foundry customer. Does that mean that Microsoft's going to be using Intel's production for its homegrown chips and only Intel? Can you just provide more details on that relationship?
Well, it's
break it.
Right, you know, Satya just said, hey, they've committed
Got 20
designs to
contracts.
18A, and he didn't say if it was their designs or which different segment. So we're just happy to have them as yet another 18A customer, and he was willing to go public with them as a customer of 18A, and it's adding to the growing list of foundry customers that we have for both wafers and for packaging technology.
So it's also adding to your pipeline. So your Intel foundry pipeline was originally $10 billion, you upped it to $15 billion.
Yep.
Can you just explain that $5 billion difference? Is that because of Microsoft, United Microelectronics, your foundry partners? Like, what's driving that growth specifically? Especially when you've said on earnings calls that there's going to be no meaningful revenue growth until 2025.
Yeah. And, you know, three things that we've getting from 10 to 15. You know, we announced the UMC partnership.
We're at
which
50
adds to the
now.
Pipeline. We've now announced Microsoft as the next 18A customer, and we've also completed a number of additional packaging customers as well. Our advanced.
I'm gonna see if we can get back up here.
So those three
to the 200.
Pipeline up pretty substantially.
If we break this resistance, we
so
will.
We've updated the number to over 15 billion now.
But the bulk of your revenue right now just comes from packaging, though. And we saw weakness, which impacted your
Then we
quarter.
broke it.
That was some of the traditional packaging, but the pipeline is almost all around.
If we have any rookies that took this trade, make a business decision. I want you making money.
Partnership, but increasingly the modern nodes like 18A. So we see a very robust overall, pipeline of customers, and our lifetime.
I'm going to see if we can get it up here to the 200.
Over $15 billion.
Right now is an exit idea.
I'm gonna just make.
We're at the
I guess,
63
for a second because it's topical, and it was your commentary about Ohio and the plant delays in Ohio.
Now, if we get three white candles here, we got this is a good rebound.
You'll have to change your forward guidance because of those plant delays.
So when you build a factory like this, it's really two phases. One is you construct this.
I'll go ahead and take a grade.
It takes multiple years and some of the most complex plumbing and chemistry and building and seismic that's done on any building on Earth. And that has continued uninterrupted with no delays. So the building is underway. If you go to the site today, cranes and concrete trucks and so on. Then filling it with capacity when you put that expensive equipment in.
Bingo.
That's pushed out a little bit given some of the market conditions. But we're continuing to get the building built, and then we're going to equip it and use it for production.
What do you got?
Depending on market
1D
conditions.
equals D, mean line at.
Expected when we announced the
What do you mean by market conditions,
Oh,
though?
1 day.
Well, when do I have foundry customers? What happens? We're in a very tough economic
Thought you said one dumbass equals
the
main line of 4962.65.
At this time, and these when you equip the factories, when we announced the site, it was over 20 billion. Right? And about a third of that is the building. We're getting that.
I mean, I could take profit here and be very happy.
Project, pouring concrete.
And I think I will. 8 minutes.
Construction. And then
I'll
the
accept
second
it.
Phase, 2/3 of the cost is in that phase.
170?
Put that equipment in place, you've got to use it. That's the only way the economics work for semiconductor.
Washboardjim just put in a fake sell, Jack.
Speaking of the economics, CHIPS Act funding. Pipeline. We know Global Foundries just received funding. You're next, and I say that just because Gina Raimondo, the Commerce Secretary, took the stage, and yet Intel hasn't received any funding just yet. The March 7th State of the Union address by President.
So we have two huge engulfing candles. And what you go in here and do is you go in here and you type in 2. Engulfing candlestick pattern is a candlestick chart pattern that occurs when the second candle's body is completely overlapped and engulfs the first. This means that the second candle is a larger real body than the first. That ain't what I'm looking at. Two bearish engulfing candles. We're at 195, baby. Now it's time to take profit. If you don't get it by now, man, don't you dance with my chicks. Out at the 200 SMA. Called it. Bingo. Damn, Jim. How in the hell? I can't believe it with my own eyes. I thought Star Trek was real.
Live long and prosper.
Exactly. You hit the 200, you get out of the trade. Now that was a very profitable trade for me in a very short period of time. Why did I go heavy? Because we were at a 2 or 3 day low there. And the last time we did something like this, we bounced right up, had a nice little bounce. We've done the same thing right here that we did yesterday. This thing can go higher, but we got a 1, 2, 3B, which you got to take in consideration as a resistance level. You got to draw this trend line in here. When you start getting close to that trend line and you have a buffer of the 200 SMA, you got to get out of that trade. Think you there? I don't think nobody trades the 200 like I do. I met one person out of the 1,000 that I've met. People used to tell me, Jim, why you get out early? And then they'll come back to me and say, man, we just had a huge knife, Jim. You got out right at the exact penny. Why? What'd you do? I said, well, just need one line, and that's the 200 SMA. That's all you need. If you didn't know how to trade, just put the 200 on there. Now we're at 225, frickin' nut. Bust a move. I used to make beer with this guy, and he moved to Cincinnati. So we went up to Cincinnati to meet him one day, and he had a dog, a little bitty white dog. And we knocked on the door, and the little white dog was so excited to see me that he went over to the wall and peed on the wall. So from then on out, we called him Bust a Move. So if you can count to 3, you can trade with me. 1, 2, 3. This one don't count because we didn't hit the bar. There's reason number 3 to get out of that trade. Wubbits, Tubus, and a freebie.
Miss it by that much.
That's exactly right. Now I'm going to go in there and have a snack. I can't believe, man, I've thought about that freaking meeting all day for a whole 24 hours. And these government employees, they're so freaking spoiled. We have any government employees in here? If we do, I'm going to kick you out. No comment, huh? Nobody wants to confess? Damn, that was a nice trade. If I could trade everything, if I could do that every time, I mean, you sit here and you make almost $2,000 on a trade in less than 15 minutes. I mean, again, let me repeat. If you can count to 3, you can trade with me. One, two, three, boom. 1, 2, 3, out. There's number 4 reasons to get out of that trade at that resistance level. I've gave you 4 now. Trend line, 1, 2, 3, 1, 2, 3. Expansion pattern, 1, 2, 3, boom. I'm going to give you a big secret to people that have a hard time trading. I come in here with a clear mind every morning, and I don't think about stocks in my sleep. It's weird. Everything else I do, I think about in my sleep. Fishing, hiking, having premarital sex. Joking. Fishing, hiking. I don't even dream about cleaning.
Most illogical.
Very much. So you got to come in here with the right mindset. You can't be worried. You got to be an optimistic. If you're having the hardest time, you got to take a small break in paper trade and figure out your own system. I used to hate it when I'd get into rooms and they'd tell people to trade with real money. You ain't going to learn nothing until you trade with real money, and I don't quite believe that. You got to have a strategy. And just for an example for this 1, 2, 3, it failed, but I didn't chicken out on the trade because these two big engulfing candlesticks just came in there and just, somebody unloaded. Excuse me. But back in the old day, I would have forgot about this trade and moved on. Just learned so much here in the past 3 years about holding on a little bit longer, especially when you're at a bottom.
The first part of the year, 5% year-on-year growth at our resorts as far as arrivals and room nights. That's a very positive sign. And what we saw in 2022 was revenge travel. 2023, people tended to go abroad. And given that 90% of our resorts are in North America, we're really...
Man, we don't use the word broad anymore around here, guy.
And we're already seeing in the first half of this year, our #1 demanded destination is Florida. and I'd expect that strong demand for leisure travel in the Sun Belt to continue throughout this year.
In other words, a lot of people driving, not flying as much, staying semi-local.
We'll be right back.
That's right, and I think especially on the heels of 24 months of higher inflation, people are always looking to good value. In our business, 80% of our owners have fully paid for their vacations, so the value they're getting from getting to our resorts, whether it's drive to or fly to, it's not incremental spend for them. So the value's there, and they're getting to resorts near their home, usually within 300 miles of where they reside.
Yeah, have you seen the consumer, obviously coming out of COVID? COVID is a very different thing, although you're all over the United States, and as we know, and as I know, because I lived in Wisconsin part of COVID, is that the way people acted was very differently. Without getting into that, now we're coming out of it, right, or out of it. Has anything changed permanently from that in the way people view travel, view spending, view their lives?
Well, heck yeah.
Well, I think two components. The first of which I'd say is we saw a noticeable jump in the average length of stay at our resorts post-pandemic. It's 2024. I've already been looking at the length of stay bookings. They're all up. In fact, they're even up from 2023, which says to me this work from anywhere environment is here to stay. I know there's a lot of pressure to get people back to the office, but the reality on Main Street is people are getting away on a Thursday night, having a 3-day weekend, and working from the kitchen table of one of our resorts on a Friday afternoon. I think the other component is this industry has always been viewed as a high discretionary purchase item. The reality is coming out of the pandemic, people said they're not going to give up their leisure travel. And as I mentioned earlier, with 80% of our people having owned, fully paid for their purchase, the idea of this being a discretionary industry is quickly going away.
Oh, that's fascinating that people view it as part of their new lives, because to your point, they knew once they lost the ability to just have somewhere to go. I would imagine that that's going to stay with us for a long time, Mike. That whole idea of things can be taken away in a week or two. I need a permanent destination. So if that is the case, who are you taking business from?
Yeah, well, I think it's an interesting dynamic in the space. You have to look at macroeconomic trends or macro leisure travel trends. And what are people asking for today? And I get the question all the time, are vacation rentals hurting our business? In fact, I think they're helping our business, because for the longest time, you were arguing against you're vacationing with 4 people in a 300 square foot hotel room. Let's face it, when you're vacationing in a vacation ownership or vacation rental, having a 1,100 square foot 2-bedroom vacation definitely makes for a more enjoyable and less stressful vacation experience. So I think the macro trend is really leaning toward more space during your vacation. And in our case, the idea that you're doing it with a branded company, whether it's Wyndham, Margaritaville, Sports Illustrated, or now Accor, our most recent vacation ownership purchase, people want to travel with a name they can trust. When they put their key at the door, they know what's behind it. So for us, I think we're taking business away from smaller accommodations that are unbranded, and in some cases branded.
There you go. Mike Brown, fascinating stuff in travel. Have a successful 2024 and in the new year. We'll talk to you again soon, I hope, Mike. Thank you.
That's our plan. Thank you very much for having us.
Be well. All right, on deck. Any of you out there remember Beyond Meat? Remember them? It was supposed to change what we eat. But with the stock in the meat grinder lately, they've got a new plan to rebuild the business. Kate Rogers spoke with the CEO and will join us to explain what's going on next.
Knowing, this is a rule I tell everybody. Before you take a trade, know when to get in and know when to get out. Before you even take it. Have an idea where you're going to get out. If you don't have an idea, you should not take the trade. You're going in blindly. If you can get out in the heat of the moment, you're guaranteed to get out, and everybody else is sitting there like a lump on a log. No, Miss Jackson, Because I didn't get out in time. See, I can look at this and I could say we have the possibility of coming back down here and hitting this shoulder line off this inverse head and shoulders. This is a megaphone pattern, so we know how wide they can get. So if it doesn't break the 200 this time, we could come back down and retest the old resistance, which now becomes support, and take it off a higher low off this inverse head and shoulders. And we could have a two-headed snake here. Yeah, I am anal. A lot of people don't take time to study these charts like I do. They have different kind of indicators telling them when to take a trade, like the CCI or Bollinger Bands or standard deviation or see, here's a three-headed snake here. Actually, if I draw that trend line right there, no, there it is right there. Actually, got to get the other one out. Right there. See that? We've got the left shoulder, the head, the right shoulder, left shoulder, the head, then the head, and this thing can come back and create a right shoulder. And that matches right up on that resistance level right there, so I'm going to put it in alert. At my next support level, which would be right there. See, right now it's not telling me to take the trade. In fact, what it's telling me is the 9 trying to cross down over the 21 is a bearish indicator. So get ready. SPX calls. Here they go. Now what I just... I'm going to bump it up 1. Maybe 2. 49.70. $43.50 to 49.70 strike. There's a tweezer bottom. Didn't get. I'm gonna see. I'm gonna wait. No, this could bounce. Let me see. Jimmy will. Wait.
and then the stock sold off. There was a period from the end of summer till the end of the year where the stock went sideways for 3 months. This has been a meteoric rise, but there's been prolonged periods of sideways consolidation and value kind of creation, as Ben Lichtenstein would talk about in terms of the technicals. Are we going to find ourselves in a new one of those? Is this potentially a more range-bound name? Or is it just going to be flat-out FOMO-esque and it's going to blow to the upside again, 20% plus?
Yeah, and that's $1 million question, but we've already seen it lose. I mean, almost $80 billion in value just yesterday. Today, also sliding, not as substantial as what we saw yesterday, but consider this. The day that they passed Alphabet as far as market cap, it's like all we could talk about. Hey, they're number 3 as far as a U.S. company, as far as the largest market caps. Now we're back to number 6. So no one wants to talk about that, though. It's like anyone wants to talk about the strength of NVIDIA, no one wants to discuss the weakness.
And in that process, they caught the entire value of the Hong Kong Stock Exchange. They essentially caught the entire GDP of Canada.
Mm-hmm.
I mean, some of these things, it's like the entire stock market in Hong Kong are a chip maker. That's at like 40 times sales. I mean, it's pretty incredible. But, I mean, you might have been saying that at $350 a share and it got to 740 plus. So, it's going to be fun. I'm excited for it, Jenny. And because it's FOMO, we looked at a couple different strategies on Inside Out. We looked at a neutral strategy. We looked at a neutral to bullish strategy. And I know that they talked about it on Fast Market as well. This is just a flat-out bullish strategy that can pay off 4 times the investment if you get a huge move to the upside. But, there's a pretty good chance that it will, be max loss if it doesn't have that happen post-earnings. What I looked at here was buying a call vertical entirely out of the money, and it's entirely expiring this week. The 750, 755.
And Intel looks sweet on the 20-day.
46.11. This is essentially just say get to sort of those all-time high levels again, slightly higher, 1-2% higher.
Off the 200 here, if it's a pivot point.
$1 debit or $100 at risk, this can make upwards of $400.
I think that's more important than this one down here even.
Usually that ratio is reversed, and those are higher probability trades. This would be a lower probability trade, but it's a FOMO-like trade. You're taking a $700 product, $670 product, and you're making it a little bit more accessible, and you're taking a position that can pay off 4 times the risk if it's correct, if you get that big move higher by the end of the week. But in the event that it doesn't happen, you have that risk definition. You're not going to be exposed to a massive.
Boy, it'd be nice to catch it off the 200.
It does need the move. The break even theoretically is $7.50.
$5 dip.
$5 higher than the highest price that we've ever seen for NVIDIA, at least during the open market hours.
Right now it's flagging.
Even including the pre-market session as well. So when you're looking at this, is that possible? I mean, it would be about an $80 rally to get to break even, $90 rally, $85, $90 rally to get max profit. Not impossible, but maybe not the highest probability, but very FOMO-like.
I mean, in NVIDIA, in its true fashion, always FOMO-like, as we are down 3.4% here, still up 225% on a year-over-year basis and off of lows.
On the weekly, we're under the 200.
So we'll be watching those numbers
we're squeezing
carefully when they release today after hours. But now to shift gears here and look at another moving story. Lee Young, senior markets correspondent for the network today, talking all things beyond, as it's apparently issuing out this new burger and its next iteration of fake meat. Renita, I have to say, it's been a minute
I don't want to erase this yet.
I've fallen off the vegetarian train, but walk us through the story.
Hey, I understand that completely, because there was a time back in 2019 where people were gobbling up shares of Beyond. It sent the share price up to above $200 a share.
I was one of them.
To be healthy, it had these huge deals with fast food chains like Taco Bell and Pizza Hut, right? But now it seems like people have lost their appetite for meat alternatives, right? And this stock is trading at below $8 a share. But today, they're introducing a new set of the next generation of meat alternatives that they now say is healthier than the last, And right now, Beyond really had been trading back and forth today. At one point, I saw shares a little bit lower. Investors probably trying to figure out how they're taking this news, especially since the market for meat alternatives has not been great. great lately, but they're including a healthier version of the Beyond Burger and Beyond Beef in this new Beyond 4 product line. And they say that they worked with the Stanford University School of Medicine, registered dietitians, and other experts to help develop it. And Beyond has
It's at a good
said
spot.
that its faux meat was healthy, but they've also always got
Real nice
blowback
setup.
saying that it's chock full of chemicals and other unheart healthy things. But today, at least, they say they're going to replace some of the agents in there with avocado oil instead. They say that that is about 20% less sodium in the new products. They also said that they cut the saturated fat by about 60% to 2 grams, and then they've added other healthy agents in their ingredients list like red lentils and faba bean protein. So overall, Beyond is saying that they have a healthier product right now, but whether or not investors are buying it, I don't know. We'll have to see, Jenny.
They've got to figure out that Beyond taste, Renita. That's all that, like, it has,
Agreed.
like, everyone knows it. The chicken, sausage, hamburger, whatever, it has that specific Beyond taste, and everyone knows it. If you've had it, you know what I'm talking about.
do.
They get away with your Beyond flavor. We don't want it in our fake meat, but we will leave it there. Appreciate the insight, as always, Renita Young, Senior Markets Correspondent for the network. Now coming up next, time to preview Rivian and Lucid ahead of their earnings. Both names that need some love as the EV space has been hit as of late. We'll discuss what can be expected from these companies coming up next with Kevin Green.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
I don't understand why you call it 360.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime.
Goodbye. One, two, three. 1, 2, 3. I have it on there already. Interesting. Now I want you to look on the daily here. Let me clean this up. I'm trying to figure out if someone asked me a question privately. I've already mentioned it a couple weeks ago that we were in a kind of like a bubble. Now that we pulled back here in a couple weeks. So, for example, I mean, this is a big dip to my next moving average. It's $90. So right now we're sitting right on the 21 EMA. This is the new chart that I'm learning that I picked up a couple weeks ago. I'm using the 200 SMA. Get your pencil and paper out, YouTubers. I'm using the 63 EMA, the 21 EMA, and the 9 EMA. And I'm using these as support and resistance levels on different time frames. So we've got the daily time frame up here, and we're sitting at the 21. That's a real solid support level, as a fat cat would say. Your next would be the 50 SMA. And let's put the 50 SMA on here and see what that takes us to. I'm just guessing. I'm not saying it is. That was just a guess. Now it's got me curious. Anybody know what color I put on the 50 SMA? Johnny? Is that you back there with your hand up? Yeah, it is, Jim. I forgot how to do Johnny now. Johnny Depp. R. Yes, it is, James. That's a little bit better. Okay, we're going to apply this. And the 50 is right by the 63. I'm going to keep that on this chart for a little bit. So the 21 is a solid support. And I want to take that into consideration if you wanted to swing this off earnings, because that's pretty solid. Nothing's pretty. That's very interesting, James. Do you have the balls to trade this? Nope. There you go, the video. It's something to think about. Tell you what, today's what, Wednesday? I'd be going against all odds, I think, the way the fat cats have been talking about in the video. If I bought me a call and swung it. And at these price levels, only the rich can trade it if they're trading stocks. Mike's probably got 200 shares of it.
Moving in that direction alongside Quest Diagnostics. I'm not saying it's going to happen, but I actually think there's a little bit more interesting undertone to this news with that relationship than just the food element to the traditional business that Instacart is in.
Yeah, and George, I think
that's very interesting support level
to some of these other companies that have partnerships outside of like the typical food delivery realm. I mean, Uber Eats is one, DoorDash has been one. That's been hugely beneficial to some of their more recent
There's a
earnings.
gap.
But as far as Instacart goes and some of its growth going forward, I know they're relatively new to
earnings could pull back and hit this support right here.
How do they continue to strengthen their balance sheet, and like how are they looking as far as right now stacking up compared to the behemoths that have become DoorDash or Uber Eats?
Yeah. So it's a really good question, Jenny. So I'm going to use Uber as our primary example because Uber has really established itself not only as a company but as a stock, because the stock is actually at new highs as of recently. It's taken some time for Uber to develop that stock over time. They spent a lot of money and they're now profitable both on an adjusted basis but also on a GAAP basis. Instacart is obviously a new company from a publicly traded standpoint. If you look at their adjusted earnings, the estimates for 2024, they're expected to earn about 52 cents, and even next year at $1.07. So they're expecting to double their adjusted profits going forward with sales, which are rather modest at around 10%, $3.3 billion estimates for this year, 2024. I think the story for Instacart is that they do have a lot of growth potential as a company. The challenge is right now, even though the stock is higher as of recent and up about 5% over the last 30 days, is they have about $1.6 billion in losses they need to finance. And they're generating about $3.1 billion in revenue. But I think this is a company that's going to probably continue to issue additional shares.
Oh, that looks very sexy.
To capitalize their business and expand their business,
bounce up.
which is a good thing. It may come at a short-term expense to shareholders because that is going to.
If it doesn't hold to 21,
earnings per share
this is
on
my
a per share
opinion.
basis. The other thing is you got to think about IPO lockups.
Shut up for a second. You only talk when you're spoken to. If we do not hold the 21 EMA, if we don't hold that, I'm going to go ahead and buy a put all the way down to this next channel. I'm trying to think where it would be. It's kind of hard to say. You got another gap trade right here. So it could be that next bottom of that candle right there. That's probably what it is. Right there. At 630. 639. That's still a good drop. $30 drop. So it has to hold to 21. Well, I'm going to do a paper trade. And what was it? Iron Condor. At $4.70. So what's an Iron Condor? When you sell a call and a put spread, you are buying an iron condor. The market neutral trade, meaning there is no inherent bullish or bearish bias. Now I think there is. Because it can go either way. Is that what they mean by no bearish bias? Bullish or bearish, it could go either way, so it's not biased like it's going to be bullish no matter what. So I looked at it here, it was at 470, now we're at 465, 462. What's the other one? If I went in and instead of an iron condor, oops. I'm going to do a call. That's not what I want. $465. This is the 21. So I'm going to put that in a different color. $669.28. That's right where we are. We just squeezed off of it just now. So that there looked to me like a, yep. Bam. Head and shoulders. So this is in the video. Mom. Well, I have to have this knife here, see if this went up or down. It just held steady. I don't want that. This is traveling late here. More weakness. I was just getting ready to buy this. I can't find anybody that's bullish on this thing right now.
Who's a frequent guest on the network was actually alluding to the possibility of a possible hike once again yesterday, which I thought was interesting because we had talked about that. People were talking about that
for January as a maybe, not likely, but maybe. But now is it, is it back? So as the Fed minutes are being released, what are we seeing here on the big picture?
Well, we're seeing a little bit of weakness, continuation of the pattern that we have been seeing here throughout the day and to begin the week for the most part. Nicole, I'm not surprised. I mean, we got 10-year yields inching their way back up to the highs that we recently saw, about 4.3%. Now, here you can see
PayPal just had a double bottom
coming under pressure, but I think the selling we're seeing, SPX down to 49.54 earlier today, somewhat limited as we have yet to take out the lows. Okay, now here we're coming off a little bit as we speak, but we saw the futures down to 49.67, Nicole, and keep in mind this data, the Fed minutes here, they're coming about 3 weeks old in many ways, I think in many people's eyes after the CPI, the PPI that we recently had. We had a 20-year note auction this morning or earlier today, a bit of disappointment as well. Recently heard from Atlanta Fed, Raphael Bostic talking about how there's no rush, no clear, it's not clear yet that we're headed to 2%. So again, I think the market's taking a little bit of a step back, but as I look here at some of the comments coming across the wire here, a Fed policy rate seen likely at peak, it sounds like, and that's been one of the things I've been focused on, right, is it feel like when we were at these all-time highs, the market was more not so much concerned about when that rate cut comes, right? And based on the Fed funds tool, it looks like 28% still potentially for a cut in May, 54% expected to see a 25 basis point cut in June. So the expectations have been pushed back a little bit to later on the summer. I mentioned the disappointing 20-year bond auction today. That also sent treasuries a little bit higher. Lower yields higher ultimately. But again, there was a lot of concern here associated with that CPI, that PPI number. So it'll be interesting to see if they comment on the
UAL had a 20-day high today.
Inflation still kind of looming.
44.10.
Yeah, and what's interesting is the Federal Open Market Committee within the minutes noting that they are more concerned with inflation, and that that is what could rear its head, and that inflation progress could stall. And if that is to reignite, that is problematic. And that
just
is
broke resistance on the video.
At least higher for longer and pushing off those cuts. They did say they're moving to a better balance, but they are more concerned about inflation.
The stock wouldn't move much.
That the hike, is that still on the table? I mean, I know you said the word peak, right? The policy rate is likely at its peak. But I guess they never
paper trading this right now at 470, 465.
I think that's important to note. I mean, right? Especially
we hit 473 on that move up. It should have went up more.
Above, but taking a look here, it looks like S&Ps are actually bouncing back a little bit here right now. Fed did talk about how things look like conditions were coming a bit more into balance. So S&Ps here, as I look, the SPX
Fed minutes
about to turn pot.
Fed minutes here, we just had a spike, I think. Am I right? Yep. Dadgum, you stupid idiot. I didn't think about it. You know what gets me? Jimmy said it was going to pull back to this trend line. And I wasn't watching it. That gets me. You know what that is? Anybody know what it is? I don't want you over here. I said what it was. Who wants to be the first one to say what it is?
We choose truth over facts.
That's right. Facts is megaphone. Megaphone. I'm going to erase all this stuff so you can see it. And it said we're going to pull right back to it, and it did, and I wasn't here to benefit. So here's your bottom part of it, the old resistance line, which now becomes support. And then you got resistance. There's your megaphone. What was resistance can now become support. Bam. Had a hammer right there. Two beautiful little perfect reversal candles to the upside. Telling you, okay, you got this big engulfing rolling pin. Then you got these two hammers. Boom, baby. Right to the top of that resistance on that megaphone. I did mention megaphone, but I mentioned it down here. I should have looked at that before I erased it. Boom, baby. That was a bad trade. I could have got into that one. I'd have loaded up again. Maybe 40 this time. Oh, I need to put my little dots in there. One is Tubus, Freebie, and Forby. All this here resistance line through here. So that's what was resistance now became support. It's called a falling wedge. How many people in this room knew what a megaphone was before they met me? That's what I thought. That's exactly what I thought. Yeah. Okay, I'm going to tell a story. Now, this might be too much information for any virgins out there, but I go into the bathroom, the ladies' bathroom, on a daily basis. I go to the ladies' bathroom on a daily basis. So the other morning, I knew the lady was in one of the places where I clean at, and I knocked on the door, because I always knock on the door just in case. So I knock on the door, and I hear no answer. I said, I'll knock again, make sure, and I hear no answer. So I open up the door. I'm in here! I'm going, what the heck? Women are afraid sometimes when they're in there doing their thing, and you knock on the door. Sometimes they're too embarrassed to say, "I'm in here. Leave, let me have some privacy." I've walked in on many women before. Then he's lucky he come in there when I was taking a shit. There's a little bit too much information. It's very unprofessional. Just call me the Howard Stern of stocks. There's my little thing. Back over here where you belong. Now I have a problem. It's not that one. It's not that one. It's got to be this one. Bam. Okay. Now what would I do next at this chart to figure out where support was? I'd look for a pivot point inside of this flag. And to find a pivot point, you got to find an equilibrium. And it was right there. We just broke past it. So we got a 1, 2, 3 right here. So let's draw that trend line, get ready to buy the call. We know when to get out because we know how to count to 3. And if you want 4, you might get a little bit more. So we got 1, 2, 3 right down here. And what time is it? Plenty of time. SPX. Oops. So now we want the lotto, the 4970. 4970 at 270. Okay. So I can get out right now. actually created a head and shoulders, an inverse head and shoulders right here. Did we stop at the pivot point? No, I had it a little bit higher, but this could have been it. Yeah, this could have been it. A pivot point channel, maybe. Perfect. That's your left shoulder and your right shoulder of the inverse head and shoulders. We got the SPX Lotto 4970 at 270. We're at 380. Bingo. 420, 440. Ah. Now, somebody just shot the gun right here. $4. Sweet. So this was an inverse head and shoulders pattern. You got your left, you have your head that bounced off this here, and you had your right shoulder. That's a beautiful spot. It's a pivot point. It's also a pivot point. You had your resistance here and your support right here. So that's a pivot point inside of this here bigger megaphone pattern. I was looking for something in here, but you look at it at the bigger one, it was definitely the pivot point. Get back in it here. We come back and retested the right shoulder. Now, 280. So I'm back in at 280. Let's get this one off charts here first. Uh-oh. Might be 275. Okay. Uh-oh. 210. Damn. Let's see, that was a bad trade. Ooh. I'm going to buy 4 more here. Get ready. I'm going to add on soon. $150. There we go. Wow. Went up. That would have been sweet if we could have got them at 110. We just have a new low. It's not good, Jim. Might be my first bad trade in a while. Yeah, I need. I might end up with 20 here. We've got 8. Ouch. I knew this was right. Yikes! Break it.
Well, maybe there are some worries out there, but what better way to resolve your worries than to be on leisure travel? The reality is 22 was a great pent-up year. 23, people seem to check off the bucket list items they hadn't done in a long time, being cruise and going to Europe. But this year, all indications are domestic travels are returning home, And what we're seeing for the next few months is 5% increase for our owner occupancy in what is typically a very peak time of the year, being March, Easter break, and then spring break from the holidays.
Yeah. Where do we stand on the dividend? I know that was recommended to the board.
180, come on, go.
That's something people like to hear about. You want to give us the latest on that?
Absolutely. So shortly on the dividend.
Damn, I wish I'd got in a little bit. Waited just a few seconds.
We raised it last year, and we're recommending an increase from 45 cents to 50 cents at our next board meeting, which we expect to be approved. I think more broadly, when you look at last year's return of capital, we were able to buy back 10% of our shares, pay that dividend of 45 cents per share, and then the middle of all of that, we were able to bring on 2 new world-class brands, Sports Illustrated and Accor Vacation Club, to add to our portfolio of brands. So 23 was a great year for returning capital to shareholders. Included in that is the dividend, as well as grow our fundamental strategic direction around vacation ownership.
Yeah, look, I mean, everybody loves to check out vacations. According to the searches, you were saying beach, theme parks, mountain skiing, city, golf. Those were some of the things people were looking for. What are some of the top destinations or places that people have been eyeing?
All of our top destinations for the first half of 2024 are in Florida. The beach destinations in Florida are fantastic. Obviously, we have the world's best theme parks as well. You attach to that some other more regional destinations in the Wisconsin Dells and even Daytona Beach. Just had the Daytona 500. And then the last macro market that we're seeing a lot of demand in the first half of this year is Las Vegas. They just had the Super Bowl. March Madness coming up. So Orlando and Las Vegas, no surprises as travel returns to the U.S. from a big international year last year. It's the big cities and popping into the Sun Belt regional markets.
Timeshare demand, that's back, huh?
It is back, and it seems to have always been there. It's just the dynamic of the space has changed dramatically. Nearly 80% of the industry sales now are from branded companies. Take our own company, Wyndham, Sports Illustrated, Margaritaville, and now Accor. People want to, on a macro basis, travel in space that's more than 300 square foot. You know, I've got a family of 4, and there's a lot less stress and anxiety when you've got a room to go to and change, shower, and come outside for dinner afterwards. It's just a better way to vacation, and I think whether it's vacation rentals or vacation ownership, I
think there's too many bearers. That or they're just keeping it under the table and they're buying up all the calls on the video into earnings. And then the video comes out with the good numbers and we have a big bounce, and few major fat cats are in on it. But with the market sentiment the way it is, you have to kind of wonder.
Plenty of great hotel brands. Those people develop an affinity to the Wyndham name, and ultimately they come over and spend their leisure dollars with us.
We'll get back in this
we see
again.
In the Margaritaville space, and as we move forward with more brands, it's the affinity purchase that really matters to people, a name they can trust.
Yeah.
I want to move it up and get out of this third.
And that consumer sentiment seems to be improving despite the debt that a lot of folks have on the credit card.
65.
That they feel comfortable, that they have a job, that they'll be able to pay for that. Is that right? Tell me more about sentiment.
Well, I think two things. And first of all, University of Michigan consumer sentiment that just came out is at the highest level since June of 2021. So you're right, as we head into the remainder of 2024, the starting point is at record highs. I think the other phenomenon that's going on now is when people went through the pandemic, there was a greater realization about what they missed of being together with people on their leisure time. You saw that return in 2022 with massive travel, and people haven't forgotten. Of course, they want financial security and they want health security, but right after that, there's a greater appreciation of one, the leisure time they spend and where they spend it, and secondly, the value component of it. And as I mentioned earlier, there's a lot of value in vacation ownership. And with the new, I think the newest trend of vacationing or working from anywhere, it's just a lot easier to spend the extra day where you're vacationing or spending the weekend, work from the kitchen table of a vacation club unit that may be 1,000 square feet. And it's okay nowadays, whereas before in the office paradigm being Monday to Friday, that wasn't possible. So our resorts really fit into that new macro trend.
Look, nothing I love better than talking about traveling and fun, and I'm glad you'll be able to be back on the show with us. Would a lower rate environment be helpful? Because obviously,
I just now noticed something here. We got the left shoulder touch, the right shoulder.
Would that be helpful to you, and how so?
It helps in a number of different ways. From a consumer standpoint, it's not as if you pay for your $20,000 purchase on the day. Most people finance, which means the cost of their vacation will lower the moment that interest rates move down. So yes, that's an absolute positive. Secondarily, we access the consumer finance market, the ABS market, 3 times a year for over $250 to $300 million. So the spread on our loans also would increase. So it helps definitely the consumer to lower their cost of vacation, and it helps us from a profitability standpoint to increase the spread on the loans that we offer.
Right, and most likely we are going to see those cuts coming. I mean, I can't say which month right now. The June was at 74%, July 90% likelihood of at least the first cut. So we'll have to wait and see. In the meantime, congratulations, the stock's up 6%, new highs here at 44.08 hit today. It's been an exciting quarter. Mike Brown, thank you for coming back on the show with me and having this discussion. President and CEO of Travel and Leisure. Thank you.
Thank you, Nicole.
Still ahead in the second half of our show, we'll shift our focus to cybersecurity space. We're going to look at Palo Alto Networks, which is selling off in a big way. Our panel will discuss that. In the meantime, retirement in focus, and Americans are afraid of outliving their assets. So
LLY's drug could be the best drug of all time. Lily. So that was 30 minutes. There's the 1 hour. Right around 7:29:31, the 200 SMA. If we don't break the 9, if we break the 9, we'll run up and hit the gap. So let's move this to the 200 SMA and remove that. And then we got a gap. And that gap runs right into the 21. This is ticker LLY. Now, a strong buy would be off the 200. At 730.44. That's where I'm. Oh, what'd I see? I see something different. What'd I see? yeah. So rising. It could be a triple top if you want to count that wick. Put a resistance right there. 743.21 for LLY. And support right around 730.44 off the 200 SMA. Okay. LLY gap fill resistance support. Very good. I had to put an alert. I did an alert the other day. What is that? Jim's alert. SMCI, IBM, 1, 2, 3. IBM. What day was that? It was yesterday. So this one didn't work. IBM. I was thinking we had a 1, 2, 3 yesterday. I had support level at 183.16. In my alert channel. And we're down here. We broke down below that trend line. $183. Just didn't hold.
All throughout your working career into retirement. We all know this changes because we have inflation change, we have things that might change in your hobbies, debt load you might have you no longer do, and then we need to go from higher risk to lower type of risk and diversify portfolios. So we really like to take a look at focusing on budgeted expenses, what's happening with income, and when do you really want to retire? So we focus a lot on what is your why, because if you want to retire early, there's things that we need to take a look at, either putting more funds into your 401k. Are you maxing them out? How do we take place with having the employer-sponsored match? And are we saving in a tax-savvy way? So just the plan of making sure what does income look like, your budget or expenses as they move, how much are you contributing, and is there still too much left over in bank accounts that we need to hedge inflation and see some rates of return off of? And then what are you doing to wrap up that healthcare piece? And how are things segmented today, tomorrow, 5 years, and 10 years from now to make sure that that plan is still ever changing and moving and developing with you?
Right, understood. What is a mistake that people do? Is there a mistake that you could point out that maybe could help others?
We see so many times that folks just failing to plan, it leads you to having mistakes happen. So if you can plan early, like with anything else, right? So many folks actually spend more time planning their 1 or 2 week vacation a year than they do as they get ready for retirement. And I know some of us laugh about that, but you know, it is very true. So I think that the problem is some folks just think, oh, I'll figure it out. I'm not there yet. Or maybe they think they don't have enough money to see.
1 million followers. Romansev predicts the high prices in Russia will keep demand down for Vision Pro in that country. Apple sales continue because the Russian government wants them to. In 2022, the Russian Ministry of Industry and Trade issued a document permitting Apple products to be imported to Russia, even when official supplies are banned or suspended by the manufacturer. In Russia, that rerouting of supply chains is known as parallel import, and it's part of the reason why nearly 2 years after the invasion and Apple's pullout of Russia, Apple products and a wide range of other luxury goods are still available in stores there. Tyler, back
fascinating story on how things can get in where they're not supposed to. Eamon Javers, thank you. All right, still ahead, out with the old, in with the new. Amazon slated to replace Walgreens in the Dow next week. But it's not the only name our three-stock lunch trader says should be added to the index. We'll share his take next. And during February, we celebrate Black Heritage. Here's Estee Lauder Company's Executive Vice President and CFO, Tracy Travis, sharing her story.
In environments where not many people look like you, you will be constantly challenged to prove yourself. So you need to always invest the time to be well prepared. Being a constant learner is what I've loved throughout my life. My incredible mother taught me to always try to treat others the way you would want to be treated and pay it forward, which has certainly influenced my mentorship and sponsorship of others throughout my career.
Well, well. Got a little snake breakout on the SPY. The VWAP is at 495.29. We broke out of a snake. The SPX. Oh yeah.
.com. All right, time for today's three stock lunch. Today we talk about the Dow shakeup from yesterday evening. Here with our trades, Boris Schlotzberg, BK Asset Management's Managing Director of FX Strategy, also a CNBC contributor. Up first, Boris, welcome. Amazon replacing Walgreens Boots Alliance in the Dow Jones Industrial Average. That happens next week. What is your trade on Amazon?
Well, Amazon is a very interesting trade. It's basically moving now away from all the gains it's made in AI in its AWS space and applying all the knowledge now into their retail business space. Andy Jassy said that they've been able to, I think, reduce their cost to serve by 45 cents per unit, which really increased their margins. Their margins actually went from negative to 6%, a five-fold increase over the last couple of quarters. That's very, very impressive. Then they have this new AI chatbot called Rufus. It's going to be essentially a shopping assistant that people seem to really, really like. Initial reviews have been very positive. You can imagine the amount of AI and data they're going to gather on their customers. My view with Amazon, I think it is one of those companies that could create a $1 trillion business selling services as well as goods, perhaps travel, perhaps healthcare. So there are markets here that markets haven't even thought about that Amazon is going to enter. And of course, their focus on this one-touch life, which is what they really try to customize for all of their customer set, very attractive, and I think that's what puts them, into leaderboard for the future to see.
So this is a buy in your book. Let's move on to the one that Amazon displaced from the Dow, and that's Walgreens Boots Alliance booted for Amazon. Could this be the sign of the bottom in this stock, or what?
So it's very tempting to say it's a bottom. A lot of times when stocks get flipped out of the Dow, they actually do very well. Exxon did well, GE did well. The big problem here is that they have a huge amount of debt on their books. It's a 3.5 times levered company, and their cash flow is negative. So to me, yes, they've had management changes now. They've cut their dividends, so they're really trying to stem the bleeding. But the business is moribund. And I think really for the investors right now, you'd want to see at least 1 to 2 quarters of positive cash flow before you want to dip your toe in the water. You don't want to be, buying a sort of a false bargain. This could be a value trap for anybody who gets into it right now.
That's a strong caution there. Let's move on to one that
we're definitely a resistance
maybe
here.
Some people think ought to be in the Dow, and that would be Eli Lilly.
Yeah. Well, that's my argument.
Now they're talking about Lilly.
GLP-1 is bigger than GPT-4 right now, at least for the immediate future for our civilization. And the Mounjaro, drug is going to have.
We're squeezing right now. We're going to find out any moment on the SPX trade here. I've got it to where I'm not down much.
I think that Lilly will quintuple their earnings to $50 a share. Now, is the stock overbought? Absolutely. Is it overvalued? I don't think so. And for that reason, I think you have to put it into the Dow, given the fact that it's one of the dominant stocks within the single biggest industry within the U.S. economy, which is healthcare. And the fact that it's not there, I think, is a miss. It will be a huge growth, and it's going to change our lives as we go forward.
Strong endorsement for Eli Lilly. Boris, always great to see you, sir.
Thank you.
You got it. Boris Schlossberg. Still ahead, Apple betting big on live sports. The tech giant just released a free score tracking app, Sign Me Up, as it looks to become a sports content powerhouse. The details are next on Power Line.
Six more minutes to Power Hour. Like C150 on SPX 150, 175. Break it. Jimmy said any second, any minute, and bam, you got it. Am I looking at the right stock? Jeez. Might just get out. Hey, Brandon, I got an opportunity for you. You know what a fake sell is? We're getting ready to put in a fake sell. Boom! Nailed it. 175. Again, I win. Again, we win. Fight. Can you tell me what moving average that is? No, you can't, can you? Can anybody? Nope. The 63 EMA. It's my new one. It took over the 51. Boom. Very nice.
All right, we've only got about 3 minutes or thereabouts left in the show. A couple media stories to talk about. We love the media stories before we get out of here. Apple out with a free iPhone app for tracking sports scores. This is right up my alley, Julia Borston. What's the details here?
Well, it's Apple's brand new, it's a free sports app for the iPhone and specifically designed for tracking sports scores, not for watching games, but for tracking scores. Now, this is Apple's latest move to bolster its role as a provider of sports content and news. You can start to download it today. Users in the US, Canada, and UK can find the app to download today. It's called Apple Sports, and you'll be able to see scores from all the major teams and leagues. Now, Apple Services Chief Eddie Q telling CNBC that the app is designed to be fast and simple so users can check back frequently. It's not designed to engage them for long sessions. He also said that Apple has the advantage of not being biased by representing a specific team or league. And while this app will show betting odds, it will not allow users to bet through the app, and you can turn off that feature. Now, all of this builds on Apple's investments in sports. It bought rights to Major League Baseball and Major League Soccer. It also added sports journalism to its news app and features sports-related documentaries on Apple TV+. So now, Apple's expected to make a bid for the NBA streaming games when those rights come up for grabs later this year. Certainly a hot category.
Less than 1 minute to power hour.
Allowing betting through the app right now, that has to be an enticing possibility down the road, I would think.
There are a lot of different possibilities, including integrating the ability to watch sports in the app as well, which it doesn't have yet.
Well, I'm going to go sign up for it right when I get off air here. All right, next, sports streaming platform Fubo is suing Disney, Fox, and Warner Brothers Discovery over their recently announced joint venture to access marquee live sports. Julia, what's going on here?
Well, we got a no comment from Disney, ESPN, Fox, and Warner Brothers Discovery on this lawsuit from Fubo TV. Its CEO tells us that their new joint venture is bad for consumers and unfair for smaller companies like his own, companies which he says have been forced to pay higher fees.
This, to me, is a step in the wrong direction. What you'll see is the typical playbook, which is start with low prices, marginalize competition, and then eventually drive prices higher, which you've seen across all streaming services over the last 36 months.
Fubo is asking the court to either block the launch of this new streaming sports skinny bundle or to make the media giants that are teaming up on it offer Fubo what it considers fair licensing deals. Now, Fubo's stock did fall 75% in the 2 years before the announcement of this streaming bundle, but Gandler says that the fact that these streamers are now starting to rebundle validates his approach to this business. Tyler?
It's interesting. The question really is coming to a head. Am I going to end up paying more for these various bundles of streamers than I paid for the cable bundle that everybody sort of reviled and cut? Thanks for watching Power Lunch, everybody. Thank you, Julia. Closing bell starts right now.
All right, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make-or-break hour begins with a countdown to the most important earnings report in months. NVIDIA in overtime. So much riding on that for tech, for the mega caps, for the AI trade. And we have our experts standing by, from shareholders to the top analyst who covers that stock. We'll get to all of them in just a moment. Take a look at the scorecard with 60 minutes to go in regulation. Well, we've been red all day long. The Russell also sliding today, aside from the majors. Take a look there. The Russell 2000 down near 1%. Interest rates, well, they're elevated. That's one of the reasons why small caps continue to get hurt. And boy, do we have to show you shares of Palo Alto Networks. They clearly the stock story of the day, at least right now, ahead of NVIDIA. That massive decline following disappointing guidance. You just don't look at a decline like that. 105 points, near 30%. And other cyber names, well, they are selling off in sympathy too. Take a look almost across the board. CrowdStrike, Zscaler.
I mean, this is crazy.
All lower. It does take us to our talk of the tape. What to expect when NVIDIA reports in less than an hour, what it truly means for the record-setting rally. Let's ask our panel. Josh Brown has owned NVIDIA for years. He recently trimmed 20% of that position.
Okay.
Bryn Talkington owns it too.
Are you ready
Also
for this?
A longtime shareholder. Stacy Rascon, he covers the company for Bernstein. $700 is his price target. Over
700 my ass. Washboardjim just heard the word PANW. Now, we just touched the 200 SMA. Okay? I already had this as support level at 255.85, which I can see it going up a little bit more here. So right now we're at the 200 SMA. Now, I bet you I can search everywhere and nobody will tell you it's at the 200 SMA, but I will. Just don't tell nobody. Because Jimmy might do something here. Jimmy likes this a lot. Now I put a pennant flag on here. I charted this out yesterday. I'd say that's a pretty darn good call. Say yes, sir. Yes, sir. No, sir. What do you think about that, Michael?
Most illogical.
You think so? I think you need to do some homework, Jack.
And then take another leg higher. Now the stock's actually sold off a bit over the last couple of days into the print.
No, we have a debate going on in the room.
A good thing. Maybe it's kind of healthy if there's some profit taking like in front of it. You can kind of reduce the expectations a little bit. So I'd say, you know, like there's less price into the stock today versus
49, 48, 47.
700s. And I keep saying this.
Now,
I said it on your.
You made it too confusing, Magnificent. What are you trying to? You're trying to put some kind of code in here? 49, 48, 47. You see where I'm coming from? You have the 4 as a common as the dominant denominator, and then you have the 9, the 8, and the 7. I see your code. You ain't putting nothing past me. So what's the bet? Where are we going to go? By close, huh? Okay. I'll tell you exactly where we're going to be. We will close at 49.58.31. Let's clean this all up here. Oh, I like it. Oh, right there. 49.60.96. 665 is key on the video, says Charlox. Jimmy might be asking too much here, but we're going to find out.
Rounding error in the context of the size of the industry and in the context of what NVIDIA is likely to be delivering. And I think that gives you some feeling for the competitive environment as it stands today, right? You always need second sources, and people will be interested in that, but the vast majority of the dollars are going one way.
On the idea that, you know, as Wolf Research put out today, this I'm quoting from their note, Stace. Momentum is deteriorating in semis following a sustained overbought environment. Let's just say that NVIDIA better deliver.
Why is everybody saying overbought now? I mean,
trade hinge on what happens in less than 1 hour?
And I get no credit.
It may, right? I mean, for at least for parts of the chip trade. We've had other companies that have reported, like Analog Devices reported this morning, and like those kind of markets, like industrial and auto, are maybe a little separated from some of this, and they don't look good. Like from the guide was very weak, and that stock is up though today. Like the semiconductor investors in those spaces have been buying cuts. But I'd say for some of like the players in the compute space and maybe even outside of semis, like some of the other peripheral names that are getting driven by this in some of the other
how did I get that on there?
And it clearly, like, it will have an impact one way or the other on those. I'm sure it will.
Brent, is that how you're thinking about this too? You're not just looking at NVIDIA. We don't even need to get into the ramifications for the mega cap trade in and of itself. I'm just thinking of semis, which, I'm looking at the Philadelphia Semiconductor Index is up 51% over 12 months. I mean, a lot of these stocks have been up a lot in a reasonably short period of time. It's been a rising tide. NVIDIA lifting a lot of boats, everyone else.
I think that this quarter, NVIDIA will continue to separate itself from not only the rest of the semiconductors, but also, I mean, the hyperscaler and the cloud service providers are spending billions of CapEx, of which NVIDIA is capturing the majority of it. And so I think that we're in such early innings here. If you go back and look at, the cloud service providers in 2012, cloud was a tiny part of Microsoft's revenues back then, but it actually was able to monetize that, and now it's the majority. And right now, I think the challenge for investors is NVIDIA is like capturing all market share from a revenue perspective today. And I think there's a ton of speculation in a lot of these names.
What was it about Pawn? It was on the 200, right?
And I think that's where you're going to see a lot of the air come out of the tire as NVIDIA.
Yeah, 200 SMA.
But the other companies really aren't. So I still think there's a ton of FOMO, a ton of speculation in other names outside of NVIDIA.
Down 10% or so, Josh, in a couple of days, this stock, to the points that have been made about, maybe it's a good thing in some respects that the stock has been under a little bit of pressure going into the number rather than ramping even further ahead of the results. How do you view that?
I like that setup better. I don't love going into earnings
at a max 6-month return, like of all time, and trading at an all-time record high. It really doesn't leave any room whatsoever for people to act rationally in almost any outcome. So I do agree, having the stock cool off a little bit, not just in terms of price, but looking at relative strength. You don't want your companies reporting earnings at an 83 RSI. To Bryn's point, and I think it's an important one of the parlor games we tend to play on Wall Street in the presence of a massive winner like an NVIDIA or even a second name like an AMD is who's next? Or what's the 2025 NVIDIA? How can I get ahead of that? And it almost never works. Like, it might be good for a trade, but NVIDIA is NVIDIA. And I think Stacy would probably agree with that statement. There are other great semi names. Broadcom's a good example. They actually grew earnings over the last 3 years at a faster CAGR than NVIDIA, the only one, 73%. But like, that's a very specific situation. I don't think what we want to do here is look at NVIDIA and then buy 10 more chip names and expect something similar. It's very unlikely. Even AMD, I think they've made the case that their new chips are going to be maybe better at training than NVIDIA's, but then NVIDIA will own inferencing. I've heard all of these things. I don't believe that that's the reality on the ground. I think they're just theories that investors are using to justify higher and higher multiples. I'd love to hear Stacy's take on that, though, because I think it could probably save people a lot of heartache and aggravation.
Stacy?
I'm sorry. What was the question? Like in terms of where the multiples are going?
Do you believe
that's a question again?
Got this specialization going in training, and maybe
No.
NVIDIA
So
will own
what AMD
inference?
said actually, it's not training. They said that they think they're better in inference, and they've been pointing to the latency.
Do you believe
training,
that
they
story?
said they're parity, although like if you look at some of the things that they always cherry pick these. Everybody does. I'm not knocking AMD. Like people cherry pick these benchmarks. Like I said, I think that the best thing to do is to look at, like I said earlier, where are the dollars going? Like how many dollars are going where? That tells you what people want to spend money on. Like the vast majority of the dollars are going to NVIDIA. Right. It doesn't mean that you don't need a second source, and again, AMD is capturing some of that, and they have, to their credit, they've got a reasonably credible roadmap with reasonably credible products on it, and they've got some other players in the space where like you don't even have that, and so AMD does have that. But again, the bulk of the dollars right now are going in one direction.
How do you feel, Stacy, about the current multiple of NVIDIA, which is a topic of broad conversation, obviously?
It's cheap. Like it's low 30s. If you believe the consensus numbers, and by the way, those numbers probably go up tonight, presumably, right? Like I said, it's the cheapest of all of them. AMD, if you look at like sort of the general kind of AI semi names that are thrown out there, AMD is the most expensive. Marvell is up there. Like Intel is even right now more expensive than NVIDIA is. Broadcom's a little cheaper. I like Broadcom too. It's got its own story around some of this stuff. But I don't think the multiple is egregious at all. Like everybody talks about NVIDIA as like it's expensive, and they tend to look trailing. You have to look forward, like not backwards. And on a forward basis, the stock is way cheaper than it's been in a long time. Like it's not.
It's an 88 trailing multiple, but it's 25 on the next 4 quarters.
The problem, though, Bryn, is people who look at the multiple, they just have a problem with the fact that the stock has gone up so much. They have a problem with the price. And the way that the price has gone up almost unabated is just startling to some who maybe can get around the multiple but say, oh my gosh, the stock just, there was that period of time where it just seemingly went up almost every day.
I know, but like I've said this so many times, first of all, PE is a horrible metric to use over like 1 year period, because once again, it just tells you nothing really. But I think what people are missing is the E has gone up actually the E has gone up more than the P, because the stock has gotten cheaper over the last year. And so I think that this has all been so just like unique that I really haven't seen a stock in a long time that has had this type of return in 1 year, really 2 years, but the E has actually gone up commensurate with that. Usually you get the P is much more ahead of the E. This has not been that case. And so I think the price is just ignore the price and just look at the overall scenario. And this is like one of those interesting names that is growing just gangbusters and continues at 30 forward PE, which is what Bloomberg shows right now. That is not expensive even remotely for the type of growth and moat that they have currently.
Let's just say, Josh, there's an upset. Doesn't have to be a Palo Alto like upset, but what kind of floor do you think is under this name? Given everything that Stacy said and the way you feel and Bryn feels about the stock, the thought that any upset here in the stock price, dip buyers are going to come right in a hurry.
That's what I think. So, and I'm not saying people should jump into earnings ahead of time based on this, but I would be surprised if they have a great quarter. I would not be surprised if they have a great quarter. There's some sort of knee-jerk lower because some or other algorithm picks up on something that maybe wasn't as good as what they had programmed into their own expectations, and then that were to trigger some sort of narrative that something's wrong, and then by midday tomorrow we're talking about the stock going green after opening at a gap down. Like, I could totally envision that scenario happening, and that actually fits really well with the history of NVIDIA. And I went through this yesterday on the air with you, Judge, but let's all keep in mind, I know that there's a very big move being priced in by the options market right now, but truthfully, the last two reports, one day was -2%, the other day was +3%, which means a lot of the betting activity is taking place in advance of the print, not just on the heels of the print. And so it's not in the stars that we're destined to see this massive rally or sell-off. You might not get that.
How would you, Stacy, view the potential floor into the stock, dip buyers, and how you judge the overall price action in how this may trade post-earnings?
Yeah, I mean, I always joke sometimes, like, you could probably hand me the earnings report right now. I'm not sure I can tell you what the stock would do, like, you know, post-earnings in the aftermarket. It's one of those. And, you know, like I said, it tends to move on, you know, like, how did they sound? Like, how bullish were they? Like, did they give us any incremental color, like, going forward, rather than the numbers themselves? Because the numbers should be fine, right? So if you're talking about like a floor on the stock, it kind of depends. Like if it goes down, it sort of depends on why, right? Because then you start to wonder, like, what is the narrative? Is there something that breaks the narrative, or is there not? Like, if there's nothing that breaks the narrative, I don't think that it probably, you know, it's like I said, if it's 30 times earnings now, like the trough multiple for this stock when things are good is not that much lower than that.
Stacey,
clearly, if the narrative
okay,
breaks,
get ready,
then, yeah,
Bobo.
Problem, but I don't think we're anywhere near something like that at this point.
Stacy, you said, quote, at this point, China is out of the model. Anything from China is outside. Is that an example of
49.55s
where they're re-engaged and they're back in the Chinese market and they have resolved some of the issues? Do you see that as like a meaningful example where people could get shocked and say, oh, wait, look, China's back? Or do you think it's not that big of a deal?
My guess.
I mean, it just depends. So China is out of the numbers right now in the sense that they can't ship anything yet. They have new products that they're developing for the China market. I think it's an open question how many of them they will sell. But the problem is that they were forced due to the sanctions to very much haircut the performance of those products.
Right.
And there are like local products in China that, at least on paper, have better performance because they're not constrained by those same kinds of thresholds. At the same time, you have software compatibility and everything else with the NVIDIA parts that may make it easier. So you get some uptake, but I don't know how much we will get. However, there's nothing in there now. So like whatever they get would be upside. And I'd love it if they could sort of, if someone size for us, you know, how much is China? China used to be 20% give or take of their data center revenues.
Be quick.
Like what is it now? Or like where do they expect that to be like at the end of the year? Like that might be something that they could shape for us potentially.
Two quick things, one from Josh, one from Bryn. The mega cap trade. We talked about the chips, what's riding on it. How should investors in these stocks feel going into this number? Perilous position? Okay.
Well, I think the big thing is that all of the other mega caps have already reported, and the street has largely liked what they heard. I know Microsoft and Alphabet didn't get the warmest reception on the heels of their reports, but they've since gained back most of that loss. Amazon is now a Dow component, hallelujah. So they seem to like almost kind of not be reliant on NVIDIA from a sentiment perspective. However, you do have a lot of overlap in terms of the story that we're telling about all of these companies. The growth is going to come from AI, and they all need to buy and sell from each other. So there is that interrelatedness.
35, baby,
and
go.
I don't think that will be completely ignored if there's a huge reaction in NVIDIA in either direction.
Bryn, last
now, if you're in this trade, take profit.
Quick, please.
Apple looks weak on the chart. Microsoft starting to look weak as well. Meta looks good, but I think you're continuing to see dispersion, and you will continue to see dispersion within these names.
All right, guys, I appreciate it very, very much. Stacy,
very much.
You're going to be busy, and these folks are going to be, I don't know, it's going to be a little nerve-wracking when these numbers hit. And as I said, 40 minutes or so. Stacey Rascon, Bryn Talkington, Josh Brown, of course, thanks so much for being here with me here. Let's send it to Kate Rooney now for a look at the biggest names moving into the close. Kate?
Hey there, Scott. Yeah, let's start with Teladoc out with disappointing quarterly results.
150,
and
baby.
Guidance. The online healthcare company posted a smaller than expected loss, but revenue missed. Its BetterHelp segment, which includes virtual therapy, was flat, and the yearly revenue guidance was disappointing as well. And then a gloomy outlook over at SolarEdge is hitting shares as KeyBank analysts put it. The solar company's results and commentary, quote, call for a longer road to recovery than peers have discussed. Stocks down about 70% over the past year as demand for solar panels gets hit by higher rates. There's also been a shakeup to California's rooftop solar incentives and a drop in European demand. Scott, back over to you.
All right, Kate, appreciate that. Kate Rooney, we're just getting started here. Up next, former Dallas Fed President Robert Kaplan is with us. We'll get his first reaction to today's Fed minutes. Bond auction, too, was pretty sloppy. We'll find out whether he thinks the recent hot inflation reports have shaken up the Fed's rate cut calculus. We're live from the New York Stock Exchange. You're watching Closing Bell on CNBC.
$170, the 190. I tell you what, thank you very much, Lord. I just made 100%. Anybody take his trade? If you did not, spank. Spank with a big belt. Jim, it took off without me. It wasn't right. Oh, damn it. What a tubus freebie. Boom! We just nailed it. What did Jim say? 265. We just hit the 63 EMA. I love this new strategy I'm using. Bam, baby.
Download the app.
All right, welcome back. We're red across the board today, headed for their third straight decline for stocks. Yields are higher and took another leg up after a pretty sloppy bond auction midday. The Fed also releasing the minutes from its latest meeting about an hour ago. Our senior economics reporter, Steve Leisman, joining us now with the juicy details.
Steve Leisman.
Pretty juicy, Steve.
Yeah, juicy and hawkish, if we could mix a couple metaphors. Those minutes show most officials were concerned, Scott, about inflation turning hotter and concerned about cutting rates too quickly, even before the January upside inflation surprise that the government reported a couple weeks later. The minutes emphasized the risk of cutting rates too quickly, showed concerns about inflation progress potentially stalling, said there was upside inflation risk and stronger demand and loosening financial conditions, and in geopolitical risks that could undo the progress from the supply chain.
You can trade with me.
Normalizing. Only a handful of committee members staked out what you could even call dovish positions that showed greater concern for an economic downturn, but none appeared to argue for near-term rate cuts. The chance of that May rate cut now trading at the lowest probability of the year, just 32%, with more confident bets now on rate cuts centered on June and July. Officials said it would be appropriate, this was the one dovish part of this whole thing, to begin discussion of slowing and ending the balance sheet reduction at the next meeting. That's the one coming up in March. But a few said, you know what, this balance sheet runoff may continue for some time, even after the Fed begins cutting interest rates. If the Fed was this hawkish before the poor January inflation data, there seems little doubt that their positions have hardened since. They all note, many of them note considerable inflation progress, but it doesn't look like it's motivated them, Scott, to take any policy action in response to that progress.
Yeah, because they feel like they have some insurance policy in their back pocket called a strong economy. Steve, I appreciate that very much. That's Steve Leisman, our senior economics reporter. For more reaction, let's bring in Robert Kaplan. He's the former Dallas Federal Reserve president. Robert, it's good to have you on our program. Thank you for being here.
Good to see you, Scott.
Steve perfectly summed it up. So some were concerned that inflation progress could stall. Do you share those concerns?
Yes.
Yes, I do. I think,
yes, I do.
If I were sitting at the Fed, I'd want to see more evidence that this inflation improvement is going to continue. And the reason that I'd be very cautious is substantial amount of fiscal spending.
Oh, shit.
Inflation Reduction Act spending, Infrastructure Act, unspent ARPA money. I think while monetary policy is very restrictive, fiscal policy is very stimulative, and so I would be on guard about that if I were at the Fed.
How much more evidence is warranted before they actually make that first move to cut rates? They've already suggested that they're going to cut before inflation gets down to target anyway. What's the magic evidence or the magic number that allows Jay Powell to do that?
You guys are depressing.
Continued disinflation on goods.
If you've seen me trade here for a couple years, and I always use the calendar. As it said, we were at extreme greed a couple weeks ago. And I've been saying it for a couple of months. Now you got everybody being bearish. And I got to play that devil's advocate again. Now, I think just the opposite of these guys. They're asking all the questions. They should all know all the answers already. Now, oh, look at this. This is going to make me want to puke. May I say it out loud? I got out at 265. They're at 480. Make that 490. Did you hear that magnificent? I'll repeat it. I got out at 265. I got in at $1. They're now at 650. 670. 710. Oh my God. 700%. Jimmy said exit idea was 4960.96. Give me another grade on that one, please. Damn, look at that. God. I can't stand you, Jim Howard. Ugh. I just want to cry. Okay. I just want to cry. Ugh. Can I explain something? Can anybody take $6 and times it? Take $5.35 and times it by 10. Yes. Very depressing. 1, 2, 3, called off 3 black crows. Did anybody see them? We got a hammer. 3 black crows with a hammer hanging out at the Windjammer with the hammer. Oh, darn, man. Magnificent. Go ahead and grade me now. 4960.96. Who's that masked man? 26 minutes to go. God. Johnny, will you grab me a Valium? Oh my gosh. 1170? Are you kidding me? That's $10,000. Okay. That's quite insulting. Oh, damn it. Well, it goes with that old saying, if you can count to 3, you can trade with me. But if you can count to 4, you might get much more. Panic attack. Panic attack. $14.20. I think that's an insult of my integrity, and I won't allow it. $14.50. Are you gotta be kidding me? I just saw $14.70. Yeah, that's $14,000. I knew this day was going to come. Okay, 1550. Rub it in. Oh my gosh. $15.90. Oh, fuck. I try my best. Why do you punish me so much? I got a bet going on here. We're pulling back 4960.96666666. Don't even try it. Jimmy. All you got to do is just be a little more patient. No. If I'd have had 40, that would have been almost $50-some thousand out of 4. Oh my. It was amazing. They're going to come in tomorrow and say, well, we told you so, we told you so. They're going to say, well, we told you wrong because everybody was bearish. And I said, no, be careful. This was their baby. 650's resistance. Remember that number. That old resistance level.
Our community about keeping it real. I, for one, want magic. You see, magic is what Black history is all about. It's about celebrating people who achieved magical feats. Our ancestors did not focus on their reality. Instead, they dared to dream and then acted on those dreams. During this Black History Month, our community, particularly our young people, should commit to making magic.
We have less than 11 minutes. Make that 10.
Morgan Stanley.
All right, coming up, another critical day of earnings after the bell. NVIDIA results hitting the tape in just about 30 minutes or less. We'll bring you the final setup ahead of that print when we take you inside the market zone next.
Oh my gosh. Oh no. Don't look. 2330. Oh God. 23. Oh my. 20. I have to. 2330. Okay. Oh my God. Oh, it sucks. That really sucks. Oh God. 24.90, 25.10. Okay. I got you.
All right, we're in the closing bell market zone. Christina Partsinevelos on the earnings report everybody's waiting for. NVIDIA out in overtime. Phil LeBeau on EV maker Rivian also reporting in the next hour. Plus Bob Pisani sitting next to me to break down
The SPX is telling you that
as we do head into the close, Christina,
NVIDIA is going to have a bounce. We got Rivian tonight too.
NVIDIA. Yeah, all eyes on NVIDIA and the actual high earnings bar that NVIDIA has set. What we do know from this earnings report, and hopefully we can keep going with the elements in the prompter in here, but what we do know is that shares have dropped about 2% today and has also fallen just yesterday too after some profit taking.
Stupid.
So these are two blowout quarters.
I really, 26 what? You got to be kidding me. 26.60? 27 something. Oh God. I just hate this. I really do. I've caught so many big winners this year, and there's another one. And then I don't get in them. I'm in them, but I don't follow through. $27.10. Time for Putsville. $28. Someone in this room probably held on to them. What? Are you still in them? You can't be. You'll be banned from the room. I won't tolerate it. Randy's blocked. Mike, give him a permanent suspension. Oh gosh. Okay, panic attack. Did I just see something here? Jim, what did you just see? Unbelievable. Oh, that ain't SPX. Delete. Oh, it's time. The bell's done. Jeez. We'll catch you all later, YouTube. That was a pretty nice little call right there. Bad thing about it, I got out at 265. They ran to 27.50. You know, just I mean, that's $2,500. That's, I mean, 25,000 left on the table. 10 times 2,500. On a frickin' $1,000 trade. So we'll catch you later. Whooping up some supper right now. Sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now.